So this is regarding the other laws revision marathon, much awaited marathon. This marathon is going to be for 8 hours. By the way, don't skip this introduction, very important introduction. So certain instructions I'm going to give you so that you get the best outcome, like you can get the best out of this particular revision class. And so we are covering CA Inter Paper 2B, Other Laws, and LLP Act. Both together occupies 40 marks weightage. And now we are giving you approximately 7.5 to 8 hours of content as a revision. And technically, what are we covering? Fema, General Clauses Act, Interpretation of Statute, and LLP. You know very well, these two were newly added. And you see, there is a timestamp which we have given below. Please watch in the same order. Don't directly go to GCA first. So first watch Fema, then LLP, then General Clauses, then Interpretation of Statute. And by the way, this revision is being handled by our Sreshta faculty, Subramaniam sir. Subramaniam sir, definitely believe me, it's a Sreshta's promise. Believe me, you are going to learn the subject in a complete altogether in a different dimension. We all Sreshta faculties work completely content oriented. So you will find pure top-notch content. That's my assurance to you. Okay, so Subramaniam sir will take, who is a CA and CMA, an all India rank holder in CMA at all levels. Okay, and in CA Inter also he's an all India rank holder. Okay, fine. So, but anyhow, irrespective of all that, it's not the rank which is important, it's the content ultimately which is important, which I feel my colleague Subramaniam will justify you for sure. Okay, so while late, just continue watching. And the material which Subramaniam sir has used, in this marathon, you can come to Sreshta for CA CMA website. So just Google it, Sreshta for CA and CMA, you'll find a website. So inside that PDF resources, inside that CA Inter. Okay, if you just click on CA Inter, you'll get group 1. Just click on that notes and just click on this paper 2, and you will find here Other Laws revision class. So here you just click download. That's it. The class will be downloaded. The material will be downloaded to you. PDF is free. You can take a print. If you want to order hard copy, here you can order in books, in the books option. So here you can order. So CA Inter books, here you can order Other Laws book or Company Law book or both, whatever you want. So Company Law Marathon also will be uploading in the same YouTube channel, CA Ram Harsha. Okay, take care. Have a nice time. All the best. Continue watching.
Let's begin our marathon with the chapter Fema. Fema stands for the Foreign Exchange Management Act. This chapter is not there in old syllabus and it was introduced in new syllabus. And the expected weightage of this chapter is 12 marks. In exams, you can expect 12 marks from this chapter. Difficulty point of view, simple chapter. As you all know, in other laws, we are having 3 chapters. Fema, General Clauses Act, Interpretation of Statutes. Out of 3 chapters, Fema is simple chapter. So don't ignore this chapter. Everyone prepare this chapter. So come on, tell me, Fema stands for Foreign Exchange Management Act. This act received approval in the year 1999. So Fema 1999 means this act was enacted in the year 1999. This act was approved in the year 1999. But it was implemented in the year 2000. So date of commencement of Fema is, this act is 1st June 2000. Even though it received approval in the year 1999, it was implemented in the early 2000. So what is the date of commencement of Foreign Exchange Management Act, ma? 1st June 2000. Next one, extent. So this act is applicable to whole of India. All the foreign monetary transactions happening in India, yes, the provisions of Foreign Exchange Management Act shall apply. This is a rule book that governs how India deals with foreign money, and it ensures all foreign monetary transactions in India happen smoothly and legally. First of all, let me tell you about the transactions, ma. Here transaction means a trade transaction, investment transaction. Trade transaction, investment transaction. And this transaction is categorized into 2 categories. One is domestic transaction. The other one is international transaction. If transaction happen between 2 individuals within one country, within India, then the transaction is domestic transaction. If transaction happen between residents of two countries, that means transaction between two countries, two or more countries, then that transaction is treated as international transaction or cross-border transaction. Cross-border transaction. In case of cross-border transaction, our Indian currency is not sufficient. In case of domestic transaction, rupee is sufficient to settle the transaction. Suppose I am buying goods from you. So paying rupees is sufficient. Now coming to the cross-border transactions, India is importing some materials from Russia, and India is exporting some materials to USA, Canada, Africa. So why, sir? Sima, not every country is rich in all resources. India is rich in agricultural products. India is not that much rich in crude oil products, So India is importing oil from Russia. With respect to these imports, India is required to pay money, and that money, rupees is not sufficient. Why? Rupee is legal tender money in India itself. So here we need foreign exchange. We need foreign exchange to settle imports. Now with respect to exports, we receive foreign exchange. Now Foreign Exchange Management Act is an act to manage these foreign exchange reserves. That's it. So what is the main objective of our act? Foreign Exchange Management Act is managing the foreign exchange reserves. Is it clear? Majority of our foreign exchange, we spent on defense items. And next, pharma medicines, pharmaceutical drugs. So majority we spend money on these two items. Next one, if you look at the preamble of FEMA 1999, this is the law to consolidate and amend laws relating to foreign exchange. See, FEMA 1999 is not a first act to manage foreign exchange reserves. Previously, we had 3 laws. For the first time, Britishers introduced rules related to foreign exchange in Defense of India Rules. 1939. Later, they brought new act with the name Foreign Exchange Regulation Act 1947. And the same act got repealed. In that place, we got new act, Foreign Exchange Regulation Act 1973. Now, in the place of all these 3 laws, we got one new law. That new law is Foreign Exchange Management Act 1999. So Foreign Exchange Management Act 1999 preamble is to consolidate and amend laws relating to foreign exchange. Previously, we had 3 laws related to foreign exchange. Now we are having only 1 law. Sir, what is the difference between our new law and previous laws? The previous law's main objective is conserving foreign exchange. Conserve foreign exchange, protect foreign exchange. Even to purchase the pharma medicines, we need to comply lengthy norms. We need to follow lengthy norms. Hectic procedure is there even to purchase pharma medicines. Pharma medicines are necessaries, right? Even to purchase medicines, for that, withdrawal of foreign exchange is strictly, restricted. Now coming to the FEMA 1999, it is a progressive approach. So here, it facilitates external trade. It facilitates external payments. Due to liberalization and globalization effect, the previous laws got outdated. And in that place, we got new law, that is FEMA 1999. And there is a thin, there is one line which differentiates new law and old law. Under old law, all foreign exchange transactions are prohibited unless permitted. So what is the general rule? All foreign exchange transactions are prohibited unless permitted. Whereas under new law, all foreign exchange transactions are permitted unless prohibited. Understood? Next one, objective. So what is the objective of Foreign Exchange Management Act, sir? So 2 main objectives. important main objectives. First objective is to facilitate external trade and payments. External trade and payments. If government allows us to withdraw foreign currency, if government allows us to pay money in foreign currency, then only we can purchase goods from outside India. So we can process them and we can sell the same goods to outside India to some other countries. Understood? So Fema facilitates external trade and external payments. And Fema is having one more objective, that is, development and maintenance of foreign exchange markets in India. Foreign exchange markets in India. As you all know, today power of nation depends upon foreign reserves. The more foreign reserves you are having, the more powerful you are. Less foreign reserves you are having, less powerful you are. Understood? Everyone. So development and maintenance of foreign exchange markets in India is another objective of Foreign Exchange Management Act. So this is the objective. Next one, extend. As I told you, this act is applicable to whole of India. So all the foreign monetary transactions that are happening in India, the provisions of Fema shall apply. Next one, branch office agencies. Branch office agencies located outside India, however, owned or controlled by Indian residents. Owned or controlled by Indian residents. So now these people entering into foreign monetary transactions, yes, they need to comply the provisions of Foreign Exchange Management Act. First of all, resident as well as non-resident carrying foreign exchange transaction in India, they must comply Fema. Next one, person, branch office agency located outside India, however owned or controlled by Indian residents. Now those branches, offices, agencies, if they are entering into foreign exchange transactions, yes, those entities are required to comply Fema 1999 provisions. Is it clear? And one more point, date of commencement. Come on, tell me, what is the commencement date of this act? Date of commencement, 1st June 2000. 1st June 2000. See, one concept, one question completed, ma. I'll show you. So introduction, the change in economic scenario, globalization of capital, free trade across the globe necessitated the need for managing foreign exchange in the country in an orderly manner and to facilitate cross-border trade and cross-border capital flows. That's what I told you, transaction. Transaction refers to trade, capital flows. So to facilitate cross-border trade and cross-border capital flows, exchange control law was required. And what is the law? Foreign Exchange Management Act. Foreign exchange control led to introduction of exchange control law through Defense of India rules by Britishers in 1939. So first time exchange control law was introduced through Defense of India rules 1939. Subsequently, Act was enacted in the year 1947. And what is the name of the Act? Foreign Exchange Regulation Act. Later, it was replaced with a Foreign Exchange Regulation Act 1973. Now, these three are previous laws. Government, as a part of its agenda of liberalization of the Indian economy in 1991, permitted free movement of foreign exchange in connection to trade related to receipts in case of exports, payments in case of imports, as well as foreign investments in various sectors. This increased the flow of foreign exchange to India and consequently foreign exchange reserves increased substantially. Foreign Exchange Management Act 1999 was enacted and made effective from 1st June 2000. This act enables management of foreign exchange reserves for the country. Next one, salient features of Fema Act 1999. So the main features of this act is regulation of transactions between residents and non-residents. Then only we call the transaction as cross-border transaction. Investments in India by non-residents, foreign investments. Overseas investments by Indian residents, Indians making investment outside India. Freely permissible transactions on current account subject to reasonable restrictions. So what is this current account? What is this capital account? I'll discuss with you under section 5 and section 6. Requirement for realization of export proceeds and repatriation to India. Repatriation means getting back to the origin, returning to the origin. So with respect to exports, sale proceeds, export proceeds, yes, getting back to the India, receiving foreign amounts, foreign currency amounts in India. Next, dealing in foreign exchange through authorized persons. Sir, who is authorized person? I'll discuss with you under definitions. Just wait. Next one, adjudication and compounding of offenses, simply violations. Investigation of offenses by Directorate of Enforcement. Appeal provisions, including special director appeals and appellate tribunal. So this is, judicial mechanism. Appeal provisions, judicial mechanism. Next one, executive mechanism, you can see here. So RBI exercises overall control over foreign exchange transactions. Enforcement of FEMA has been entrusted to a separate Directorate of Enforcement formed for this purpose. For any act, you will find three mechanisms: legislative, executive, judicial. With respect to FEMA, legislative means Parliament and President. Executive, you can see here, Directorate of Enforcement. So RBI is apex authority. Why? Money is involved. So RBI role will also get involved. So RBI is the supreme authority. But who is applying provisions related to FEMA? Who is applying provisions related to FEMA? The answer is Directorate of Enforcement. Are you getting my point? So Directorate of Enforcement is responsible for applying provisions of FEMA. So these people come under executive mechanism. Now coming to the judicial mechanism, you can see appeals, appellate tribunals, special director appeals. Next one, Supreme Court, High Courts. Clear? So come on, tell me, who can enforce FEMA? Who is enforcing FEMA? Who is having power to apply provisions of FEMA? The answer is Directorate of Enforcement. Directorate of Enforcement is entrusted with the enforcement of FEMA. Next, preamble. This act aims to consolidate and amend the law relating to foreign exchange. Previously, we had Defense of India Rules 1939, FERA 1947, FERA 1973. So all these rules, all these laws get consolidated and all these laws get amended with the objective of facilitating external trade and payments and development and maintenance of foreign exchange markets in India. Extent and application. FEMA 1999 extends to whole of India. In addition, it shall also apply to all branches, offices, agencies outside India which are owned or controlled by a person resident in India, and also to any contravention, any violation of the provisions thereunder committed outside India by a person to whom this act applies. Primarily, this act is applicable to all residents. Resident making a violation, making contravention outside India, to that contravention also our FEMA provisions shall apply. Commencement. The Act 1999 came into force with effect from 1st June 2000. With this one part completed. Next, definitions. First definition, authorized person. Sir, who comes under authorized person, or who is an authorized person? Just look at the definition. Authorized person means authorized dealer. Example, bankers. State Bank of India, Punjab National Bank, Axis Bank, HDFC Bank. Next one, money changer. Suppose you are planning to visit Malaysia, foreign trip. You need foreign currency. Now you can convert your domestic currency into foreign currency with the support of money changer. Money changer will take domestic currency and he will give foreign currency. Next, offshore banking unit. Offshore banking unit. Suppose London based bank having branch in India. London bank having branch in India. The branch located in India, we call it as offshore banking unit. You can receive foreign currency with the help of offshore banking unit also. Or if you want to convert foreign currency into Indian currency, then you can convert them with the help of these authorized persons, that is authorized dealer, money changer, next offshore banking unit, or any person for the time being authorized under section 10 subsection 1 to deal in foreign exchange or foreign securities. So person permitted or authorized to deal in foreign exchange or foreign securities under section 10 subsection 1, that person is also treated as authorized person. So come on, tell me, who comes under authorized person, ma? Who will be called authorized person? Every authorized dealer, every money changer, every offshore banking unit, and every person for the time being authorized under section 10 subsection 1 to deal in foreign exchange or to deal in foreign securities. No, my doubt. what is the foreign exchange? What is the foreign security? Let's discuss these two definitions. Let's discuss these two definitions. First, foreign currency. Foreign currency means currency other than Indian currency. Very simple definition. What is meant by foreign currency? Foreign currency means any currency other than Indian currency. Canadian dollars, Australian dollars, euros, pounds, US dollars, everything is treated as foreign currency. Currency other than rupees is foreign currency. Next, foreign exchange. Foreign exchange. I'll give you notes with respect to important definitions and important points, summary notes. So I'll give these notes at the time of marathon only. Just look at the definition. Foreign exchange. Foreign exchange means foreign currency. Foreign exchange means foreign currency. See, all foreign exchange transactions, you have to comply provisions of Fema. First of all, what is a foreign exchange transaction? So, foreign exchange refers to foreign currency. First, foreign exchange means foreign currency. And foreign exchange includes deposits, credits, balance payable in foreign currency. It is also a foreign exchange transaction. Okay, next part. Demand draft, traveler's check, letter of credit, bill of exchange drawn in Indian currency and payable in foreign currency. It is also a foreign exchange transaction. Next one, demand draft, traveler check, letter of credit, bill of exchange drawn outside India. Where it was drawn? Drawn outside India and payable in India. Then also it is a foreign exchange transaction. So payable in Indian currency. So, foreign currency, Indian currency, I'll denote it in symbols. Indian currency, wherever I use word Indian currency, I'll give rupee symbol. Foreign currency, I'll give dollar symbol. Okay. Just look at the definition one more time. Foreign exchange means foreign currency. And foreign exchange includes all the deposits, credits, balance payable in foreign currency. Suppose, I opened account in World Bank or London based bank outside India. Now I'm depositing some money in that bank account. I want to make fixed deposit in that account with that bank. Now whatever deposit I'm making in foreign currency, it is a foreign exchange transaction. I rendered some services to a foreigner. I provided some consultancy services to a US citizen, US resident, and he agreed to pay me $1,000. Now that credit of $1,000 is foreign exchange transaction. Balance payable. Suppose I bought a watch or I bought a Apple mobile, iPhone in USA, and the cost of that mobile is 1000 USD, or payable, which is payable in foreign currency, and the payment in foreign currency, we call it as foreign exchange transaction. And it also includes demand draft, traveler check, letter of credit, bill of exchange. All these are instruments used in trade related instruments. All these are trade related instruments. So trade instruments drawn in Indian currency, payable in foreign currency, drawn outside India, payable in Indian currency. All these transactions, all these instruments considered as foreign exchange transactions. Suppose, drawn in rupees, payable in rupees, then it is a domestic transaction. It is not a foreign exchange transaction. Drawn in foreign currency, payable in foreign currency, then it is a foreign exchange transaction. Drawn in India, payable in India, then also it is a domestic transaction. Drawn outside India, payable in Indian currency, foreign exchange transaction. Everyone understood the definition, ma? So come tell me what comes under foreign exchange transactions. First one, foreign exchange means foreign currency. Next, deposits, credits, balance payable in foreign currency. Demand drafts, letter of credit, traveler check, bill of exchange, drawn in Indian currency, payable in foreign currency, drawn outside India and payable in Indian currency. Look at the definition. Means foreign currency and includes deposits, credits, balance payable in any foreign currency, drafts, traveler's check, letter of credit, bills of exchange, expressed or drawn in Indian currency but payable in foreign currency. Next, same instruments drawn outside India, drawn by the banks outside India, drawn by the banks, institutions or persons outside India but payable in Indian currency. Indian currency. Then also it is a foreign exchange transaction only. Next one, foreign security. Important definition. Foreign security. You all know the definition of security, right? In Companies Act, we had a detailed discussion about security. So shares, stock, bonds, debentures, derivatives, everything comes under the definition of security, right? So here, foreign security means securities denominated in foreign currency. Security denominated in foreign currency includes, foreign security includes security denominated in foreign currency, but redemption or returns like interest, dividends, redemption or returns payable in Indian currency, still it is a foreign security. So what is a foreign security? Securities denominated in foreign currency or foreign securities. Securities denominated in foreign currency but redemption, buyback, redemption. Next one, returns in the form of interest or dividends. Yes, even if that redemption or returns is in rupees, still we call it as foreign security. Suppose if you take Infosys company, Infisher, face value is 5 rupees. Face value is 5 rupees denominated in rupees and dividend is 1 rupee. Now this is not a foreign security, this is a Indian security. Next one, Microsoft. Suppose $10 and the dividend is $1. Now this is a foreign security. Visa company Visa. Face value $100 denominated in dollars. Dividend is 700 rupees. Now this is still a foreign security only. Why? Foreign security includes securities denominated in foreign currency but redemption or returns is in Indian currency, still it is a foreign security. Just look at the definition. Foreign security means security in the form of shares, stock, bonds, debentures or any other instrument denominated or expressed in foreign currency and includes a securities expressed in foreign currency, but where redemption or any form of return such as interest or dividends is payable in Indian currency. So first of all, it should be denominated in foreign currency. Whether redemption is in Indian currency or not, it is irrelevant. If that security is denominated or expressed in foreign currency, then that security becomes foreign security. So with this, foreign exchange, foreign currency, foreign security definitions completed. Next important definition is person. So person is classified into two categories. Person is categorized into two categories. One is individual and the other one is other than individual. And who comes under other than individual, sir? Yes, partnership firms, company, every artificial juridical persons, body corporates and branches, offices, agencies located in India, controlled by a person resident outside India. branches, offices, agencies located in India, controlled, owned or controlled by a person resident outside India. Just look at the definition. Person includes individual, HUF, company, firm, association of persons, body of individuals, whether incorporated or not. Every artificial juridical person not falling within the above within the any of the preceding subclauses, and agency, office, branch owned or controlled by such person. Agency, office, branch controlled by aforementioned persons, we call them as persons. Up to 6 points, the definition is common even in income tax law also. But the seventh point is a new point. This kind of point is not there in income tax law. So this is the difference between a FEMA and income tax law. So what is the new point in the FEMA? Branch, office, agency owned or controlled by such person, by the aforementioned person. Yes, that branch, office, agency is also treated as person. Next, very important definition. Very important definition. You can't expect a question paper without this definition, ma. So yes, you won't get definition directly, but you will get a question based on this definition. So what is the definition? Person resident in India. So here, persons are categorized into two categories: person resident in India, person resident outside India. So person resident in India is known as resident, ma. Is nothing but resident. Person resident outside India means non-resident. Sir, on what basis we categorize a person as a resident or non-resident, sir? On what basis? So initially I told you person is of two types: individual, other than individual. Same classification is required for categorizing resident and non-resident, ma. The person, first category, individual. See, this individual is treated as a person resident in India. Simply, I call him as resident. So this individual will be treated as resident. What is the general rule? What is the general rule in order to call an individual as person resident in India? The general rule is, in preceding financial year. Which financial year? Preceding financial year. If his period of stay is more than, what is POS? Period of stay. Period of stay is more than 182 days. Then we call that individual as person resident in India. In the preceding financial year, if his period of stay is more than 182 days. I highlight this point, more than, it's not at least. Income Tax Act is different, FEMA Act is different with respect to residential status. Under FEMA residential status, period of stay should be more than 182 days. Then that person is treated as person resident in India. However, this general rule is having exceptions, ma. That means this person resident in India excludes a few persons. Excludes. What is the meaning of exclusion? See, even though that person's period of stay in the preceding financial year is more than 182 days, but still he is treated as non-resident in the following cases. Non-resident in the following cases. Person leaving India. Person leaving India for taking up employment outside India. Employment outside India. For carrying business or vocation outside India. Business or vocation. It's not vacation. It's a vocation. Vocation is similar to profession. It is also one kind of trade profession only. One trade profession only. Understood? Vocation means profession, not that vacation, relaxation. Okay. Outside India. Next. Intention to stay outside India. Intention to stay outside India is having an intention of uncertain period. Intention of leaving this country for a period which is uncertain. That means he is not having an intention to come back to the India. So any person leaving India for these three purposes, then that person is not considered as person resident in India, even though his period of stay in the preceding financial year is more than 182 days. Understood? Next one, excludes a foreigner. Simply person visiting India. Person visiting India. A foreigner who is visiting India, tourism purposes. So he is also not treated as resident. Now, next, the second category. includes. That means exception to exception. Exception to exception. So listen to me carefully. Person visiting India for taking up employment in India. For taking up employment in India. For carrying a business or vocation in India. For carrying business or vocation in India. Next one. With an intention to stay in India for a period uncertain. Intention to stay in India for uncertain period. Uncertain period. Now this person, even though his period of stay in the preceding financial year is less than 182 days, still this person is treated as a resident. Still this person is treated as a resident. Let me give you few examples. Mr. Arun, for the financial year 2023-24, financial year 2023-24, his period of stay is 365 days. Okay, leap year, right? So 366 days. I'm sorry, I forgot leap year. So financial year 2023-24, his period of stay in India is 366 days. On 1st June 2024, Arun is leaving India. Arun is going to USA in order to take up employment. In order to take up employment. Now in this case, up to 1st June 2024, Mr. Arun is treated as resident. Mr. Arun is treated as resident. But subsequently, he is treated as non-resident. Understood? He is treated as person resident outside India. So when he left India, sir, 1st June, sir, till that date, he is a resident. After that date, he is a non-resident. Now, non-resident entering into foreign monetary transactions outside India, our Fema Act provisions will not apply. Are you all getting my point, students? Everyone. So, any person leaving India for taking up employment, for carrying business or vocation outside India, or with an intention to stay outside India for a period which is uncertain. Now, those people from the date of leaving India, they are considered as non-residents. Till the date they are leaving the country, they may be residents, but after leaving India, they are non-residents. Sir, other than these three purposes, sir, suppose Mr. Arun is visiting USA as a tourist. He is visiting USA as a tourist. Definitely he will come back after 3 months, sir. In that case, Arun is resident. Arun is resident. He is not a non-resident. He is a resident. But any person leaving India because of these three reasons, employment, business, vocation outside India, intention to stay outside India for a period which is uncertain, then that person is treated as a non-resident from the date he left India. Similarly, another example, Mr. Vikas is there, he is a USA citizen. So with respect to financial year 2023-24, his period of stay in India is 0. Period of stay in India is 0. On 1st June 2024, Vikas is coming to India in order to take up employment in India, Infosys company. Now from the date of entry onwards, he is treated as resident. Sir, his period of stay in the preceding financial year is 0, no sir? Yes, I told you the general rule, period of stay in the preceding financial year more than 182 days condition should be satisfied in order to call a person as a resident. However, a person who is visiting India for taking up employment in India, for carrying business or vocation in India, or with an intention to stay in India for a period which is uncertain, then from the date of entry onwards, that person will be regarded as resident, is not a non-resident. Are you all getting my point, students? Everyone. So this is one more difference between residential status under income tax law and Foreign Exchange Management Act. In case of income tax law, residential status is throughout the year. Throughout the year, you may be a resident or non-resident. Coming to the FEMA, here residential status, you need to check each and every day. Understood? See, till 1st June 2024, Arun is a resident because he is non-resident. But on or after 1st June 2024, Arun is a non-resident because he is becoming a resident. So here residential status, you need to check each and every date. So 2 times, he can have 2 types of status in a particular year. For some time period non-resident, for some time period resident. Understood? Suppose imagine Vikas came to India as a tourist. and he is going back to the USA, say for suppose after 3 months. Now because is staying in India for 3 months, for those 3 months also, because is a non-resident. Sir, he's residing in India only, no sir. No, no, no. Why? Previous preceding financial year, his period of stay is 0. And he came to India not for taking up employment, not for carrying business, not with an intention to stay in India for a period which is uncertain. Therefore, he is not a resident, he is non-resident. Understood? Everyone. So with respect to individual, classification is very simple. Other than individual, sir. Other than individual, let me give you a few examples. Company, firm, place of incorporation or registration. LLP Act. Firm is nothing but LLP. Here LLP. So place of incorporation or place of registration. So company incorporated in India, resident. Company incorporated outside India, non-resident. Next one, with respect to branch, office, agency. Branch, office, agency. Located in India, resident. Located in India, resident. Sir, located outside India, sir. Located outside India. Now resident or non-resident, sir? Okay. Check who is the owner of that branch. Check who is controlling the branch. So owned or controlled by person resident in India, sir. Then resident. Sir, by a person resident outside India, sir. Then non-resident. Very simple, very simple. So place of incorporation, registration determines residential status of a company, LLP. Coming to the branches, offices, agencies, where it got located in India, then resident. So located outside India, however owned or controlled by a resident, sir, then it is a resident. Non-resident, sir, then non-resident. One example I'll give you. One example. Microsoft Incorporation, USA company, is having a branch in India. This branch is located in India. Now this Microsoft Incorporation is a non-resident and this branch is a resident. Next one, Microsoft Incorporation is having a subsidiary, S Limited, in Singapore. So 100% of paid up share capital is held by Microsoft Incorporation only. However, decisions with respect to S Limited were taken by branch office which is located in India. Control is with a branch office which is located in India. Now, S Limited is treated as a resident. Sir, why? What I told you, either owned or controlled by a person resident in India, then that branch becomes resident. Yes or no? Of course, this is owned by a non-resident. However, controlled by a resident. Controlling by resident. Yes or no? So key decisions, important decisions are taken by the branch which is located in India. Now this S Limited Singapore is treated as resident. First of all, person definition includes branch. Yes or no? If you look at the definition of person includes branch. Now person controlling a branch or a company or anything outside India. Now that outside India unit is also treated as a resident. Is it clear? So definition completed, ma. Very simple definition. How much? What is the duration? Period of stay? More than. Just wait. More than 182 days during the course of preceding financial year, but does not include following people. Who is leaving country for taking up employment, carrying on business outside India. Any other person, yes, intention to stay outside India for an uncertain period. Next, a person who has come to or stays in India, he is also non-resident. Otherwise than, that means following people are residents. Who the person coming to India in order to take up employment in India, carrying business in India, vocation in India, any other purpose, his intention to stay in India for uncertain period. Now these people are treated as residents from the date of entry. Next, person, body, corporate, registered or incorporated in India. I told you, right? Registered, incorporated in India, residents. Branch, office, agency in India. It is also a resident only. Of course, it may be owned or controlled by resident outside India. Okay. So owned, controlled outside India, no problem. But branch which is located in India, it becomes a resident. Next, branch, office, agency outside India, however, owned or controlled by resident in India, then also it becomes a person resident in India. Then also it becomes person resident in India or resident. Next, person resident outside India means a person who is not resident in India. The person resident outside India means who? He is a person other than person resident in India. Understood, ma? So this particular chart is very, very important. I hope you copied this chart, or else just pause the video and copy it. Understood? Next one. So with this, important definitions completed, except to two definitions. That is capital account transaction, current account transaction. I'll discuss with you. Just wait. I'll discuss with you. Next, residential status already completed, ma. The definition of person is similar to the definition of contained in the Income Tax Act. The term person includes entities such as companies, firms, individuals, HUF, association of persons, artificial juridical persons, agencies, as well as offices and branches. Agencies, offices, branches do not have independent status separate from their owners. Yet, these have been considered as persons. Fema is giving a recognition to these branches, offices, agencies, which are not having a independent status still. Under Fema, such office and branches are included in the definition of person resident in India. Therefore, they have been included in the definition of person. Next, term person resident in India means following entities. Already I revised this point, but look at this chart. Just look at this chart. During the relevant previous year, did he reside in India for more than 182 days? More than 182 days. So just observe it carefully. He means individual. I'm talking about only individual. Other than individuals, it's not period of stay. It's place of incorporation, place of establishment, place of registration. Yes. Did he go out or stay outside India for a current year? Yes. If it is for three purposes, then he is non-resident. No, sir. Not for three purposes, sir. Then he is resident. Did he go out? No, sir. He is in India only, sir. Then resident. Sir, his period of stay in the preceding financial year is less than 182 days, sir. Or less than or equal to 182 days, sir. Okay. Did he visit India in the current year? No, sir. Then he is non-resident. Sir, he visited India, sir. Why? What is the purpose? Sir, the purpose is covered in three purposes, sir. Employment, sir. Business vocation, sir. Or, intention to stay in India with an uncertain period, sir. Acha, then he is a resident. Sir, tourism purpose, sir. Not for employment, sir. Not for business, sir. And he had an intention to leave India. His intention to survive in India is for certain period only, sir. Say for suppose 6 months only, sir. Acha, then he is a non-resident. Understood, ma? So 3 to 4 times I revised this chart so far. So did he reside in India more than 182 days? Yes, resident. Generally resident. Did he go out or stay outside India during the current year? Yes, sir. Acha. If the purpose is falling in three purposes, purpose of leaving country is falling in three purposes. Yes, sir. Non-resident. No, sir. Resident. Now, foreigner. Sir, period of stay in the preceding financial year, 0, sir. Acha. Did he coming to India or did he visited India? No, sir. Non-resident. Sir, he visited India, sir. What is the purpose of visit? Is the purpose falling in the three purposes? Yes, sir. Resident. No, sir. Non-resident. Understood? Very simple, ma. Very simple. And all these limbs, examples I covered. Just give one time reading. Special points. Residential status is not for a year. Residential status is not for a year. It is from a particular date. Date of entry, date of leaving the country. Understood? In case of non-resident coming to India, taking up employment or carrying business or having an intention to stay in India for a period which is not certain, then he is resident from that date of entry onwards, particular date. This is different from income tax law. Under income tax law, a person has to pay tax in respect of income of previous year. Therefore, it is possible to look at a complete year for determining residential status under Income Tax Act. Fema is a regulatory law. One has to know person's status at the time of undertaking a transaction. So, at the time of entering into transaction, is he a resident or non-resident? Resident means person resident in India. Non-resident means person resident outside India. Next, in case of body corporate, place of incorporation. If it is in India, then resident. If it is outside India, then non-resident. Office, branch, agency. So where they got located? India, sir. India, sir. India. Okay. In that case, it is a resident. Sir, outside India, sir. However, either owned or controlled by resident, sir. Then it is a resident. Then it is a resident. Is it clear? So with this important definition, person resident in India completed. I hope 4 marks with you. If you understand this definition, if you are able to recollect this entire definition, I'm telling you 4 marks are there in your hands. Next part, section 3 and section 4. Section 3 and section 4. This is another part, ma. See, section 3 and 4. Section 3 is all about dealing. Section 3. What is section 3? Section 3 is all about dealing in foreign exchange, dealing in foreign securities. Section 4 is all about holding. Section 4 is all about holding foreign exchange, foreign securities. So one is talking about dealings, the other one is talking about holdings. So total 4 points are there under dealing, ma. Transfer of foreign exchange or foreign security, payment, receive, financial transaction involving foreign exchange. All these 4 points are talking about foreign exchange only, ma. So no person is entitled to transfer foreign exchange or foreign securities except he is an authorized person. So this general rule is not applicable to authorized person. Who is authorized person? Authorized dealers, money changers. Next, offshore banking units. Any other person authorized under section 10 subsection 1 in dealing with foreign exchange or foreign securities. Yes or no? So no person is entitled to transfer foreign exchange, foreign security. No person is entitled to make payment in foreign exchange. No person is entitled to receive foreign exchange. No person is entitled to enter into foreign financial transaction involving foreign exchange. Let me give you example. Mr. Mark came to me. He is giving me $100 for 8,000 rupees. He wants 8,000 rupees and he is giving me $100. So simply what is happening? Selling of rupees. Yes or no? He is giving me $100. I am giving him 8,000 rupees. Permitted or not permitted? Not permitted. Payment. Suppose I went to, one foreigner came to me. He is selling me iPhone mobile. One foreigner came to me. He is selling me iPhone mobile. And I need to make payment in dollars, ma. So $100. Can I make payment of $100 to this F directly? So the answer is no. I'm not entitled to make payment in foreign currency. Next one, ma. I rendered some services to foreigner. Consultancy services, ma. So how to save tax, how to file returns. I gave some services to foreigner and he is liable to pay me $100. Now can I receive $100 directly from that foreigner? The answer is no. Next one. Mr. Shivaji the Boss movie, Rajinikanth sir movie. Try to recollect that movie, okay? Shivaji Boss, he came to me. He gave me for example, 20,000 crore rupees. And what I did, I called my friend in USA, Mr. Mark. I called Mr. Mark and I'm telling, material received. So concerned Indian party will come to you and he will show you 1,000 rupee Indian currency note with the serial number so and so, like that. I'm making just an acknowledgement. I'm just making a communication. Material received. Now, Shivaji, when he go to USA, when he meet Mr. Mark, what Mr. Mark will do? He will hand over the consignment of foreign dollars. Foreign dollars. So observe carefully. Here I am receiving rupees. There my friend is paying him dollars. So simply Hawala transaction. This is nothing but Hawala transaction. So, sir, am I entitled to do this kind of transactions? The answer is no, 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 no. So what section 3 is telling? No person is entitled to deal in foreign exchange, foreign securities. Can't transfer, can't make payment, can't receive foreign exchange, can't enter into foreign financial transactions. However, these transactions can be carried out by authorized person. Authorized person can carry these transactions, or the transactions which were provided in Fema Act, or permitted by Reserve Bank of India, central government in few cases. So these transactions, yes, can be carried out. So what is the general rule, ma? Transfer of foreign exchange, transfer of foreign securities, payment of foreign money, receipt of foreign money, entering into financial transactions involving foreign currency, foreign securities is prohibited unless he is an authorized person, unless provided in FEMA, unless permitted by Reserve Bank of India, central government. And this section 4 is applicable to both person resident in India, person resident outside India. So both residents and non-residents have to follow section 3. Next, section 4, holding of foreign exchange. So this is applicable only to person resident in India, ma. This is applicable only to person resident in India. And according to section 4, no person resident in India shall hold, transfer, possess, acquire, transfer any foreign security, foreign exchange, immovable property located outside India. IMP means what here? IMP means what? Come on, tell me. What is IMP? IMP means immovable property. Immovable property located outside India. Immovable property located outside India. Understood? So that is all about section 4. So except as provided in FEMA Act 1999, no other person who is resident in India is entitled to hold, transfer, possess, acquire, transfer foreign securities, foreign exchange, or any immovable property located outside India. Prohibition, ma. Now look at section 3. No person. Highlight. No person deal in or transfer any, make any payment, receive otherwise than authorized person. Sir, if you are receiving amount from authorized person, if you are receiving amount through authorized person, permitted. Through authorized person, permitted. Making payment through authorized person, permitted. Dealing in foreign exchange through authorized person, permitted. Directly, without corresponding inward remittance. I repeat, without corresponding inward remittance. That means without bank receipt. If you are directly dealing with foreign exchange, if you are directly dealing with foreign security, then it is a punishable offense. It is a contravention. Understood? Everyone, suppose you sold goods to a foreigner and he is making payment through bank account. Now you can see corresponding inward remittance. Now authorized person permits you converting that foreign exchange into Indian rupees, and you can use that Indian rupees. Understood? So without a corresponding inward remittance, you are not permitted to receive foreign currency. If you are receiving foreign currency without corresponding inward remittance, that means you are receiving money from a person other than authorized person. Enter into any financial transaction in India as consideration for or in association with acquisition or creation or transfer of right to acquire any asset outside India. Financial transactions, Hawala transactions, I told you, right? And the above transactions may be carried on if they are provided in the act or with a general or special permissions of Reserve Bank of India. You can carry those transactions with the permission of Reserve Bank of India. Next, examples are there, just give one time reading. Next, holding of foreign exchange. So no person resident in India. So this section is talking about person resident in India, whereas section 3, it is talking about two persons, person resident in India as well as person resident outside India. See, section 3 is applicable to both residents as well as non-residents. Coming to section 4, it is applicable only to a person resident in India. Understood? Everyone? Okay. Next, this section prevents Indian residents to acquire, hold, own, possess, or transfer any foreign exchange, foreign security, or immovable property abroad. Then, through separate notification, the acquisition of these assets has been permitted, subject to certain conditions and compliance rules. As usual, with the general special permissions, you are permitted to deal in foreign exchange, foreign securities. So, with this, 50% of the chapter is completed. Yes. We are left with only two concepts. One is current account transaction and the other one is capital account transaction. One is current account transaction and the other one is capital account transaction. So let me give you notes with respect to these items. 50% chapter completed already. The transactions categorized into two categories. One is capital account transaction and the other one is current account transaction. One is capital account transaction and the other one is current account transaction. Current account transaction definition is very simple. Current account transaction is a transaction other than capital account transaction. Any transaction, if it is not capital account transaction, then the transaction is treated as current account transaction. But then what is a capital account transaction, sir? A transaction which alters resident assets, liabilities, including contingent liabilities outside India, or which alters non-resident. Resident means who? PRI. Non-resident means PRY. Non-resident assets, liabilities in India. That is a capital account transaction. So what is a capital account transaction? Come on, repeat with me. What is a capital account transaction? Any transaction, if it alters residents, assets, liabilities, including contingent liabilities outside India, or alters non-resident, person resident outside India's assets or liabilities in India, then the transaction is categorized as capital account transaction. Is it clear, everyone? Come on, tell me. So capital account transaction means a transaction which alters residents assets, residents liabilities, residents contingent liabilities outside India, or a transaction which alters non-residents assets, non-residents liabilities in India. It is a capital account transaction. Suppose I'm there, yes or no? One day I went to USA and I like one building. So the value of this building is okay, it's right. The value of the building I visited is USD 10 lakhs, 1 million USD. I'm just having 3 million, I'm having 3 lakh USD. So what I did, I went to a bank, American bank. And I borrowed 7 lakh USD. With the 3 lakh USD and borrowed money 7 lakh USD, I bought this building. Now this transaction, acquiring building in USA, is it a capital account transaction or current account transaction? The answer is capital account transaction. See, transaction altering a resident. Mr. V is a resident. Resident assets outside India. Resident liability outside India, including residents contingent liability outside India. It is a capital account transaction. Because of this transaction, my net worth outside India is getting affected. Yes or no? So my asset is increasing, right? My liability is also increasing. Okay, now this is a capital account transaction. Every year I am repaying some 1 lakh USD ma. Now that repayment of loans is also a capital account transaction. Understood? Now vice versa. Suppose American Mr. Ford visited India. He acquired one land and building, 1 crore rupees. For that, he borrowed 60 lakhs rupees loan from SBI. Now, is this transaction a capital account transaction? Yes. Non-residents assets or liabilities getting altered in India. It is a capital account transaction. What is it? It is a capital account transaction. Everyone understood? And one more example, one small example. This time, I went to UK. I selected one plant and machinery. Suppose I selected one car, Rolls Royce car. The value of this car is, for example, 1 lakh USD. So I paid 1 lakh USD and I brought this, I bought this car and I brought this car to India also. So now where is the car? In India, and for which I made a payment of 1 lakh USD. Now tell me, is this transaction a capital account transaction or current account transaction? So capital account transaction or current account transaction? I'll repeat the question one more time. I went to UK, I selected one Rolls Royce car worth 1 lakh USD. I paid that amount, I bought the car. After payment, I brought the car to India. Now I am having car in India. So the question is this transaction a capital account transaction or current account transaction? And the answer is current account transaction. Sir, why? Sima, don't look at capital expenditure or revenue expenditure points. You just look at the definition. Capital account transaction is a transaction which alters residents' assets, resident liability outside India. Non-resident assets, non-resident liabilities in India. Now, when you are bringing a car to India, there is no creation of foreign asset. There is no creation of asset in foreign. There is no creation of liability in foreign. So no creation of foreign asset, no creation of foreign liability. Then how come it will be a capital account transaction? So it is not a capital account transaction. Any transaction which is not capital account transaction is treated as current account transaction. Understood? Understood. So capital account transaction, there should be impact on foreign asset, foreign liability, foreign contingent liability with respect to resident. With respect to non-resident, only asset liability in India. You may get a doubt, sir, why contingent liability is there in resident? Why not under non-resident? Sima, definitely for a transaction, there will be two parties. No transaction required two parties, yes or no? For me, if it is an asset, for you, it is a liability, yes or no? I sold goods to you, so I'm having a receivable from you. So you are my asset, I'm your liability, yes or no? So I'm having asset, you are having a liability. Correct? Correct? Contingent liability point of view also, there is a contingent asset concept is there. Contingent asset concept is there. The liability to me, asset to you. Contingent liability to me, contingent asset to you. See, I'm resident, you are non-resident. Okay. Now, ulta. You are having contingent liability. That means I am having contingent asset. Your liability is my asset. Yes or no? You are having contingent liability. Hey, foreigner, you are having contingent liability to me. That means I am having contingent asset. But what our system is telling, prudence, what our prudence concept is telling, anticipate all future losses, but don't anticipate future gains. Anticipate future losses, but don't anticipate future profits. Yes or no? So my contingent liability, I will recognize. Your contingent liability, that means my contingent asset, I won't recognize. My system won't permit me to recognize contingent assets. Getting my point, students? Getting my points? India point of view, contingent liability recognition is there. But your contingent liability, which is contingent asset to the India, that recognition is not there. The reason is prudence. Prudence. Non-resident contingent liability in India means to India, it is a contingent asset. Contingent asset is not having recognition. So that's the reason contingent liability with respect to non-resident is not there. With respect to resident is there. with respect to resident is there. Are you all getting my point, students? So capital account transaction is a transaction which alters resident's assets, resident liabilities, resident contingent liabilities located outside India, non-resident assets, non-resident liabilities in India. Next, current account transaction. Now look at the current account transaction definition. The term current account transaction is defined negatively by section 2 subsection clause J of the act. It means a transaction other than a capital account transaction and includes following types of transactions. Specifically 4 transactions were mentioned under current account transaction. Specifically mentioned. Even though they looks like capital account, it is not a capital account, it's a current account only. Payment in course of ordinary course of foreign trade payments, trade receipts, current account transactions. Interest on loans, income from investments. So these loans, investments comes under capital account transactions, whereas interest incomes comes under current account transactions. Next one, living expenses. Next, expenses in connection with foreign travel, education. So these 4 items are specifically treated as current account transactions. That's it. So no need to apply common sense, no need to apply seventh sense. Just to follow what is there in the definition. So these 4 transactions straight away treated as what transaction? Current account transactions. Even short-term borrowings. Just look at the point. Short-term borrowing facilities. Short-term borrowing facilities. Example, I'll tell you. Example. Just look at this example. I went to a UK citizen. I purchased some goods and I brought these goods to India. The goods were successfully delivered to India. And with respect to these goods, I'm liable to him, for example, 1 lakh USD. Everything is in dollars only, I'm telling you. Okay. So he offered me 3 months credit. He offered me 3 months credit. So these 3 months, this is a foreign liability. Yes or no? This is a foreign liability to an Indian resident. Now, any transaction which alters resident liability outside India, it is a capital account transaction. Yes or no? But this liability is for short term only. This liability is for short term, that is 3 months only. So therefore, this is not a capital account transaction. This is a current account transaction. Specifically mentioned in the definition. That's why you follow this point. If this point is not there, in that case, I would have told you that it is a capital account transaction. I would have told you that it is a capital account transaction, but specifically it was mentioned under current account transaction. Therefore, short-term borrowing facilities, even though foreign liability was created, even though residence foreign liability was created, it is treated as current account transaction only. Is it clear, everyone? So some examples, which I told you already, credit period of 3 months. Just now I told you. Purchase of plant and machinery. Instead of plant and machinery, I told you car, Rolls-Royce car. So these examples just now I discussed with you. After completion of marathon of this topic, just to give one-time reading to this chapter. That's it. You will remember this chapter, till examination. That's my assurance. That's my assurance. Getting my point? Next one. So gift, gift. Gift is somewhat tricky concept, Yes, it is a tricky concept. Sir, why? Just listen to me. Gift. A resident giving a gift to non-resident in dollars. Resident giving a gift to non-resident in dollars. Now this is a current account transaction. Why, sir? There is no creation of foreign asset, there is no creation of foreign liability. So current account transaction. A resident giving a rupees as a gift. Resident giving a rupees as a gift to non-resident. Now this comes under capital account transaction. Why? Non-resident asset in India was created. Non-resident's Indian asset was created. Understood? Transaction alters non-resident assets in India, liability in India. Then it is a capital account transaction. Yes or no? Yes or no? So depending on the nature of transaction and place of transaction, depending on currency and place of transaction, sometimes it's a current account transaction, sometimes it's a capital account transaction. Special points, just give one time reading. So almost at the end of this chapter, current account to capital account transactions, if it is completed, chapter will be completed. Yeah. So section 5 is a current account transaction. Section 6 is capital account transaction. Section 5 is all about current account transactions. Section 6 is all about capital account transaction. Now I'll discuss with you section 5, current account transactions. Current account transactions. Visible? Yeah. The central government is having power to impose restrictions on current account transactions. Who is having power to impose restrictions on current account transactions? Central government. But central government can do only after consulting Reserve Bank of India and considering a public interest. Public interest. The central government, in consultation with Reserve Bank of India and considering public interest, can impose reasonable restrictions on current account transactions. So RBI is not supremacy. RBI is not having any supremacy with respect to current account transactions. Only central government is having a supremacy with respect to current account transactions. Is it clear? So central government, after consulting RBI and considering public interest, may impose reasonable restrictions on these current account transactions. And these current account transactions are categorized into 3 categories. How many? 3 categories. Very easy, very easy. Schedule 1, Schedule 2, Schedule 3. Schedule 1, Schedule 2, Schedule 3. So Schedule 1 contains prohibited transactions. It contains a list of prohibited transactions. Schedule 2 contains transactions that requires prior approval of central government. Transaction that requires prior approval of central government. Schedule 3, transactions requiring approval of Reserve Bank of India. RBI permitted transactions. RBI permitted transactions. Transaction which is not covered in these 3 schedules are freely permissible. Freely permissible. Understood? Okay, let's see. Schedule 1, prohibited transactions. I'm telling you one small point here. Prohibited transactions means the transactions for which withdrawal of foreign exchange is strictly prohibited. Prohibited transactions are the transactions for which withdrawal of foreign exchange is strictly prohibited. I'm not calling prohibited transactions as illegal transactions. They may be a legal transaction, but for carrying these transactions, withdrawal of foreign exchange is strictly prohibited. Sir, what are those transactions, sir? First one, winning remittances. Winning remittances. Outside India. Winning from horse races, lottery, betting, gambling. Next one, remittances for purchase of lottery tickets or magazines, football sweepstakes, etc. So one is winning remittances outside India, the other one is purchase of lottery tickets outside India. So the point itself is telling payments to non-resident with respect to winning remittances prohibited in foreign currency. Non-resident came to India, purchased one lottery ticket, he won the lottery. Now he can withdraw the amount. He can withdraw Indian rupees. He can use that Indian rupees as he wish. But in order to take back that amount to his country, in foreign currency, further withdrawal of foreign currency is prohibited. Next one, remittances for purchase of lottery tickets. Resident making payments for purchase of lottery tickets outside India. For this, withdrawal of foreign currency is strictly prohibited. Understood? Next one, export commission. Commission on exports. Commission on exports. Sir, if we make exports, we will get foreign currency. No, sir. So exports should be encouraged, and the persons who are promoting exports and the agents who are giving us a way for making exports, definitely they should be remunerated. No, sir. They should be paid. No, sir. So why you are telling that commission on export is prohibited? I'm not telling all the commissions on all exports is prohibited. Just wait. Exports you are making under rupee credit scheme, rupee credit route scheme. Exports you are making in order to make investments in joint venture or subsidiary outside India, outside India, and other exports. So exports, commission on exports in other cases permitted. Commission on exports, yes, whatever sale proceeds you are getting, you are not bringing to India and you are making that investment outside India in one joint venture company or in subsidiary company. On those exports, commission is prohibited. Commission on exports which were done under rupee credit route is also prohibited. However, it is having one exception. Exception means, in this case, you can make payment of commission. You can make payment of commission in foreign currency. Exception, in case of tea and tobacco, up to 10% of invoice value, you can make a payment of commission in foreign currency. Tricky point. Listen to me. Under rupee credit route, whatever you are exporting, you will get rupees only in return. Understood? So India is not getting any foreign exchange. India is getting its rupees only. Now on these exports where India is getting rupees, if I permit you to make payment of commission in foreign currency, our foreign exchange reserves will fall. Suppose, in other cases, if you observe in other cases, I'm getting foreign exchange, my foreign exchange reserves are going up. So if you ask me, sir, I need to pay commission on exports for which I need a foreign currency. Oh, okay, take foreign currency, make payment on exports. Okay, I can promote you. I can permit you. The point, under rupee credit route, India is getting rupees. There is no impact on foreign reserves, foreign exchange reserves. Now again coming to me asking, sir, I need some foreign currency to make payment of commission on exports. So do you think India government will permit you? No, prohibition. With respect to tea and tobacco, this rule is not applicable. Why? India produces tea and tobacco very in bulk quantities. We are having extra quantities. So export of tea and tobacco is compulsory. Even if you export tea and tobacco under rupee credit route, even though India is not getting foreign reserves, no problem. I will permit you to withdraw foreign currency for making payment of commission on this export of tea and tobacco. But there is a limit. The limit is up to 10% only. 10% of invoice value. Invoice value 1 crore. 10% means 10 lakhs. Equivalent to USD means 10 lakhs equivalent USD. Let me calculate. 10 lakhs equivalent divided by 80. So 12,500 USD you can withdraw and you can pay commission. In excess of it, prohibition. Understood. Next one, investments in JV. Suppose, I want to start one subsidiary company outside India. I went to RBI and I told I need 1 million USD to start subsidiary. RBI told no, I won't give you. That's why what I did, I told RBI, see, I want to sell my goods, please permit me to export. What RBI thought, oh, exports, our foreign reserves will go up. Okay, come on, go and make exports. I exported some goods worth 1 million USD. What I did, I'm not taking that money into India. I'm using that money to start subsidiary outside India. Where I'm using that funds? Outside India. So India is receiving nothing. India is getting nothing with respect to that foreign exchange transaction. With respect to that foreign exchange transaction of exports, right? So here India foreign exchange reserves, there is no impact. Why? Whatever exports you are doing, sale proceeds of those exports, you are not taking into India, you are using it outside India in the form of JV, investments in JV, joint venture, investments in subsidiary company. Now, commission on such exports is strictly prohibited. Commission on such exports is strictly prohibited. Understood, ma? Next one outdated point is there, ma? Outdated point. Payment related to callback services. Right now, this concept is not there. Previously, some 20 years, 25 years back, when FEMA got enacted, we are not having this kind of internet facilities. Now, if you want to call your friend in USA, you can open your WhatsApp, you can dial the number, you can call him directly without a single rupee charge. Without a single rupee charge. But previously, that much internet advanced technology, internet facilities are not there. So we need to call them directly, for which we need to pay 100 rupees per minute, 200 rupees per minute, like that there. So to avoid that huge cost, call back services intermediary is there. So this intermediary will provide callback services. Right now, this concept is not at all there, outdated one. But point is there under prohibited transactions. I am telling you, payments related to callback services, withdrawal of foreign exchange is strictly prohibited. Next one, interest income on non-resident special rupee scheme account. Let me repeat the word. Interest income on amounts left with non-resident special rupee scheme. Non-resident special rupee scheme. So with respect to this interest incomes, withdrawal of foreign currency is prohibited. What is this point? See, one day Mr. Varun, a foreigner, came to India. He had 1 million USD, but he can't bring that money into the India. He can't spend that money. Why? It is not a legal tender money in India. So at the time of entry, what the government of India did, it asked Varun to open this account, non-resident special rupee scheme, and he deposited everything in that account. So equivalent rupees, for example, it is 8 crore rupees, 1 million USD, right? So 80 rupees, imagine $1 equal to 80 rupees. So 8 crore rupees balance is there in that account. After 1 year, what happened, that 8 crores became 8 crores, 8 lakhs. Sir, what is that 8 lakhs? Interest income. 8 lakhs is the interest income. Now, after 1 year, he decided to go to USA. Now, he can withdraw that 8 crore rupees in USD. He cannot withdraw 8 lakh rupees in USD. That means interest income accrued, received on non-resident special rupee scheme account. So those interest incomes, you can't withdraw in foreign currency. You can use that amount in India in national currency. You can spend that amount in India, but you can't withdraw that amount to your countries in foreign currency. Understood? So withdrawal of foreign currency in order to make payment of interest income on the balance left in non-resident special rupee scheme is also prohibited. So one more point, dividends by company to which dividend balancing is applicable. Dividend balancing is applicable. Sima, Kia company is there. It came to India and it opened a branch. For example, it opened a branch. And this branch produced 50,000 goods. Out of 50,000 goods, 20,000 goods sold in India. 30,000 units sold in USA. 30,000 units sold in USA. On this 30,000 units, yes, this branch received a profit of 60 lakhs. On this 20,000 units in India, this branch received a profit of 40 lakhs. So this is the profit, this is the profit after deduction of all expenses and taxes. All expenses and taxes. Now, if you observe carefully, this branch is having two earnings. One is earnings in domestic market and the earnings in foreign market. So if this branch decides to pay, or if this unit decides to pay dividend to the parent company, okay, so this is a subsidiary company. Imagine this is a subsidiary company. 100% of capital was held by foreign company. Now this foreign company agreed to take all the profits in the form of dividends. Now the point is, dividends with respect to the 60 lakh profit is permitted. With respect to 40 lakhs profit, not permitted, prohibited. Why? Are 60 lakh profit you received in foreign currency. 60 lakh rupees, okay. converting your foreign currency into Indian currency, it is 60 lakhs. You can withdraw money with respect to 60 lakhs dividend. Why? You got that amount through foreign sales, through exports. So that is permitted. With respect to domestic market sales, with respect to profit in domestic market, you are not at all permitted. You are not at all permitted. Prohibited. So that's what dividend balancing means. That's what, company having a branch office in India and it is making domestic sales as well as foreign sales. Now the profits with respect to foreign sales, yes, those profits can be repatriated to parent company, returned to parent company. But profits with respect to domestic sales, you can use that money, but for making payment to parent company, withdrawal of foreign exchange is strictly prohibited. Schedule 1 is very important. That's what I told. I'm investing a lot of time here. So remittance out of lottery winnings, remittance of income from racing, riding, etc., remittance for purchase of lottery tickets, banned, prescribed magazines, football polls, sweepstakes, all these are prohibited. Once again, I'm telling you, these are not illegal transactions. To carry these transactions, withdrawal of foreign exchange is strictly prohibited. Commission on exports made towards equity investment in joint ventures, wholly owned subsidiaries. Next, remittances of dividends by any company to which dividend balancing is applicable. Commission on exports under rupee credit route, rupee state credit route, except commission up to 10% of invoice value of exports of tea and tobacco. Next, payment related to callback services, remittance of interest income on funds held in non-resident special rupee scheme account. So funds held in rupee scheme account can be withdrawn, but interest income can't be withdrawn in foreign currency. Schedule 1 completed. Next, Schedule 2. These transactions can be carried out, but prior approval of Government of India is required. Sir, why these many regulations, sir? See, simple logic, simple logic. You are earning money. If you are not saving that money, suppose suddenly new pandemic comes into the picture. In 2020, what happened? COVID pandemic came, yes or no? So imagine new pandemic comes into the picture. So without savings, how can you survive? How can your family be survived for for 2 to 3 months? Only through savings you can survive, or your family can be survived even in contingent event, even in contingent cases also. Yes or no? So Government of India, Reserve Bank of India are also doing the same. Without these restrictions, definitely one day our foreign exchange balance may become zero. In that case, we feel difficult to invest money in new defense weapons or acquiring a new pharma drugs. It becomes difficult, yes or no? So that's why, considering public interest, central government of India time to time imposes reasonable restrictions on the current account transactions. Now come to the Schedule 2 transactions. Cultural tours. In case of cultural tours, whatever amount you want to withdraw in foreign currency, first you need to take approval from Ministry of Human Resource Development, that is Department of Education and Trade. Next, key point. See, advertisement in foreign print media for the purposes other than promotion of tourism, foreign investments, international bidding by a state government and its public sector undertakings. It is really difficult to understand this point. Yes, really difficult. First, observe me carefully. Advertisement is possible in two medias. One is print media, the other one is audio video media, broadcast media. So no restriction with respect to advertisement in audio video, no restriction. Just wait, I'll write here. No restriction. Now with respect to print media, who is making this advertisement? Person. Who is making this advertisement? Sir, state government, sir. Sir, public sector undertaking, sir. Okay. Sir, other persons, sir. Others. In other cases, no restriction. No restriction. Next, state government, public sector undertaking. What is the purpose of making advertisement? I think place is not sufficient here. What is the purpose of advertisement? The purpose is, promotion of tourism, foreign investments, international bidding, sir. In that case, no restriction. Other cases, okay. In other cases, what is the amount involved? What is the amount involved? Sir, amount involved is up to 10,000 USD, sir. No restriction. Sir, amount involved is more than 10,000 USD, sir. A restriction is there. Permission of central government is required. Permission of central government is required. So let me give you the same chart in the OneNote, ma. Advertisement, print media, others, other than print media. I'm writing here no restriction, NR, no restriction. Print media. Who is making that advertisement? Person. The state government or public sector undertakings. Others. In case of others, no restriction. No restriction. State government, public sector undertaking. What is the purpose of advertisement? What is the purpose of advertisement? So purpose is promotion of tourism, sir, or foreign investments or international bidding, sir. Then no restriction, sir. Purpose others, sir, others. In that case, observe amount involved, sir. Amount is less than 10,000 USD. No restriction, ma. No restriction. Exceeding 10,000 USD, so permission, restriction is there, permission is required. Without permission you can't do this activity. Understood? Other than, they're using the word C, other than, and by a state government and its public sector undertakings exceeding US dollars 10,000, permission is required. So this is the only case, permission is required. Remaining cases, permissions not required. Next one, remittances of a freight of vessel. Let me erase these points. I thought place is sufficient, but okay, fine. Okay, next one, remittances. Expenditure is freight. Who is making the remittance? Public sector undertaking, PSUs. Then Ministry of Surface Transport, permission is required. Next one, payment of import through ocean transport. Imports, ocean transport. Who is making a payment? Government department or a public sector undertaking. In that case, Ministry of Surface Transport, permission is required. Multimodal transport operators. You are importing goods. Initially goods were sent through flight to Mumbai. Their unloading happened, and through ship goods reached Chennai. Their unloading happened, and through train and through roadways you received goods. So that is what multimodal transport. And agents who are providing services, yes, they are entitled to the commissions. For making such payments, yes, registration certificate from Director General of Shipping is required. Next, remittance of hiring charges of transponders by TV channels, internet service providers. Suppose India versus Australia match is going on in India. Star Sports is telecasting that match. No issue. Suppose same match is happening in Sydney. Australia media is recording that match, and we want to view that match. We want to see that match. We want to see the scores. We want to see the batting, bowling, everything we want to see. Now, Star Sports is entering into an agreement with Australian media. It is paying hiring charges of transponders. In that case, Star Sports, Indian company. Imagine just in the Indian company. I'm telling you based on assumptions. Assumed that. So forget about whether it is a foreign company or Indian company. Now, Indian person resident in India paying amount in order to get satellite rights, hiring charges of transponder satellite rights by TV channels, Star Sports, internet service providers. In that case, Ministry of Information and Broadcasting, Ministry of Communication and Information Technology, permission is required. So you need to remember that ministries. You need to remember, no other alternative. Okay. Next, remittance of container detention charges. So you are sending goods via ocean transport, and your container got detained because of some reasons. For that, you need to pay rental charges, detention charges. If it is within the prescribed rate, no permission is required. If it exceeds the prescribed rate, then Ministry of Surface Transport permission is compulsory. Next one, prize money, sponsorship. So this is one more tricky point, Sima. Remittances of prize money. So wherever I feel complicated or tricky, I'm giving notes to you. Remittance. Remittance of prize money. Who is making remittances? Person. Sir, ICC, sir, International Sports Body. BCCI, National Sports Body. Tamil Nadu Cricket Association, state level sports body. Permission not required. Permission not required. Other persons. Then look at the amount. Look at the amount. If amount is up to 1 lakh USD, permission is not required. Exceeding 1 lakh USD, permission is required. Exceeding 1 lakh USD. Exceeding 1 lakh USD, permission is required. Now look at the point. Remittances of prize money, sponsorship of sports activity abroad by a person other than international, national, state level sports bodies if the amount involved exceeds 1 lakh USD. 1 lakh USD, then Ministry of Human Resource Development permission is required. Next one, remittances for membership of P&I club. P&I club means protection and indemnity. Generally, when you are sending goods through ocean transport, when you are using ocean transport for sending goods, there is a risk of losing goods. Suppose if that ship, instead of traveling on the water, if it went into the water, so goods will be lost, yes or no? So to minimize that risk, you had an option to opt for marine insurance. So insurance company will compensate you. But some cases, some areas, some countries, this insurance benefit is not there. In those areas, in those countries, all the traders will form as a club, will form as an association, and will contribute some money to that club contribution. Suppose out of the 10 traders, one trader lost ship and one trader incurred a loss of 1 lakh USD. Now that club will pay entire amount to that person. Next time, all 10 people again contribute towards the club membership fees. We call it as membership fees. So contribution amount in order to save them from contingencies. Understood? So areas where marine insurance benefit is not there, generally traders will form this P&I club and they will contribute money in US dollars. So for this withdrawal of foreign currency, you have to take permission from Ministry of Finance Insurance Division. Understood? So all these are permitted transactions, whereas you need to take prior approvals. Advertisement point and then prize money sponsorship point is somewhat tricky points. Chances of getting into the examination is high. That's why I gave you flowchart. Next is schedule 3. Very simple schedule 3. Very simple. Schedule 3. Transactions are classified into two categories. Transactions by individuals other than individuals. Other than individuals. With respect to individuals, some list was provided. I'll write few points. Studies abroad, immigration, medical treatment, gift donation, private visits. So some list has been provided. For carrying these transactions up to 2.5 lakh USD. I repeat, up to 2.5 lakh USD. Permissions are not required. Amounts exceeding 2.5 lakh USD. RBI prior approval is required. However, with respect to immigration, studies abroad, medical treatment. If you had a proper evidence, suppose I want to shift my family from India to USA. As per USA immigration, yes, 5 lakh USD is required for making immigration. Now showing that immigration letter, I can withdraw 5 lakh USD even without RBI permission. Even without RBI permission, I can withdraw 5 lakh USD showing that evidence. Next, studies abroad. University gave me $50,000 fees letter. Now it is within the limit of 2.5 lakh. Permission is not required. You can withdraw 50,000 USD for making payment to the university. Suppose if that university is asking me to pay 3 lakh USD. How much? 3 lakh USD. In that case, show the letter and you can withdraw 3 lakh USD. In case of medical treatment, hospital bills. If hospital bill is in excess of exceeding 2.5 lakh USD, show that bill and you can withdraw even without RBI permission. Even without RBI permission, you can withdraw. So these 3 points are exceptions with respect to RBI permissions. What is the general rule? Up to 2.5 lakh. Up to 2.5 lakh, individual can avail foreign exchange facilities. Up to 2.5 lakh. Next, additional remittance in excess of the said limit, the said purposes shall require prior approval of RBI. However, for the purpose mentioned in 478, what are those 478 points? Immigration, medical treatment, and study abroad. The individual may avail exchange facility for an amount in excess of limit prescribed under liberalized remittance scheme as provided in regulation 4.2 Fema. So provided you need to show sufficient proofs. Clear? Next one, further that if a person who is a resident but not permanently resident in India is a citizen of foreign state other than Pakistan, benefit is not given to the Pakistan citizens, other country citizens, or citizen of India who on deputation, on temporary basis, he came to India. In that case, he can remit his entire net salary. Suppose he is receiving a salary of 5 lakh USD per annum. 5 lakh USD after all deductions, after deduction of TDS, PF, etc. Whatever deductions are applicable, after deducting all amounts, whatever net salary he is having, he can send his entire net salary to his parents or family members without any restriction. Actually, the general rule is 2.5 lakh USD. This limit is not per transaction. This limit is for all the transactions during a financial year. Per individual, per financial year, for all transactions. Understood? Immigration, study abroad, medical treatment, and a person who came to India on deputation basis, and a person other than Pakistan, belonging to a country other than Pakistan. Now these people, if they want to withdraw more amount in excess of 2.5 lakh USD, they can withdraw based on sufficient proofs. Understood? Everyone. Next one, other than individuals. In case of other than individuals, entrepreneurs simply, they want to make donation. So for donation, up to one limit, RBI permission is not required. So RBI permission not required. I'm writing here so carefully. RBI permission not required when 1% of 3 preceding financial years foreign exchange earnings or 5 million USD, whichever is lower. So donation up to this limit, RBI permission is not required. Last 3 preceding financial year, my foreign exchange earnings is, for example, 1 crore USD. 1% of 1 crore USD means 1 million. 1 lakh. 1 lakh or 5 millions means how many lakhs? 50 lakhs. 1 lakh or 50 lakhs, whichever is lower means 1 lakh. So I can make donation of USD 1 lakh without RBI permission. In excess of that limit, RBI permission is compulsory. That is the first point, donations. Next one, commission per transaction. Commission on sale of residential flats in India. Suppose I'm a builder, I constructed one building in India. So total it had 5 flats, each flat worth 1 lakh, 1 crore rupee. Now I told to foreign agents, in case any NRI willing to purchase my building, come, chalo, allow him to come to India, sorry, meet me to that person, whatever amount he pay me, I'll pay you commission. I'll pay you commission in foreign currency. So there is a limit on that payment. What is that limit, sir? What is that limit? Just follow carefully. 25,000 USD or 5% of inward remittance, whichever is higher. In above case, whichever is lower. In this case, whichever is higher. Suppose inward remittance is 1 crore, 1 crore USD. 1 crore into 5% means 5 lakh USD. 5 lakh USD or 25,000 USD, whichever is higher means 5 lakh USD. So up to 5 lakh USD, RBI permission not required. Other cases, that means in excess of the limit, RBI prior approval is required. Next, remittances exceeding USD 10 million per project for any consultancy services in respect of infra projects. So in case of infrastructure projects, if you are getting any consultancy services from abroad, then you can make remittances up to 10 million USD without RBI approval. Exceeding $10 million, RBI approval is required. Other services, with respect to infrastructure, 10 million USD. In other cases, 1 million USD is the limit. 1 million USD is the limit. Suppose software company, tech companies. So we are receiving services from outside India. In that case, you are permitted to remit up to 1 million USD per project. In case of infrastructure projects, per project, 10 million USD is the limit. See, I'm not telling you that you can't make payment in excess of the limits. You can make payment. However, RBI prior approval is required. If it is within the limits, RBI approval is not required. Just file an application. Just communicate with RBI and make payments. Understood. Next, fourth one, reimbursement of pre-incorporation expenses. Foreign company came to India and started company in India and they made investment in India. Now remittances up to 5%. Remittances up to 5% or 1 lakh USD, whichever is higher. Remittances up to 5% of investment or 1 lakh USD, whichever is higher. Up to this limit, without RBI approval, you can withdraw foreign exchange. Exceeding this limit, RBI special approval, RBI prior approval is required. Sima, other than individuals, 4 items are there: donations, commission on sale of residential flats or plots, and then consultancy services with respect to infra projects, consultancy services with respect to other than infra projects, and last one, reimbursement of pre-incorporation expenses. First case, the limit is 1% of foreign exchange earnings last 3 years or 5 million USD, whichever is less. Second case, $25,000 or 5% of inward remittance, whichever is high. Third case, consultancy services per infrastructure project 10 million USD, other than infrastructure project per project 1 million USD. And last one, reimbursement of pre-incorporation expenses, 5% of investment brought into the India or 1 lakh USD, whichever is higher. Within the limits, RBI approval is not required. Exceeding the limits, RBI prior approval is required. Now here we had 2 accounts, RFC, EEFC. I'm teaching classes in India and my classes, imagine my classes are getting sold in outside India too. In Dubai also, yes, students will write ICA exams, yes or no. Imagine, in Dubai also, my students or my clients paying me money. They're giving me some income. All those foreign amounts were deposited in my RFC account, which was opened in Dubai. RFC means, resident foreign currency account. So all these global incomes were credited to this resident foreign currency account. Now whatever amount left in the resident foreign currency account, I can use with respect to schedule 2 and schedule 3 without any restrictions. Suppose I want to make a cultural tour. Generally, Government of India, central government permission is required, yes or no? Now, whatever amount is there in the RFC account, with respect to that amount, I can spend that amount even without CG approval. I want to visit US, a private visit, or I want to gift that amount to someone, or I want to donate that amount to someone. In that case, even without RBI approval, even suppose if it is more than 2.5 lakh USD, but still without RBI approval, you can spend that money. Understood? That money belongs to you and it is already there in foreign amounts only, foreign currency only. And that amount is in resident foreign currency account opened outside India. If you observe carefully, Schedule 1 is prohibited here also. Schedule 1 is prohibited here also. So with respect to Schedule 1 transactions, you can't use RFC account. RFC account is not allowed for carrying Schedule 1 activities. Next one, EEFC account. EEFC account, exchange earners foreign currency account. With respect to other than individuals, just now I told you, entrepreneurs, donations, consultancy services, commissions, next reimbursement of pre-incorporation expenses, I told you, right? So these entrepreneurs may have EEFC accounts, exchange earners foreign currency account. Whatever amount left in EEFC account, you can use for Schedule 2 and Schedule 3 activities, even without approval of CG, even without approval of Reserve Bank of India. Of course, for 3 items, approvals required. What are those 3 items? P&I club. P&I club. You need to take permission from Ministry of Finance Insurance Division. Next one, sale of residential flats commission. Permission is required. Next one, reimbursement of pre-incorporation expenses. So these three transactions, even if you want to use EEFC account, prior approvals are required in case of exceeding the limits. In case of exceeding the limits, that's what they are telling you. Just observe carefully. Exceeding. Exceeding. Within the limits, no need to take approval, even you are maintaining EEFC account or even if you are not maintaining EEFC account. Getting my point, students? Only in case of exceeding the limits, you are required to take prior approval. If it is within the limits, no approval is required. Whether you are drawing money from RBI or whether you are drawing money from EEFC account. Understood, everyone? Everyone. Next one, international credit card. When you are leaving a country, when you are going to another country, you'll be given international credit card with some limit. Now, up to that limit, you can use that card. Up to that limit, you can use that card. Liberalized remittance scheme, to reduce administrative burden of Reserve Bank of India. Every time when you want to withdraw foreign exchange, every time filing application with RBI, getting confirmation from RBI, it becomes administrative burden to the RBI. Monitoring each and every application, giving approval, definitely it's a administrative burden to RBI. That's why what RBI did, it introduced the liberalized remittance scheme. Up to 2.5 lakh USD, you can withdraw. You just communicate with me. I'm using money for these purposes. Communication is sufficient. Permission is not required. Exceeding 2.5 lakh USD, you have to take my permission. You have to file application to me. I'll give you approval. Then only you can withdraw amounts exceeding 2.5 lakh USD. That is just to reduce administrative burden on RBI. This scheme came into the picture. Exception point, this is somewhat tricky point. Just observe carefully. Clubbing is not permitted by other family members for capital account transactions. See, I'm having one sister. So me, my sister, siblings. So both can withdraw 5 lakh USD. Both, I can draw 2.5 lakh. She can draw 2.5 lakh. Clubbing, we can draw 5 lakh USD. Understood. So for current account transactions, clubbing is permitted. Whereas for capital account transactions, clubbing is not permitted. However, suppose me and my sister decided to purchase one property and that property will be registered on both of our names. That means, who is the owner to that property? Me and my sister. So me and my sister both are co-owners to that property, sir. Co-owners to that investment, co-owners to that security. In that case, clubbing is permitted. Clubbing is not permitted if they are not co-owners, if they are not co-partners. That means if they are co-owners, if they are co-partners, clubbing is permitted. Understood? So with this, current account transaction completed and we are left with only one concept, that is capital account transaction. Capital account transaction is very easy transaction, very simple concept, ma. Very simple. Current account transaction, we had 3 schedules, but this is very simple one. Just look at the question number 8. Just 20 minutes back, I discussed with you the definition of capital account transaction. Capital account transaction means a transaction which alters assets, liabilities, including contingent liabilities outside India of a person resident in India, or assets or liabilities in India of a person resident outside India, would be a capital account transaction. Nothing new. Capital account transaction in India can be carried out only to the extent permitted because Indian rupee is not yet fully convertible. So not yet fully convertible means not freely permissible. Not freely permissible. Understood? Next, capital account and current account transactions are mutually exclusive. Yes, a transaction can be either capital account or current account, but it can't be both capital account and current account. Yes or no? Any transaction other than capital account transaction, it becomes current account transaction. So that's why both capital account and current account transactions are mutually exclusive. A transaction which alters the assets or liabilities in India of non-resident falls under the category of capital account. However, as far as the residents are concerned, transactions which alters contingent liabilities outside India are also considered as capital account transaction. Next one, Sima, these capital account transactions further classified into 2 categories. Capital account transactions involving debt instruments, involving debt instruments, involving non-debt instruments. Involving non-debt instruments, CG is having power to regulate these transactions. Debt involved instruments, RBI is having a power to regulate these transactions. So RBI is having a power to regulate capital account transactions, which is involved in debt instruments. Non-debt instruments, central government is having power to regulate capital account transactions. All these points, just give one time reading, not that much important. And important point, ma. See, ma, what section 3, what section 4 is telling, ma? What section 4 is telling? First tell me what section 4 is telling. No person can hold, possess, own, acquire, transfer, foreign exchange, foreign security, immovable property located outside India except authorized person or except provided in the Fema Act. Yes or no? But the point is, I'm a non-resident initially. I'm a non-resident. Listen to me carefully. I'm a non-resident. When I'm a non-resident, I acquired Microsoft security. What I acquired? I acquired Microsoft security. Later, I came to India. I became resident. Now, can I continue to hold these foreign securities? Can I transfer these foreign securities? Can I maintain these foreign securities? The answer is yes. A resident may hold, own, transfer, invest in foreign currency, foreign security, immovable property situated outside India if the same was acquired, held, owned by such person when he was non-resident or inherited from a non-resident. So first time non-resident, I acquired Microsoft security. Now after becoming a resident, I can hold that security, I can transfer that security, I can sell that security, I can acquire that security. There is no restriction on me. Why? I got this security when I was non-resident, or I got this security from a non-resident. I inherited that security from a non-resident. Next point. Now I'm a resident. I acquired Infosys share when I was a resident. So I purchased Infosys share. Later, I left India. I became a non-resident. Now, can I continue to hold that Infosys share? Can I transfer Infosys share? Can I own Infosys share? The answer is yes. Why? Because I acquired that share before I became non-resident. So when I was resident, I acquired that share, or I inherited that security from a resident. Understood? So a PROI, a non-resident, may hold, own, transfer or invest in Indian currency, security or any immovable property situated in India if the same was acquired, held, owned by such person when he was a resident or when it was inherited from a resident. So somewhat tricky point, I explained you. Next one, capital account transaction, last concept. Capital account transactions. Here, capital account transactions are classified into 3 categories. Permissible transactions. Permissible transactions. Transactions on which no restriction can be imposed. Transaction on which no restriction can be imposed. And last one, prohibited capital account transactions. Prohibited capital account transactions. Look at this classification. 3 categories. Permissible. With permission you can do this. Next, transactions on which no restrictions can be imposed. That means freely permissible transactions. And last one, prohibited capital account transactions. That means you are not entitled to enter into these transactions. Under permissible transactions, we are having 2 schedules. Schedule 1, Schedule 2. Schedule 1 speaks about resident. Schedule 2 speaks about non-resident. So what capital account transaction can be done by a resident? So what are the permissible capital account transactions from resident point of view? Schedule 1. From non-resident point of view, Schedule 2. So list has been given, ma. A list has been given and you need to remember this list. No other alternative. So list of permissible class of transactions by a person's resident in India. Investments, foreign currency loans, transfer of immovable property outside India, guarantees, contract of guarantee. Guarantee means what? Guarantee means what? Guarantee. Sir, some other party is taking loan and I'm giving a guarantee to the creditor. If this fellow fails to make payment, I'm liable to you. Understood? You give loan to this person. If he fails to pay, I'm liable to you. Guarantees outside India. Imports, exports, holding of currency notes. Next, loans and overdrafts. Maintenance of foreign currency accounts. Insurance policy, loans and overdrafts by resident outside India. Remittances outside India of capital assets of a person resident in India. Resident selling asset outside India. Undertaking derivative contracts. So these are permissible capital account transactions from resident point of view. Non-resident point of view, more or less same points will continue. Above points outside India by resident. Now these points in India by a non-resident. Same points you can observe. Investments, immovable property in India, guarantees, imports, exports, deposits, foreign currency accounts in India, remittances of capital assets in India, remittance outside India, but capital asset is in India. Next one, undertake derivative contracts. Options, futures. Derivative contracts means futures and options with respect to commodities, not securities, commodities. Next one, transaction with no restriction. In order to carry these transactions, no permissions are required. One is amortization of loan. I told you to purchase one property in USA, I took 7 lakh USD from World Bank or American Bank. Now I'm paying that amount in advance, premature repayment. Because of premature repayment, definitely my net worth, resident net worth, Indian resident net worth will go up. So that's why restrictions were not imposed. For this, you can withdraw how much amount you want, you can withdraw. Next one, depreciation of direct investments. See, last night I invested $100 in Microsoft. Time back, this $100 got depreciated to $80. Market was full volatile in nature. Today market opening, the value of share is $80. Yesterday balance is $100. Today balance is $80. That means there is a depreciation of $20. There is a dilution of value $20. Now the same should be communicated with RBI. The same should be communicated with central government. No need of communications. Freely permitted. Now these cases, no need to take approval of RBI, no need to take approval of central government. That is the point. So with respect to these two items, amortization of loans, depreciation of direct investments in the ordinary course of business, no approvals are required. Prohibited capital account transactions, you have to remember this point. See, in this, first paragraph is all about LRS. So what this point, Schedule 3 under current account transaction plus Schedule 1 under capital account transaction put together shall not exceed 2,50,000 USD. That is the meaning of this paragraph. Under liberalized remittance scheme, it is not separate for capital and it is not separate for current. Combined, both combined together, current account transaction schedule 3 list plus schedule 1 capital account transaction put together. If it is within the limit of 2.5 lakh USD, then no approvals of RBI is required. Exceeding the limits, RBI approval is required. This limit is per financial year and per individual. Per financial year, per individual. See, based on this point, we had 2 to 3 practical questions. So important. Next one, prohibited capital account transactions. Various areas where capital account transactions by a non-resident is prohibited. First one, investments in chit fund companies. Investments in chit fund is prohibited. Investment in Nidhi company prohibited. Investment in agricultural or plantation activities prohibited. Investment in real estate business, investment in construction of farmhouses prohibited. Investment in transferable development rights prohibited. Remember these 5 points. Nidhi company prohibited, chit fund business prohibited, agricultural plantation activities prohibited, real estate business prohibited, TDRs, transferable development rights prohibited. 5 areas you have to remember. However, in chit fund, you can pay subscription amount. You can bring foreign currency, you can pay subscription amount subject to state government approvals. But the point is, you can't withdraw your amount. Suppose, chit fund time period is over. Over a period of time, you deposited 1 million USD. Now, after completion of duration, you can't withdraw that amount. Non-repatriation basis means what? You can't take back those funds in US currency or USD or USD. You can use that money in India for other purposes. Understood? See, general rule, investment in the business of chit fund is prohibited. Exception, if state government wants foreign currency inflow, it can do so. But the point is, once the duration is over, once the chit fund duration is over, the person who subscribed to chit fund can't withdraw that money in foreign currency. He can use that amount in India for any purpose, but he is not permitted to withdraw. That is non-repatriation basis. Next one, coming to the real estate business or construction of farmhouses. Yes, because of this point, what happens? Non-residents business entrepreneurs infrastructural assets gets increased. Understood? So in real estate business, in construction of farmhouses, is not permitted. Capital account transaction with respect to non-resident real estate business, construction of farmhouses not permitted. However, they are permitted to construct a residential commercial premises, development of townships, roads or bridges, real estate investment trusts. All these are permitted. Because of this, non-resident is earning income. He is not making any asset. He is just making income. No asset was created. No asset was created for non-resident. He is just earning income. Incomes permitted. Creation of asset by a non-resident in India prohibited. Understood? Foreign security, non-resident can subscribe Infosys share, Indian security. He can subscribe Indian securities, no problem. But he can't purchase land. He can't construct a building on his lands. He can't purchase land. He can't purchase a building. However, he is permitted to construct buildings, not for himself. He is doing that to earn income. As a contractor, he can do these services. So earning income is permitted, but creation of asset for non-resident is prohibited. Next one, transferable development rights prohibited. So what is this transferable development rights? As I told you, this is just a marathon. Detailed discussion is not permitted in marathon. So this lecture, this chapter, I thought almost 11 hours in regular classes. Since this is a marathon, I'm concluding this chapter in 2 hours. So that's why some points, not everything, some points I missed out. If it is not useful or if it is not important from exam point of view, I'm not explaining you. But For the time being, transferable development rights means, it's a right given to you in order to construct a building on the land. See, I'm having a land to construct building on the land. Suppose 4 floors permission was given. I want to construct additional floor. In that case, I need to purchase these rights. I need to purchase these rights and I need to surrender these rights to the government. Then only government allows me to construct additional floor on my building. So these rights I can purchase from my neighbors or I can purchase directly from government. So these are non-refundable. Government will not refund any money with respect to transferable development rights. And one more instance, suppose road widening is happening. Road widening is going on. As a result, your house property, some area was lost because of road widening. Now what government will do? As a compensation, it will give this bond, transferable development rights to you. You can use these rights or you can sell it to the other parties. You can get money, but you can't sell it to non-resident. That is the point. Is it clear? Next, last point. Existing investment transactions with any person who is a citizen or a resident of Democratic People, Republic of Korea, simply, North Korea, or otherwise in Democratic People's Republic of Korea. So with Korean country, you can't make any transactions, which is not permissible. Dated April 21, 2017, as amended from time to time. Government of India, Ministry of External Affairs shall be closed, liquidated, disposed, settled within 180 days. So after issuing the notification, within 180 days, you need to settle all the transactions if you are already entered with residents of Democratic People, Republic of Korea. That is the point, ma. And one last point I forgot to tell you. And a person resident in India, I told you, any person leaving India for taking up employment or carrying a business or with an intention to stay outside India for a period which is not certain. So those people are not treated as residents. Those people are treated as non-residents, right? So there, keep a star mark and write one more point. The point is person, a student leaving India for pursuing higher education. Today you can observe, many students are going to USA to pursue MS, masters or masters science something, or MBA, any course. Now any student leaving India for pursuing a higher education, now that students are also not treated as residents from the date they are actually leaving India. From the date they left India, from that date onwards, they are not considered as residents. It was not there in Act. RBI, through separate circular, clarified that point. So what is the point, ma? Any person for pursuing higher education, leaving India, going abroad, so that person is also treated as non-resident from the date he left India. Clear? So with this, Fema marathon is completed. Our next topic of marathon is the Limited Liability Partnership Act 2008. The expected weightage of LLP Act 2008 in your examination is 10 marks. You can expect 10 marks from this chapter. Difficulty point of view, easy chapter. So don't ignore this chapter. Clear? As you all know, LLP is an alternative corporate business firm. Alternative corporate business firm that combines the benefits of both company and general partnership firm. That combines the benefits of both the company and general partnership firm. As you all know, in general partnership firm, the biggest disadvantage is unlimited liability, joint and several liability. Yes or no? So what is unlimited liability? In case of winding up of the firm, if business assets of a partnership firm is not sufficient to discharge business liabilities, then partners should contribute from their personal assets. The liability is extended to the personal assets of the partners. Yes or no? There is no limit on partners' liability. Suppose partnership firm business assets 70 lakhs. Partnership firm business liabilities 1 crore. Now you can see there is a deficit of 30 lakhs. This 30 lakhs deficit amount, partners should contribute from their personal assets. And what is joint and several liability? Imagine in this partnership firm there are 3 partners A, B, C. Each partner should contribute 10 lakhs. In the absence of contract to the contrary, each partner should contribute 10 lakhs from their personal assets. Suppose C became insolvent. Now A and B should contribute total 30 lakhs. That means A should contribute 15 lakhs, B should contribute 15 lakhs. So each and every partner is liable not only to his share but also the insolvent partner's share. So that is what joint and several liability. So this disadvantage is not there in company. In company, the biggest advantage is limited liability. The liability is limited to the extent of unpaid value multiplied by number of shares held by the member. Suppose I am holding 1000 shares, unpaid value is 2 rupees. 1000 into 2 rupees, 2000. My liability is limited to 2000. My neighbor is holding 10,000 shares. 10,000 into 2 rupees, 20,000. Suppose my neighbor become insolvent. Now, am I liable towards the 20,000? No. My liability is limited to the extent of unpaid value multiplied by number of shares held by me. So, number of shares held by me is just 1,000. 1,000 into 2, 2,000 rupees. My liability is limited to 2,000 rupees. So, this is the advantage in company. In case of company, there is one disadvantage. The disadvantage is rigid management. Rigid management. So what is rigid management? As you all know, in company, ownership is separated from management. Investors had no right to participate in day-to-day affairs of the company. Yes or no? Company appoints management. Company appoints directors who will take care of day-to-day affairs of the company. So investor has no role. Investor has no right to participate in day-to-day affairs of the company. Now, suppose directors decided to change object clause of the company. For that, first they need to call for general meeting. So they should wait for 21 days. So once general meeting was conducted, once a company takes approval from the members, then it has to alter the MOA, and then altered MOA shall be filed with the registrar of companies. Yes or no? And company should wait for the approval of ROC. So this takes a time. This takes lengthy time. Yes or no? So here, management is fixed. Important decisions can't be taken earliest. Yes or no? So company type of organizations, you will observe delay in decision making process. Coming to the general partnership firm, investors, partners will participate in the management. So partners will take a quick decisions. So you will find flexibility in the management structure of a partnership firm. So that is the advantage in partnership. Sima, both the options, company and general partnership firm, both the options had its own advantages and disadvantages. Now, LLP, it combines the advantages of company as well as general partnership firm. So coming to the LLP, here the nature of partners liability is limited. General cases, nature of partners liability is limited. No joint and several liability. No unlimited liability. So here the liability is limited, and you will find flexibility of management in LLP. So that's what I told you. It is an alternate corporate business firm that combines the benefits of both company and general partnership firm. Is it clear, ma? Next one, LLP, it got parliament approval on 12th December 2008. So three dates are very important in this LLP Act, ma. Three dates. Just remember these three dates. Parliament approval. Parliament approval 12th December 2008. President approval. President gave approval to this bill on 7th January 2009. And date of commencement or notification date. Notification date or date of commencement of this LLP Act 2008 is 9th January 2009. So effective date of LLP Act 2008 is 9th January 2009. So everyone remember these three dates, ma. In the entire LLP Act, we are having only three dates. Parliament approval date 12th December, President approval 7th January, notification date 9th January. And this LLP Act is having a total 81 sections. Of course, section 81 was omitted very recently, and 4 schedules. How many schedules? 4 schedules. So out of these 4 schedules, schedule 1 determines the rights and duties of LLP and partners. Schedule 2, conversion of partnership firm into LLP. Schedule 3, conversion of private company into LLP. Schedule 4, conversion of unlisted public company into LLP. So remember these 4 schedules, ma. Okay, see, you can see the introduction. So Parliament passed the Limited Liability Partnership Bill on 12th December 2008. President of India has assented the bill on 7th January 2009, and the notification date is 9th January 2009. So this act, the main objective of this act is formation and regulation of limited liability partnerships. The main objective of LLP Act 2008 is formation and regulation of limited liability partnerships in India. So LLP Act 2008 has 81 sections and 4 schedules. First schedule, it determines mutual rights and duties of partners and limited liability partnership. Second schedule, conversion of firm into LLP. Third schedule, conversion of private company into LLP. Fourth schedule, conversion of unlisted public company into LLP. Important point, Indian Partnership Act 1932 is not applicable to LLP. Particular situation of LLP is not dealt by LLP Act. Particular point was not there in LLP Act. Now, can I apply the provisions of Indian Partnership Act 1932? The answer is no. You can apply Companies Act 2013 provisions, but you can't apply Indian Partnership Act. So, looking at the name, it's a limited liability partnership firm. It is also a partnership, right? So, if LLP Act is silent with respect to any situation, can I apply general partnership provisions? That means, can I apply Indian Partnership Act 1932 provisions? The answer is no. It is specifically mentioned in the LLP Bill 2008. So write a short note on limited liability partnership. I discussed with you, it is an alternative corporate business vehicle that gives the benefits of both limited liability company and flexible management in case of general partnership firm. So coming to the definitions, I'll discuss with you important definitions. Okay. So first one, address. In the entire LLP Act 2008, wherever you find the word address, now this address means, address in relation to a partner of a LLP means, in case of individual partner, address refers to usual residential address. In case of body corporate as a partner, address refers to registered office. Address refers to registered office. So wherever you are reading the word address in connection with partner. Suppose if a partner is individual, then address refers to residential address. If partner is an LLP or if partner is a body corporate, now address of the partner refers to registered office of the body corporate. Suppose LLP is sending notices to the partner, LLP is sending notices to the address of the partner. So here address refers to what? Address means, in case of individual partner, residential address. Address in case of body corporate partner is registered office. That's it. Next one, body corporate definition. So body corporate means what? Just follow me carefully. Body corporate here refers to a company which is incorporated under Companies Act 2013 as well as previous company law. So body corporate means a company as defined in section 2 clause 20 of Companies Act 2013, and body corporate includes LLP incorporated outside India, company incorporated outside India, and body corporate excludes corporation sole, cooperative society, and such other notified entities, prescribed entities or notified entities. SEMA, central government is given a power to prescribe various entities, which will be excluded from the definition of body corporate. So this is a futuristic point. Right now, not yet notified. So first of all, body corporate means it is a company. Body corporate is a company, and it includes LLPs incorporated in India, LLPs incorporated outside India, companies incorporated outside India. However, body corporate excludes two entities. One is corporation sole. Sir, what is a corporation sole? It is a legal entity. or an incorporated office occupied by a sole natural person. A legal entity or incorporated office occupied by a sole natural person. For example, one person company. One person company. It is an incorporated entity occupied by sole natural member. Understood? So corporation sole is excluded from the definition of body corporate. Cooperative societies are excluded from the definition of body corporate. You can look at the definition in the material. Body corporate means a company. What is a company? Company means company incorporated under present company law or previous company laws, and includes LLP registered under this act in India, LLP incorporated outside India, company incorporated outside India, but does not include corporation sole cooperative societies. So third point I told you, notified entities, SEMA. Central government here is given a power. Central government may by notification in official gazette excludes some other entities or few entities from the definition of body corporate. So any other body corporate not being a company which the central government may by notification in the official gazette specify in this behalf. Understood? So includes 3 entities, excludes 3 entities. Includes LLP incorporated under this act, LLP incorporated outside India, LLP next company incorporated outside India. Excludes 3 entities. One is a corporation sole, second one cooperative society, and third one notified entities. Next definition, financial year. Financial year. So what is a financial year? Financial year in relation to LLP means the period from first day of April of the year to 31st day of March of the following year. 1st April to 31st March. However, in case of LLP incorporated after 30th day of the September of a year, the financial year may end on 31st day of March of the year next following that year. So 2 points, very clear points, very clear. Just look at the one note. So financial year. So generally financial year, it's a period of 12 months. The commencement date of financial year is 1st April. Right now, I'll take 2024-25 financial year, 24-25. So 1st April 2024 to 31st March 2025. So it is a period of 12 months. Commencement date 1st April, end date 31st March 2025. However, LLP incorporated after 30th September 2024, then financial year closure date is first financial year closure date will be 31st March of following financial year, that means 2026. General rule 2025. Following financial year means next financial year. So 31st March 2026. So here you can see, suppose LLP was incorporated on 1st October 2024. Incorporation date 1st October 2024. In this case, first financial year closure date shall be 31st March 2026. So you can find first financial year of a period maximum 18 months. 18 months. Other cases. So 1st April 2024 to 31st March 2025 is the financial year period. So LLP incorporated on 30th September 2024. 30th September 2024. The first financial year closure date shall be 31st March 2025. Understood? So 30th September, incorporation date 30th September 2024. End date will be 31st March 2025. The LLP which is incorporated on or after 1st October. That means, LLP incorporated after 30th September. Financial year closure date shall be 31st March of following financial year. Is it clear? Yes, in case of company, financial year definition is different. In case of company, the cutoff date is 1st January. If a company is incorporated on or after 1st January, then the financial year closure date shall be 31st March of following year. Did you remember the definition of financial year in the company? So company, the cutoff date is 1st January, whereas the LLP, the cutoff date is 30th September. I hope everyone understood this definition. Sima, in case LLP incorporated after 30th day of September of a year. After 30th September means what? On or after 1st October. Let me write this point. On or after 1st September, sorry, 1st October. After 30th September means what? On or after 1st October of a year. Then the financial year may end on 31st day of March of 2026. Is it clear? So here you can see two examples. You can give one time reading to these examples. Next one, next definition, foreign LLP. So do you remember the definition of foreign company? Foreign company means a company incorporated outside India having place of business in India. Similar definition in case of LLP. LLP incorporated or registered outside India which establishes a place of business within India. The foreign LLP definition is similar to foreign company definition. Next one, limited liability partnership agreement. Limited liability partnership agreement. Sima, this is nothing but a deed in case of general partnership firm. In case of general partnership firm, we call it as partnership deed. In case of company, we call it as MOA, AOA, Memorandum of Association, Articles of Association. Sima, partnership deed is an agreement between partners. MOA, AOA, these two documents are agreements between company and members of the company. And these agreements, what is the role of these agreements? These agreements determine the rights and duties of parties to the agreement. Yes or no? Now coming to limited liability partnership agreement, it is an agreement between partners and LLP. So this agreement determines the rights and duties of the partners and rights and duties of the LLP. And if anything is absent in this LLP agreement, suppose partners profit sharing ratio was not mentioned. In the LLP agreement, nowhere mentioned about the point profit sharing ratio. In that case, first schedule 1 will apply. According to first schedule, partners profit sharing ratio is equal. 10 partners are there. Each partner is entitled to 10% of profits. Each partner will get a share in the profits. And what is the ratio? So yes, 10. What is the percentage? 10%. Understood, everyone? So first schedule shall be applicable for all matters not covered by the agreement with respect to mutual rights and duties of the partners and their rights and duties in relation to the LLP. Next one, next important definition, small limited liability partnership. Small limited liability partnership. In case of company, we are having small company. Now in case of LLP, we are having a small LLP. Sir, what is a small LLP? First of all, it should be a LLP. It should be a limited liability partnership. Condition 1. Condition 2. Contribution amount shall not exceed 25 lakhs. And condition 3. Turnover in the preceding financial year shall not exceed 40 lakhs. So LLP satisfying these conditions, we call it as small LLP. So contribution means what? It's a capital. In case of company, we call it as paid up share capital. Coming to the LLP, we call it as contribution. So contribution of which does not exceed 25 lakh rupees or such higher amount not exceeding 5 crores as may be prescribed. Sir, what is the meaning of this point? Such higher amount not exceeding 5 crores. See, ma'am, tomorrow if central government wants to increase the limit, they can increase this limit from 25 lakhs to 5 crores. Beyond 5 crores, they had no power. So from time to time, central government is having a power to increase contribution limits. So for the time being, 25 lakhs is the limit. Tomorrow, if central government wants to increase it, it can increase up to 5 crores. Similarly, you can see turnover shall not exceed 40 lakhs. Turnover does not exceed 40 lakhs or such higher amount as may be prescribed but not exceeding 50 crores. For the time being, the limit is 40 lakhs. Tomorrow, if central government decides to increase the limit of 40 lakhs, it can increase. However, it can increase up to 50 crores. So for the time being, what are the limits? Contribution does not exceed 25 lakhs. Turnover in the immediately preceding financial year does not exceed 40 lakhs. If these conditions are satisfied, then that LLP is considered as small LLP. Clear, everyone? So with this, definitions completed. So next point is characteristics of limited liability partnership. LLP is a body corporate. Yes, LLP comes into the picture only through incorporation. Only through incorporation LLP comes into the picture. So it is a body corporate. Even if you look at the definition of body corporate includes LLP registered under this act. The point is very clear. Yes or no? So every LLP is a body corporate. Every LLP is separated from its partners. So you can see separate legal entity concept in LLP. Next one, perpetual succession. Existence of LLP will not get affected by existence of the partners. Partners may come, partners may go. Even the death of partners will not affect the life of the LLP. So LLP is having a characteristic called perpetual succession. Perpetual succession means continued existence. Next one, separate legal entity. LLP is separated from its partners. LLP is a separate, it's a separate person. It's a separate legal person. Its existence and its death will be decided by operation of law. So operation of law decides the existence of LLP. Now, this is the biggest advantage, Sir, why? Being a separate legal entity, it can acquire properties in its own name. It can incur liabilities in its own name. Assets of LLP will have control over the assets. Partners will not have any control over LLP assets. Partners will have control over LLP. Partners are owners of the LLP. LLP is the sole owner of LLP properties. So tomorrow, if any partner want to withdraw from partnership, he can withdraw by selling his interest in the partnership, by transferring his interest in the partnership. He can't withdraw his assets from the LLP. Understood? In case of general partnership firm, I joined in the partnership, I contributed one asset to the partnership. Tomorrow, if I want to withdraw, what I'll do? I'll take my asset and I'll come out. Now, this affects the business of the partnership. Coming to the LLP, properties are registered in the name of LLP. So, therefore, partners will not have any control over LLP properties. Partner can transfer his share of interest in the LLP. That's it. Partner can't withdraw his assets from LLP. And moreover, for the liabilities of LLP is responsible to the outsiders. Partners are not liable to the outsiders. Understood? Understood the advantage of separate legal entity, ma? Come on, tell me. So separate legal entity, LLP can acquire properties in its own name. LLP can incur liabilities in its own name. LLP can acquire properties in its own name. LLP can incur liabilities in its own name. Partners are not responsible for the liabilities of LLP. Partners are liable only to the extent of contribution amount. Whatever they promised, whatever they promised to contribute, only to that extent they are liable. Next one, mutual agency. Mutual agency. See, in general partnership firm also there is a concept called mutual agency, but both are different. Both are not same. In case of partnership firm, general partnership firm, act of one partner, all other partners are liable. That means one partner is an agent to all other partners. Coming to LLP, partner is an agent to LLP. Here, partner is agent to LLP. He is an agent to LLP. He is not agent to other partners. He is not agent to other partners. Therefore, act of one partner, all other partners are not liable. Act of one partner, only LLP is liable. Only LLP is liable. Are you all getting my point, students? So, no joint and several liability. Simply no joint and several liability. Act of one partner, only LLP is liable. All other partners are not liable. Is it clear, ma? Next one, LLP agreement. Just now I discussed with you. It is an agreement between partners and LLP. So this agreement determines the mutual rights and duties of the partners as well as LLP. Understood? Any provision, if it is not there in LLP agreement, then go to Schedule 1. Schedule 1. Example, profit sharing ratio. Just now I told you. Next, artificial legal person. Body corporate, artificial legal person, both are one and the same. Its creation and its death, both are decided by operation of law. Is it clear? So LLP is invisible person, intangible person, immortal person. However, it is not a fictitious person. It is a real person. Why? Its existence is confirmed by operation of law. The law confirms the existence of LLP. Therefore, you can't call it as a fictitious person since it is invisible, intangible, immortal person. Next one, common seal. In case of company also you have a concept of common seal. In case of company, common seal is optional. Here also common seal is optional. If company, if LLP decides to have common seal, it can have common seal. So simply affixing common seal is not sufficient. After fixing common seal on the paper, on the documents, at least two designated partners of LLP shall sign the document. Then only the document gets enforceability. Then only LLP is bound by that contract. Understood? See, having common seal, affixing common seal on the document alone is not sufficient. It should be signed by at least two designated partners. The document should be signed by at least two designated partners. That is the meaning of this point. See, it shall be affixed in the presence of at least two designated partners of LLP. So whether two designated partners present or not, how can you confirm? So do those two designated partners signing the document? Yes, we can confirm. Yes, affixing the common seal on the papers was done in front of two designated partners. Understood? Sir, first of all, who is this designated partner? I'll discuss with you. Just wait. Next one, limited liability. Limited liability. Every partner is having a limited liability advantage in the LLP. Of course, there are few exceptions. Suppose any partner, committing a fraud, any partner who is a negligent. Now these two partners, partner committing fraud, a negligent partner, these two partners will get unlimited liability. The limited liability is not given to these two partners. Why? One committed fraud and the other one is negligent. Next one, management of business. Who can manage the LLP business? Investors. That means, partners. In case of company, management is separated from the owners. Coming to LLP, yes, investors will manage the business. Next one, minimum and maximum number of partners. Minimum two partners. Minimum two partners. Maximum, there is no limit. Maximum, there is no limit. Next one, LLP. You can form LLP only for business motive with a view to earn profits. That's it. You can't form LLP for carrying charitable activities. In case of company, Section 8 company is there. Section 8 company is meant for charitable activities. Coming to LLP, there is no such benefits. If you want to form LLP, you can form LLP with a business motive only, with a profit intention only, not for charitable activities, not for non-economic activities. Understood? Next, investigation, compromise, conversion, e-filing of documents for an LLP. Everything I'll discuss with you in the upcoming questions. Next one, advantages of LLP. You all know, easy to form, easy to dissolve, flexible management structure, limited liability. Understood? So these are the advantages of LLP. Amma. Next one, who can be the partner of LLP? Section 5. Who can be the partner of LLP? So partner, who can act or who can become partner of LLP? So coming to the qualifications, any individual can become a partner of LLP. Not only individual, body corporate can also become a partner of LLP. So individuals, body corporates are eligible to become partner of LLP. Now disqualifications. Unsound mind. A person with unsound mind is disqualified to become partner of LLP. Next one, undischarged insolvent. Next one, adjudicated insolvent. Yes, of course, minor is also disqualified. Minor cannot become partner in LLP. In case of general partnership firm, minor can become partner for benefits, but this concept is not there in LLP. So these four persons are disqualified from individual's point of view. Body corporates, other than individual point of view, HUF is a disqualified. Cooperative society also disqualified. Cooperative society cannot become member of LLP. Corporation sole cannot become a partner of LLP. Understood? So these people are disqualified. Just look at the question 5. Any individual or body corporate may be a partner in LLP. However, a person with unsound mind, undischarged insolvent, adjudicated as an insolvent, or disqualified. You all know insolvent means what? Who is treated as insolvent? No, the person assets less than liabilities, person's liabilities. If assets are less than liabilities, we call him as a person with insolvent position. We won't call him as an insolvent. See, we are not having any power to declare someone as insolvent. So he's a person with insolvency position. Now, this person can file an application with competent authority to declare him as insolvent. And that application is still pending. Now you can call him as adjudicated insolvent. Sir, suppose application was approved and that competent authority fixed time limit of 5 years. So next 5 years, you are not eligible to enter into any contracts. So until he gets discharged, he is treated as undischarged insolvent. Once he got discharged, now he is competent to enter into the contracts. He is competent to become partner of LLP. Understood, ma? So, four persons, ma. Unsound person, undischarged insolvent, adjudicated insolvent, next minor. These four persons are disqualified to become partner of LLP. And coming to the, eligibility, you can see individuals, residents as well as non-residents, including overseas citizen of India, can become a partner of LLP. One LLP can become partner of another LLP. Companies can become partner of LLP. Foreign LLPs, these are coming under the definition of body corporate. Yes or no? Body corporate can become partner of LLP. So foreign LLP can also become partner of LLP. Limited liability partnerships incorporated outside India can also become a partner of LLP. See, both are different, ma. Sir, how they are different? LLP incorporated outside India having place of business in India. LLP incorporated outside India having place of business in India is called foreign LLP. Sir, LLP incorporated outside India, sir. It is not having any place of business in India. Then we call it as LLP incorporated outside India. Both are different, but both are body corporates. Next, foreign companies. However, cooperative society, corporation sole cannot become partner in a LLP. Even in one person company also, I told you clearly, one person company cannot make investment in any other body corporates. Understood? So now corporation sole, including OPC, cannot become partner in LLP. Next one, minimum number of partners required to form a limited liability partnership, section 6. This is similar to section 3 of Companies Act. This is similar to 3 of Companies Act 2013. See, every LLP shall have at least how many partners? 2 partners. Every LLP shall have 2 partners. Not only at the time of registration of LLP, but subsequent to registration, LLP should have minimum 2 partners. Suppose on 1st April 2024, there are 5 partners. On 1st October 2024, out of 5 partners, 4 partners got deceased. So now how many partners are there? 1 partner is there. Now, a statute is giving you time period of 6 months. Come on, LLP, I'm giving you 6 months time period. Within 6 months, increase this number 1 to 2. Increase the number of partners to 2, the statutory limit of 2. If you are increasing number of partners from 1 to 2, then you can enjoy the concept of separate legal entity. You can enjoy the benefit of limited liability. Suppose 6 months completed. Right now we are on 1st April 2025. LLP is still continuing business operations with 1 partner only. In that case, whatever debts, whatever obligations contracted by LLP after expiry of 6 months from the date of reduction of partners, to those debts, to those liabilities, LLP is not liable. That single individual partner or single body corporate partner is liable, and there is no limit on liability, unlimited liability. There is no limit on liability, unlimited liability. Suppose debts as on 1st October is 10 crores. Debts as on 1st April 2025 is 15 crores. And debts at this point of time, total debts of the company at this point of time is 20 crores. Imagine none of the debts were repaid. Now the point is, during this time period, the new debts contracted by LLP is 5 crores. So towards this 5 crores, LLP is not liable. That partner, the continuing partner in that LLP is liable towards 5 crores and without any limit on liability. Once again, I'm telling you, no limit on liability. Just look at the provision, at any time the number of partners of LLP reduced below 2, any time after registration or after incorporation, a number of partners falling below the statutory limit, and LLP carries on business for more than 6 months. 6 months time period also completed. While the number is so reduced, the person who is the only partner of LLP during the time it so carries on the business after those 6 months and has the knowledge of the fact, having the knowledge of the fact that business was carried with him alone, shall be liable personally for the obligations of LLP incurred during that period. So whatever debts contracted after 6 months, and the partner who knows the fact that LLP is carrying business operations with a single partner. Now that single partner is liable for all the obligations incurred during that period. Which period? After those 6 months. After those 6 months. So 6 months time period is given to increase the number of partners to the statutory limit. If you increase it, no problem. If you fail to increase the number of partners, then whatever obligations incurred after those 6 months, LLP is not liable. That single partner who is having a knowledge of the fact that business is carried out with him alone is personally liable. That means unlimited liability. Next, question 7, designated partner. Designated partner, one more important concept, designated partner. So I'll give you one small chart with respect to designated partner. Designated partners. First of all, sir, who is this designated partner? Designated partner is a partner who is specifically designated by other partners to run or to manage day-to-day operations of the partnership firm. He is similar to the director in company. He is similar to the director in the company. Director need not be a member, but coming to designated partner, he should be a partner first of all. So designated partner is a partner specifically designated by other partners to manage and run day-to-day operations of LLP. Clear? Section 7. Every LLP shall have at least 2 designated partners. And who can be designated partner? Only individual can be designated partner. Only individual can be designated partner. Or nominees of body corporates. Nominees of body corporates. Suppose there is one LLP, ABC LLP. In this ABC LLP, there are 3 partners. One is A Limited, second one B Limited, third one C Limited. So all the partners of LLP are body corporates. All the partners of LLP are body corporates. In this case, nominees of 2 body corporates shall be appointed as designated partners. First of all, who can be designated partner? Only an individual can act as designated partner. In case LLP is having all the partners as body corporates, then nominees of body corporates, individual nominees of body corporates shall be appointed as designated partner. And at least one designated partner shall be resident of India. Resident of India. Sir, how to check residential status? Very simple. Period of stay is 120 days or more. If his period of stay in a financial year is 120 days or more, then resident of India condition is said to be satisfied. See, every LLP shall have at least 2 individuals as designated partners. Out of 2 individual designated partners, 1 designated partner shall be resident of India. Understood? The violation of this condition, penalty. Penalty for contravention. What is the penalty? LLP punishment 10,000 rupees fine. In case of continuing failure, 100 per day during that contravention period, maximum 1 lakh rupees. I told you every LLP shall have 2 designated partners. Every LLP shall have 2 designated partners. Out of 2, 1 should be resident of India. Suppose this condition was contravened, this condition was violated, then LLP is liable to pay a penalty. How much? 10,000 rupees for contravention. In case of continuing contravention, 100 per day is added, subject to a limit of 1 lakh rupee. And every partner of LLP will get a punishment. What is the punishment? 10,000 rupee fine. In case of continuing failure, 100 per day, subject to 50,000 rupees. Subject to 50,000 rupees. So this is about designated partner. Next one, identification of designated partner. Identification of designated partner. Sir, how can we identify designated partner, sir? Just look at the incorporation document. Through incorporation only LLP comes into the existence. So look at the incorporation document. In the incorporation document, whose names were mentioned as designated partners, they will be designated partners. That is at the time of incorporation. Subsequent to incorporation, go through LLP agreement. So LLP agreement specify the provisions, or LLP agreement specify how a partner becomes a designated partner. So look at the LLP agreement and identify the designated partner. And important point, before naming someone as designated partner, prior consent should be obtained. A prior consent of designated partner is obtained, then only you can name someone as designated partner. Suppose LLP wants to name me as a designated partner, so first it should obtain my consent. After giving, after it obtains consent from me, then it can appoint me as a designated partner. So once designated partner appointment is over, the same shall be communicated with ROC. Simply, ROC filings. So ROC filing should be done within 30 days of naming someone as designated partner. Within 30 days of appointment of designated partner, communicate the same with the ROC. An important condition, important qualification is the designated partner should possess designated partner identification number. This is similar to director identification number. No, director identification number. So he should possess a DPIN. Prior consent is compulsory. Once you appoint designated partner, communicate the same with ROC within 30 days. Same here, in case of contravention, penalty. In case of contravention, yes, there is a penalty. What is the penalty? LLP is liable to pay a fine of penalty of 5,000 rupees. In case of continuing nature, 100 per day, maximum 50,000 rupees. And every designated partner is also entitled to pay penalty. Every designated partner is also, it's not entitled, every designated partner is liable to pay penalty. How much? 5,000 rupees for contravention. And if this contravention is continuing in nature, then 100 per day, maximum, that means subject to 25,000 rupees. So this penalty is leviable in case of failure to communicate the same with ROC, and failure to appoint eligible person as designated partner. If you appoint ineligible person as a designated partner, or if you fail to communicate with ROC, about the appointment of designated partner, then this penalty will be leviable. Next point, designated partner is liable for designated partner duties. Duty of designated partner, he is responsible for all the acts. He is responsible for all acts of LLP regarding compliance of LLP Act, compliance of all applicable laws and regulations. Next one, filings. So every LLP has to file 2 forms with ROC every year, Form 8 and Form 11. So who is responsible for these filings? Designated partner, and he is liable to all penalties for contravention. Next one, changes in the designated partner. So if a designated partner withdraws his consent, now there arises a vacancy. So vacancy shall be filed within 30 days. Filling of casual vacancy, shall be done within 30 days. And the same shall be communicated with ROC, ROC filings, 30 days. In case of failure, then what is the consequence? Penalty. What is the penalty, sir? LLP is liable to pay penalty of 10,000 rupees in case of continuing contravention. So let me write here. Yes, in case of continuing contravention, if the contravention is continuing, then 100 per day, maximum 1 lakh rupees is the penalty on LLP. Every partner is also liable to pay penalty. How much? 10,000 rupees plus 100 per day in case of continuing failure, maximum 50,000. So this is the punishment for contravention of these provisions. Is it clear, ma? So with this, provisions with respect to designated partner completed. So you can see the material, ma. Every LLP shall have at least 2 designated partners who are individuals, and at least one of them shall be resident in India. In case the LLP, all the partners are body corporates, then 2 individuals who are the representatives of body corporates shall be named as designated partners, nominees of such body corporate. So resident in India, the period of stay shall be at least 120 days. Next one, identification of designated partner. So through incorporation document, you can identify or you can name someone as designated partner, or through LLP agreement, you can name someone as designated partner. However, prior consent is compulsory. Prior consent to act as a designated partner is compulsory, and the same shall be communicated with a registrar. So what is the time period? 30 days of his appointment. Next one, just wait ma. Next one, so yes, he must possess DPIN. DPIN is compulsory. Liabilities of designated partner, I told you, he is responsible for doing all the acts that are necessary for compliance of provisions of this act, and is also liable to all penalties imposed on limited liability partnership for any contravention of those provisions. Changes in designated partner, yes, casual vacancy or any vacancy shall be filed within 30 days of vacancy. If no designated partner is appointed, then each other partner shall be deemed to be a designated partner. The punishment for contravention. I gave you penalties under respect to provisions. So there is the confusing point here. In order to avoid that confusion point, see here the wording is like this. If LLP contravenes the provisions of 7 subsection 1. So what is this 7 subsection 1? So that's what I wrote, penalty under respect to provisions. Clear? So LLP and its every partner shall be liable to pay a penalty of 10,000 rupees. In case of continuing contravention with further penalty of 100 per day, subject to maximum of 1 lakh rupee for LLP and 50,000 for every partner of such LLP. So I gave you a simple equation to remember the penalty, and you can easily remember this penalty when you read this equation. In examination, don't write penalty in this manner. In case of contravention, LLP is liable to pay a penalty of 10,000 rupees, and if the contravention is continuing in nature, then additional penalty of 100 rupee per day subject to 1 lakh rupee. Like that you have to write in your examination. Is it clear? And next one, you can see 5,000 rupees penalty, 100 per day subject to maximum of 50,000 for LLP, 20,000 for every designated partner. The same thing I wrote here also. Next one, if LLP contravenes the provisions of section 7, subsection 5, section 9, then LLP and its every partner, see here, LLP and every partner, 10,000 rupees penalty. Next one, additional penalty 100 per day, subject to 1 lakh for LLP and 50,000 for every partner of such a LLP. Understood? Everyone. Next one, procedure for incorporation of LLP. Procedure for incorporation of LLP. Very simple procedure, ma. Follow me carefully. Incorporation of LLP. 2 or more persons. Here person refers to individual as well as body corporate with a business objective. Can form LLP by filing a incorporation document. So incorporation document plus a statement. So 2 or more persons can form LLP, can register LLP by filing a incorporation document and by filing a statement with a registrar of the state where these persons propose to start LLP. Along with incorporation document, these persons has to submit the following information. This incorporation document should be in a prescribed form. And the information we need to provide is name of LLP, proposed business object, registered office address, details of partners, and then details of designated partners. Now, this statement should be signed by a professional. Who comes under professional? Advocate, CA, CMA, CS in practice. So any professional, can I zoom it? Yeah, wait. Yeah. Any professional, advocate in practice, CA in practice, CMA in practice, CS in practice should sign this statement. Along with the professional, partners who are subscribing this incorporation document has to sign the statement. This statement is with respect to compliance of LLP Act and rules made thereunder. So the proposed incorporation is as per the provisions of LLP Act and rules made thereunder. So after furnishing this information, a registrar will register the document and registrar will issue certificate of registration. Certificate of registration. If registrar thinks that everything is complete, the information filed by these two persons is complete, then he will issue certificate of registration within 14 days, and he will retain this incorporation document and he will consider this statement as an evidence. And then he will issue certificate of registration which will contain the name of LLP and LLP identification number. Understood? So this is a simple incorporation procedure ma. And in case this statement is a false statement, this statement is not correct statement, in that case there will be a punishment. The punishment is imprisonment up to 2 years. The persons whoever furnish this false information, the person whoever furnish a false statement, he will be punished with imprisonment up to 2 years and fine minimum 10,000. Fine minimum 10,000, maximum 5 lakh rupees. Fine minimum 10,000 rupees, maximum 5 lakh rupees. Just give one time reading ma. Same points I discussed with you. Same points I gave you chart. 2 or more persons, lawful business, profit shall subscribe the names to the incorporation document. Importance of this point is 2 or more persons can form LLP for only business purpose. 2 or more persons cannot form LLP for charitable purpose. And statement to be filed. So statement should be signed by a professional as well as partner, whoever subscribing this incorporation document. This statement is with respect to requirements of the LLP Act and rules made thereunder. And the incorporation document shall contain the following information: name of LLP, proposed business, registered office address, details of partners, details of designated partner, and such other information as may be prescribed. Not only this point, but designated partner should give a consent letter. So that consent letter should also be filed along with incorporation document. If any person makes a false statement or does not believe to be true, he shall be punishable with imprisonment which may extend to 2 years and with fine which shall not be less than 10,000 rupees but which may extend to 5 lakh rupees. And these points also I covered ma. So registrar will accept the statement delivered as a sufficient evidence that the requirements have been complied with, and certificate issued shall be signed by registrar and authenticated by his official seal. And this certificate is a conclusive evidence that LLP is incorporated by the name specified therein. So section 12 also completed. Next one, section 13, registered office of LLP and changes therein. See, the importance of registered office is similar to importance of registered office in company. All the communications with LLP shall be addressed to registered office of LLP. In case any departments want to investigate LLP or want to carry inspection activities, then they will come to registered office. And any disputes with LLP is subject to jurisdiction of registered office of LLP. So where registered office is situated, that city, that town or that village jurisdiction is applicable. So you can file complaint within that jurisdiction on that LLP, not other jurisdictions. Clear? Next one, if LLP contravenes any provisions of section 13, then LLP and its partners shall be punishable with a penalty of 500 per day subject to 50,000 rupees. So this is the maximum punishment. What is the maximum punishment? 50,000 rupees. So this punishment is with respect to section 13. Section 13. So whenever LLP changes the address of whenever LLP changes its address, the same shall be communicated with registrar. In case of delay communication, each day 500 rupees is the penalty. Maximum how much? 50,000 rupees is the penalty. Who is liable to pay this penalty? LLP and every partner, not designated partner, every partner. Clear? Next one, effect of registration. Yes, once LLP got registered, it become a separate body corporate. It becomes a separate legal entity. Now it can acquire properties in its own name. It can incur liabilities in its own name. It can be sued or it can sue the third parties. Understood? So suing and being sued. Acquire, own, holding, developing, disposing of properties, whether mobile or immobile. Can have a common seal and can do all the acts and things as body corporate may lawfully do and suffer. Next one, name of the limited liability partnership. Name of LLP. Name of LLP. So for this, I'll give you a chart. Just copy this chart. Name of LLP. So three branches. First one, selection. Selection of name. So the name you select should be unique. Unique. It should be unique name. And name shall always ends with word LLP. In case of private company, name of company shall ends with private limited. In case of public company, name shall ends with public limited or limited. Yes or no? So name of LLP shall always ends with limited liability partnership or LLP. In the opinion of central government, it should not be undesirable name. Name shall not be undesirable. So let me redraft this point. Not undesirable. Not undesirable. From whose opinion? From central government opinion. Central government opinion. Central government point of view, the name shall not be undesirable. Sir, when we call it as undesirable, suppose if the name is identical to or similar to the name of existing LLP, the name of existing company, or the name of existing registered trademark, then the name becomes undesirable. So such name you can't select. Once selection of name is completed, the next step is reservation of name. Who can reserve the name? Two persons can reserve the name. One is proposed LLP. So LLP which wants to come into the future, which wants to come into the existence in future, proposed LLP, or existing LLP which is planning to change its name. Existing LLP wants to change its name. So these two persons, one is proposed LLP, the other one is existing LLP, can reserve the name. By filing a document with registrar, they can reserve the name. Sir, how long name shall be reserved, sir? Reservation. Here, reservation time period. Reservation period is maximum 3 months from the date of intimation by registrar. So how long I can reserve the name? How long? Come on, tell me how long I can reserve the name? I can reserve the name for a period of 3 months from the date of intimation by the registrar. And the last branch is rectification of name. Rectification of name. Come on, tell me when we can use the word rectification. See, the word rectification we can use only in case of mistake. Correction of mistake, we can use the word rectification. Yes or no? So here, mistakenly, wrongly, I incorporated LLP with a name which is similar to the name of existing LLP, or similar to the name of existing company, or name similar to the name of existing registered trademark. So mistake happened. Now this mistake should be rectified. So rectification of name provisions will apply. So when this concept comes into the picture, LLP name of LLP is identical to or identical with or similar to the name of existing LLP. Existing LLP or existing company or existing registered trademark. Registered trademark. Name of LLP is similar to the name of existing LLP, existing company, existing registered trademark. Then this existing LLP or existing company or existing registered trademark owner has to file an application with central government. So this application is with respect to, sir, one new LLP was formed with our name, sir. One new LLP was formed with our name. So please order that LLP to rectify its name. If a registered trademark owner is filing an application, then that application shall be filed within 3 years of, just observe me carefully, within 3 years of incorporation of LLP. So if a name is similar to the name of existing registered trademark, then the proprietor or the owner of registered trademark has to file an application with central government within 3 years of incorporation of this LLP, new LLP. Now, central government will pass an order. Central government will order LLP to rectify its name. Central government will order LLP to rectify its name. If you observe the difference between, company and LLP, in case of company, central government can issue order on suo motu basis. But coming to LLP, central government had no power to issue order on suo motu basis. Central government can pass an order only if it receives any application from the existing LLP or existing company or existing registered trademark owner. In the provision, it is very clearly mentioned, suo motu point is not there. The provision suo motu point is not there. Central government not on its own motion, but central government based on the application received from existing LLP or existing company or existing registered trademark, it can take action on the LLP which was incorporated with the name which is similar to the name of existing body corporate or registered trademark. Now, whenever LLP changes its name, so LLP has to change the name, change name. So whenever it decides to change the name, within 15 days, it has to communicate with ROC filings within 15 days of change. Now ROC will issue a fresh certificate of registration with new name. Now within 30 days, LLP has to redraft its LLP agreement, new LLP agreement with a new name. So this should be done within 30 days. Suppose if LLP fails to rectify its name, then central government will allot a new name to the LLP. If LLP fails to rectify its name, then central government is having power to allot new name. In case of come on, tell me. In case of company, tribunal, what tribunal can do? It can order for liquidation of the company. It can order for removal of name from the register. But here it is different. Just look at the points here. So name, every LLP shall have either the words limited liability partnership or the acronym LLP as the last words of its name. Name shall not be undesirable. A name shall not be identical or too resembles to the name of existing LLP or a company or a registered trademark. A reservation of name. Come on, tell me how long the name shall be reserved. The period of 3 months. What I wrote here, 3 months only. Yes, 3 months only. Not 6 months, period of 3 months. Next, rectification of name. You can see here, existing LLP or existing company has to file an application with central government. Now, central government may direct the LLP to change its name or new name within a period of 3 months from the date of issue of the direction. So, within 3 months, name shall be rectified. And I told you clearly, owner of registered trademark has to file an application with central government just within a period of 3 years from the date of incorporation. Suppose 3 years completed, sir. Now, can he request central government to rectify the name of LLP? No, it is not possible. Where an LLP changes its names, it shall within a period of 15 days from the date of such change give notice of change to the registrar. And within 30 days of such change in the certificate of incorporation, such LLP shall change its name in the LLP agreement. First, change the name and get certificate of incorporation. Once you get certificate of incorporation, within 30 days, change the name in LLP agreement, nothing but LLP deed. If LLP makes any default, then central government is having a power to allot a new name to the LLP. A registrar shall enter the new name in the register of LLP in the place of old name and issue a fresh certificate of incorporation. Is it clear? Very simple, ma. Next one, explain the relationship of partners with limited liability partnership. Simple concept, ma. If you had a general partnership knowledge, you can easily remember these points. See, eligibility to be partners. See, how to become a partner of LLP. At the time of incorporation, subscribe the names to the incorporation document. Just wait. At the time of incorporation, subscribe your name to the incorporation document. You can become partner. So subsequent to incorporation, I want to become partner of LLP. That thing, you need to comply the provisions of LLP agreement. So by complying the provisions of LLP agreement, you can become partner. By complying the directions, not provisions, by complying the directions of LLP agreement, you can become partner. So in two ways you can become partner of LLP. One way, at the time of incorporation, subscribe the incorporation document. The other way, comply the directions stated in the LLP agreement. That means, with the consent of all the partners or with the consent of majority of the partners, you can be admitted as a partner in LLP. So with the consent of all partners or with the majority consent, all these directions are there in LLP agreement. So follow the LLP agreement. Next one, a relationship of partners. I told you, mutual rights and duties of partners and LLP decided by LLP agreement. In case LLP agreement is silent, then go to schedule 1. Then go to schedule 1. In the absence of LLP agreement means don't think that LLP agreement is not there. Sima, LLP can't be found. LLP can't carry business operations without LLP agreement. So here LLP agreement is compulsory. But if LLP agreement is silent with respect to any particular aspect, then go to schedule 1. Go to first schedule. Whatever there in the first schedule, apply those provisions. Are you all getting my point, students? Everyone. So partners rights and duties, LLP rights and duties are decided by LLP agreement. So that is the section 23, relationship of partners. Next one, changes of partners in limited liability partnership. Changes means what? Admission of a partner, retirement of the partner. Yes or no? Changes in the partners in limited liability partnership means, one person is admitting as a partner or one of the existing partners is discontinuing. Why? Suppose he gave a resignation notice. You don't want to continue with LLP, or death of the partner, or insolvency of the partner, or partner becoming unsound mind. So these are the reasons why a partner will come out of the LLP. Are you all getting my point, students? Just look at this one note, copy this point. Cessation of partnership interest. Changes in partners. Section 24 and section 25. In this first branch, cessation of interest. See, this is possible in 4 ways. One is by notice. That means resignation. Second one, death of a partner or dissolution of a body corporate. Death of a partner is for natural person. Dissolution of a partner in case of body corporate, which is a partner of LLP. Death or dissolution. Let me write both. Death or dissolution. Next one, becoming unsound mind. Next one, becoming insolvent. Whether adjudicated insolvent or undischarged insolvent, both are disqualifications only. In case of notice, the partner who is resigning from the partnership firm, we call him as former partner. Former partner should give notice at least 30 days to the other partners about his intention of resignation. Now, immediately, LLP has to communicate the same matter within 30 days of notice. With registrar. Then only the former partner gets relieved from the acts of LLP, or else former partner is still liable with respect to his contribution amount. Suppose today I gave resignation notice. LLP failed to communicate with the registrar. Now, for the acts of LLP, I am liable. Liable means what? It's not unlimited liability. I'm liable to contribute my promised amount. Suppose, I contributed only 60% of promised amount. Remaining 40%, I should contribute in case that LLP get into the liquidation. And if LLP business assets are not in a position to discharge business liabilities, then I am liable to pay balance contribution amount. Suppose LLP filed a notice with registrar. Now I am not responsible for the act subsequent to the resignation. I'm not liable for the act subsequent to the registration. Till the date of resignation, I'm liable. Is it clear, ma? Next one. In case of death, in case of unsound mind, in case of insolvency, normal things only. So what is the effect of cessation, sir? What is the effect of cessation? In all the cases, so what is the effect of cessation? What is the effect of secession? So now the former partner or legal representatives of the former partner are entitled to get back contribution amount. So whatever contribution amount invested in the LLP, yes, they are entitled to get back the contribution amount. They are also entitled to get share in the accumulated profits after deducting accumulated losses. Whatever profits are there till the date of resignation or till the date of death or date of becoming unsound or date of becoming insolvent, so till that date whatever accumulated profits are there, and what is his share, so he or his legal representatives are entitled to get the share of accumulated profits after deducting accumulated losses. Next one, no further liability next one, no further liability. So not liable for the acts subsequent to event. Here event means resignation or death or unsound or insolvent. So that means he or his estate is responsible or liable for the acts done till the event. Next one, no right to participate in management, no right to interfere in the management, So once you give resignation notice, once LLP filed the document with registrar, subsequently you had no right to participate in management. You can't participate, you can't interfere in the day-to-day operations. So this is the effect of secession. Next one, registration of changes. Registration of changes. So whenever a partner gets retired or whenever a partner changes his personal details, suppose one of the partner modified his name, or his address particulars has been changed. Now that partner has to communicate the same with LLP. Whatever changes happened in his profile, so such changes shall be communicated with LLP within 15 days. Within 15 days, the partner has to communicate with the LLP. Then LLP has to give intimation to registrar. A registrar is nothing but ROC only. So notice within how many days? Within 30 days he has to give notice. LLP has to give notice, and this notice shall be signed by designated partner. So who will sign this notice? Designated partner has to sign this notice. So this notice shall be given to the registrar. What is the time period? 30 days. 30 days of intimation from the partner. So first step, partner communicating changes in his profile with LLP within 15 days of changes. LLP communicate the same with the registrar within 30 days in the prescribed form, which should be signed by a designated partner. Violation, that means contravention. In case of contravention, penalty. Just wait So in case of contravention, penalty. So what is the penalty, sir? Contravention in case of ROC filing. There is a contravention, a delay in filing with ROC. In that case, designated partner and LLP. The designated partner and LLP is liable to pay 10,000 rupees fine or 10,000 rupees penalty. Penalty how much? 10,000 rupees. This is about this one. Suppose partner failed to communicate with LLP about the changes, then partner is going to get a punishment. What is the punishment? 10,000 rupees is the punishment. So 10,000 rupees partner has to pay. Individual penalties you have to remember like this only. Next, one small point is there. Suppose LLP failed to communicate with registrar about resignation of the partner. In that case, within reasonable time, the former partner has to communicate with the registrar about his resignation. Now what ROC will do? ROC will communicate with LLP. LLP, so and so partner filed resignation notice with me. So did you approve that resignation notice, or did you why you failed to file this form with me? Come on, respond. If LLP communicates within the reasonable time, if LLP responds within 15 days, then no problem. Suppose no reply, no response from LLP, within 15 days of such intimation. within 15 days of intimation by registrar. If there is no response from LLP, then ROC shall consider it as deemed approval and ROC shall register the same. So deemed approval from LLP and ROC shall register the same. This is very important. First of all, LLP has to communicate the same with registrar. If LLP fails, then former partner should communicate with registrar. Or else what happens? All the acts done by the LLP, former partner is not discharged. Former partner is still liable. So in order to avoid future liability, it's better. Come on, former partner, communicate with registrar. Registrar will give intimation to LLP. If LLP responds, no problem. If LLP did not respond within 15 days from intimation of ROC, then ROC shall consider it as deemed approval. ROC shall register the resignation. From that date onwards, you are not liable for any subsequent act. So with this question number 11, I completed. Question number 11, I completed. Just give one time reading, you'll get 100% clarity, including penalties. Everything I discussed with you. So contribution amount, he's entitled to the contribution amount. He's entitled to the share in the accumulated profits after deduction of accumulated losses. Understood? Yes, these points also I told with you. By notice in writing, you can come out of partnership. Not only by notice, death, unsound mind, insolvent. So these are also the ways, for termination of partnership interest. Once again, I'm telling you, even if one partner come out of LLP, the existence of LLP doesn't get affected. The existence of LLP doesn't get affected. Why? LLP is having a separate legal entity concept. Clear? Next, registration of changes. I told you, partner shall inform the LLP any change in his particulars within a period of 15 days of such change. Next, LLP, where a person becomes or ceases to be a partner, LLP has to file a notice with registrar within 30 days from the date he becomes or ceases to be a partner. And where there are any changes in the partner details, file a notice with registrar within 30 days of change. Understood? The same points I gave you notes here itself. Observe it carefully. Observe the chart carefully. First, copy the chart. Next, give one time reading. Try to correlate. So you will remember this concept for a longer duration. That's it. So notice shall be filed with registrar in such form, accompanied by such fees, signed by the designated partner. Understood? If it relates to the incoming partner, it shall contain a statement by such partner that he consents to become a partner. Yes, before naming someone as a partner, it is compulsory to obtain consent from the partner. Penalty for contravention. What is the penalty for contravention? I told you, if LLP contravenes provisions of subsection 2, LLP and every designated partner shall be liable to pay a penalty of 10,000 rupees. I gave you indication here itself. Just see. Penalty for violation of this provision. And if any partner contravenes the provisions of subsection 1, then such partner shall be liable to pay a penalty of 10,000 rupees. So that means contravention of first point. Punishment is this one. Next one. Any person who ceases to be a partner of LLP may himself file with registrar the notice and reasonable cause to believe that LLP may not file the notice with registrar. Actually, LLP has to file the notice with registrar, but he is having a doubt or he believed that LLP didn't file form with a registrar. Now he can file on his own motion. Now what registrar will do? Registrar shall obtain a confirmation to this effect from LLP. Unless LLP has also filed the such notice. If LLP already filed such notice, then registrar will ignore that one. Suppose there is no response from LLP, so there is no confirmation within 15 days, then registrar shall register the notice made by the person ceasing to be a partner under this section. Clear? Yes, sir. Next one, section 26. Discuss the extent and limitation of liability of partners in the limited liability partnership. As I told you, act of partner is equal to act of LLP. Once again, I'm telling you, act of partner equal to act of LLP. It's not act of other partners. It's not act of other partners. So act of LLP, sorry, act of partner, LLP is liable, not other partners. Mutual agency is between partner and LLP. It's not partner and other partners. It's not partner and other partners. Mutual agency concept is there between partner and LLP. So act of partner, LLP is liable. Sir, extent of liability, sir. Remember the thumb rule. As long as partner acts within the authority of LLP, LLP is liable to the third party. Partner is not liable. If partner exceeds authority, suppose our LLP is having power to enter into contracts related to software. Our LLP is in software business. Now, partner doing any act within the software business, LLP is liable. Now, partner entered into a real estate contract. He wants to do real estate, he wants to carry real estate objects in the name of LLP. Now, this is something beyond the objects of LLP. LLP is not liable. Who is liable? Partner is personally liable. So, as long as partner acts within the LLP authority, within his authority, LLP is liable to the third party. Even for wrongful acts, let me read this second point. LLP is liable if a partner of LLP is liable to any person as a result of wrongful act or omission on his part in the course of business of LLP or within the authority. See, listen to this example. LLP rendered some services to one customer on credit basis. Now, this customer is a debtor. One day, partner went to the customer and collected amount. It is within the authority only. And whatever amount he collected, he didn't credit that amount to LLP account. He misused the funds. He used the funds for his personal purposes. Now he committed one wrongful act. Yes or no? He committed one wrongful act. He misappropriated amounts collected from the debtor. Now can you ask debtor one more time, sir, please pay the amount, sir. LLP didn't receive the amount, sir. Do you think customer is liable to LLP? No. LLP is bound by the collection of the partner. Whatever amount collected by the partner, LLP is responsible to the third party. LLP is responsible to the customer. So even acts or wrongful acts, if such wrongful acts are within the authority, LLP is liable to the third party. Of course, this particular partner is personally responsible to the LLP. This particular partner is personally responsible to the LLP. But the point is, LLP is liable to the third party for the act of partner, even if it is a wrongful act, but if it is falling within the authority. Example, misappropriation of funds collected from the customers. Next one. Sima, act of partner, LLP is liable, not other partners. Now these liabilities shall be met out of assets of the LLP, properties of the LLP. Clear? Yes, sir. Next one, extent of liability of a partner. If partner acts outside the authority, then partner is personally liable to the third party. You can see here itself, Sima. An LLP is not bound by anything done by a partner in dealing with a person if the partner in fact has no authority and the third party knows that he has no authority. So whenever partner is acting outside the authority and the person dealing with the partner has the knowledge that the partner had no authority, in this case only, LLP is not liable to the third party. Partner is personally liable to the third party. Understood? Everyone. Next one. Holding out. Holding out means what? Holding out means what? Sima, do you remember Partner by Estopel? Similar concept only. See, through words spoken or written, I myself representing as a partner of one LLP. In fact, I'm not the partner. But I'm representing myself as partner of LLP. Now, third party, believing this representation, third party gave credit to LLP. Now, in this situation, I am liable to the third party if LLP fails to pay the amount. That is the point. See, actually, I'm not the partner, but I was represented. Either, I'm representing myself as a partner or I was represented as a partner by someone. In fact, I'm not the partner. But now, based on this representation, on the faith of this representation, third party gave credit to LLP. Now, I'm liable to the third party. Of course, LLP is also liable for the credit, for the benefit received because of this representation. See, LLP is also liable to the extent of credit received by it or any financial benefit derived thereon because of this representation. But if LLP fails to pay that amount, first I'll pay the amount. Next, I can get that amount from LLP. That is secondary. But the point is, the person who got represented as a partner is liable. Next one, Sima, important point. In case of partner's death, if the business is still continued, yes, They can continue the business. LLP is having a perpetual succession character. LLP is having a separate legal entity character. Existence of the partners will not affect the existence of the LLP. Understood? Everyone. Now the point is, one partner deceased. Remaining partners continuing the LLP with the same name, with the old name only. Now, deceased partner's estate. Whether deceased partner's estate is still liable for the acts done subsequent to the death? The answer is no. Deceased partner's estate is not liable, shall not by itself make his legal representative or his estate liable for any act done after his death. So subsequent to the death, act of the LLP, deceased partners or legal representatives of deceased partners are not held responsible. Understood? Next one, unlimited liability in case of fraud. Yes, in case of fraud, the benefit of limited liability is eliminated. The benefit of limited liability is eliminated. So partner committing fraud. Fraud means what? A promise made without an intention to perform. Suppose partner brought some goods from creditor on credit basis. So credit purchase. Partner promised that he will pay within 1 month, but he had no intention to pay within 1 month. Understood? Now this is a fraud. In case of fraud, that partner liability becomes unlimited. That partner liability becomes unlimited. Understood? So in case of fraud, there is a punishment also. The punishment is imprisonment, which may extend to 5 years and fine minimum 50,000, maximum 5 lakhs. Fine how much? Minimum 50,000, maximum 5 lakhs. And not only this fine, not only this imprisonment, because of your fraud, any party suffered loss. Because of your fraud, some of the parties suffered loss. Now the parties whoever suffered loss will get compensation from this partner or from these parties. So first of all, partner committed a fraud, so he will be imprisoned up to 5 years and he has to pay fine minimum 50,000, maximum 5 lakhs. In addition to the punishment, he need to compensate the parties who are at loss because of this fraud. Understood? Next one, whistleblowing. So what is the concept of whistleblowing? Suppose some investigation proceedings, some prosecutions were initiated on the LLP. Department came to know that LLP committed fraud. So department issued a notice. Department started legal proceedings on the LLP. Now any partner or LLP employee, if they want to provide useful information during the investigation, they can provide that information, and that person is known as whistleblower. And the person who is responding to the investigation department in a positive manner, who is cooperative, his punishment gets reduced. So any information filed by any partner or employee leads to belonging to the LLP, then the partner or employee being convicted under this act or any act, his punishment gets reduced. The court or tribunal may reduce or waive any penalty leviable against any partner or employee if he acts as a whistleblower. So simply the person who is cooperating with the department, who is providing useful information for carrying investigation, he will be, his punishment will be reduced. Now, because he is providing useful information, right? So now, if LLP or partners of LLP or designated partner of LLP threatens the whistleblower, yeah, don't provide that information. If you provide the information, I'll cut your salary, or I'll give you bad conduct certificate, or I'll publish information against you stating that you are a fraudulent person. So such threatening calls, or such kind of threatening calls, if any partner or employee of LLP is making, then tribunal is having a complete powers to punish those people. So first of all, a person acting as a whistleblower, he should not be demoted, he should not be suspended, he should not be threatened by any partner of LLP or designated partner of LLP. If any person is doing like that, then that person will get additional punishment. Is it clear, ma? Next one, write a short note on partner's contribution to the limited liability. See, ma, wherever necessary, I'll give you charts. If not necessary, I'll just explain the provision. As you all know, this is a marathon lecture, right? So now coming to the contribution. See, ma, contribution can be any form, ma. It can be tangible or intangible, movable or immovable. Understood? So directly I can bring cash, or I can bring money's worth assets like furniture, infrastructure, building. So whatever is necessary, I can bring them directly, either money directly or assets. Now these contribution can be either movable or immovable. I told you right now, infrastructure movable. Next, building immovable, tangible money, intangible, contract of services. Suppose I'm having a experience in this field for 15 years. Now whatever experience I'm having, I'll contribute it. So this is also one type of contribution. But the point is, monetary value of contribution of each partner shall be accounted and disclosed in the balance sheet, in the accounts of LLP. And this is very important to decide whether LLP is a small LLP or not small LLP. So contribution amount does not exceed 25 lakh rupees. Turnover does not exceed 40 lakh rupees. If these two conditions are satisfied, then that LLP is treated as small LLP. Yes or no? So monetary value of contribution shall be duly accounted and disclosed. Obligation to contribute. Sir, how much to contribute? For that, just open LLP agreement and check that LLP agreement. At the time of incorporation, yes, every partner, subscribing their names to the incorporation document have agreed to contribute so and so amounts. Suppose I agreed to contribute 1 lakh rupee. So far, how much I contributed? 60,000. Remaining 40,000, I am liable. So tomorrow, if any creditor is not getting amount from the LLP, and if LLP is not in a position to discharge that liability, then creditor has right to enforce. Creditor has right to enforce a original obligation against such partner. Understood? So in section 32 and 33, we had a discussion on 2 points. One is form of contribution. It can be tangible or intangible, movable or immovable. But the point, monetary value of contribution shall be accounted for and disclosed in the accounts. Next one, obligation to contribute. Creditor is having a right to enforce the obligation against such partners. Understood? Next one. Next one, books of accounts, financial statements of LLP. So simply financial disclosures. In case of company, company has to maintain proper books of accounts. What comes under proper books of accounts? Assets and liabilities register, sales and purchases register. Next one, receipts and payments, cost related records. These records shall be maintained in double entry system and on accrual basis, right? So this is with respect to proper books of accounts in case of company. Coming to LLP, LLP has to maintain proper books of accounts, but here the books of accounts can be maintained on either accrual basis or cash basis. In company, accrual basis is compulsory. Coming to LLP, either on cash basis or accrual basis. And for each year of its existence, yes, LLP is required to maintain proper books of accounts. Next one, books of accounts shall be maintained according to the double entry system of accounting. And where to maintain these books of accounts? The books of accounts shall be maintained at registered office of the company. How long? In case of company, each year books of accounts shall be maintained for the next 8 financial years, right? Or last 8 years financial statements company has to maintain. Similarly here also. So once again, I am telling you, books of accounts shall be maintained according to double entry system of accounting. It can be either on cash basis or accrual basis. Next one, where to preserve these books of accounts? At registered office. At registered office. Next one, statement of account and solvency. Balance sheet simply financial statements only. So whether company is solvent, whether LLP is solvent or insolvent, how can we determine? Looking at the financial position of the LLP, we can determine. So simply looking at the balance sheet, what are the liabilities, what are the assets, whether business assets are in a position to discharge business liabilities. Yes, solvent LLP. No sir, insolvent LLP. Understood? So every LLP shall, within a period of 6 months from the end of each financial year. So you all know financial year closure date is 31st March, yes or no? Just now I discussed with you financial year definition. So 31st March 2024. At 6 months. So within 6 months, LLP has to prepare statement of account and solvency. That means by 30th September, statement of account and solvency shall be kept ready. Prepare a statement of account and solvency for the said financial year as at the last date of the said financial year. Last date is 31st March. In such form as may be prescribed. And such statement shall be signed by designated partner of the LLP. So just look at the point, ma. Every LLP has to prepare statement of account and solvency for each and every financial year. And what is the last date for preparation of statement of account and solvency? 30th September 2024. The point is, LLP has to file statement of account and solvency in Form 8 with registrar. And what is the time limit? Within 30 days. Within 30 days of 6 months from the end of financial year. That means the due date is 30th October of every year. And this format shall be signed by designated partner. Understood? So every LLP has to prepare statement and account and solvency for each and every financial year of its existence. So within 6 months, preparation shall be completed. And within 30 days from the completion of 6 months at the end of financial year, LLP has to file Form 8 with ROC. And it shall be signed by designated partner. Is it clear, ma? In case of violation, that means, delay in filing. In case of delay in filing, then LLP, for such delay, LLP is liable to pay penalty of 100 per day. 100 per day during such delay continues, maximum 1 lakh rupee. In case of designated partners, 100 per day, maximum 50,000 rupees. I told you 30th October is a general due date. 30th October. Suppose LLP is filing Form 8 on 30th November. Now there is a delay of how many days? 30 days. Now LLP is liable to pay 30 into 100, 3,000 rupees. Designated partner is also liable to pay 3,000 rupees. Every designated partner is liable to pay 3,000 rupees for 30 days delay. Penalty for non-compliance of this provision. Suppose, LLP is not preparing statement of account and solvency. LLP is not maintaining books of accounts. LLP is not maintaining books of accounts in double entry system. Then LLP, the punishment will be 25,000 rupees. 25,000 rupees, maximum 5 lakh rupees. And every designated partner, minimum 10,000 rupees punishment, maximum 1 lakh rupees the punishment. Remember, this penalty is very, very important from MCQ's point of view. At least one question comes out of penalties. Understood? Next, accounting and auditing standards, everything central government will prescribe. Next one, annual return. Yes, every LLP is required to file annual return in Form 11 with registrar. And what is the time limit? Within 60 days of financial year closure. So here the date will be 30th May 2024. With respect to last financial year, 30th May 2024. By 30th May 2024, LLP has to file Form 11 with ROC. First of all, what is Form 11? It is all about annual returns. In case of company, MGT 7, annual return. Financial statements, AOC 4. Coming to LLP, financial statements, Form 8. Annual returns, Form 11. Clear? Next, penalty for non-filing of annual return or delay in filing annual return. Same penalty which I discussed with you for Form 8. The penalty is LLP 100 per day subject to 1 lakh rupee. Every designated partner 100 per day subject to maximum of 50,000 rupees. Same punishment, 100 per day, maximum 1 lakh rupee. Next one, 100 per day, maximum 50,000 rupees. In case of designated partners. Next one, any document you file with registrar, the document should be available for inspection. So the documents, statements which you file with registrar, it shall be made available for inspection. Even you can inspect these documents by paying a nominal fees with ROC. On payment of 100 rupees, you can download all these documents from MCA website and you can inspect these documents. Next one, in Form 8 or in Form 11, if LLP is filing any false statement or statement which is not true, in that case, the person responsible for filing this statement or person making false statement will get the following punishment. The punishment is imprisonment maximum 2 years. Fine minimum 5 lakh rupees, minimum 1 lakh rupee, maximum 5 lakh rupees. Understood? The person who is responsible or the person who is making a false statement, he will be sent to jail for a period maximum 2 years. Minimum 0, maximum 2 years. Fine minimum 1 lakh rupee, maximum 5 lakh rupee. Is it clear? Next, suppose you filed Form 8 with a registrar, and registrar thought that that information is incomplete, or registrar wants some additional information. In that case, what a registrar can do, he can issue notice to the LLP. He can ask for additional information. In that case, it is the duty of designated partner to respond. It is the duty of designated partner to furnish whatever information requested by the, or whatever information asked by the registrar. Understood? In case if you violate, if you contravene the orders of registrar, in that case the person, the person who is responsible to furnish information will get a punishment. The punishment is, fine minimum 2000 rupees, maximum 25,000 rupees. Understood? So registrar is having power to call for additional information. In case persons are not responding, persons are not filing additional information, or persons are not attending to the hearings, in that case the person who is at a default will get a punishment. What is the punishment? Fine minimum 2000 rupees, maximum 25,000 rupees. Next one, compounding of offenses. Compounding of offenses, another important provision in LLP. The compounding of offenses means, compromise. Compounding of offense is nothing but compromise. Yes. See, ma, I committed one mistake, ma. I committed one default. For example, I failed to furnish the requisite information which was requested or which was ordered by the registrar. Now I committed one offense. So definitely, the registrar or the investigation agencies had power to initiate legal proceedings on me. Understood? And these legal proceedings will not end within 1 day or within 1 month. It will take a time. Yes or no? So during this time period, definitely I need to support them. My time gets wasted. Yes or no? So instead of with just wait, ma. So I'm sorry. So here, what I'm telling with you, what I'm discussing with you, compounding of offenses, right? The compounding of offenses is a settlement mechanism. It's a settlement mechanism by which offender is given an option to pay money in lieu of prosecution. In lieu of prosecution. See, as I told you, I committed one default. Now I am the offender. Actually, process is, first they will issue notice to me. I should respond to them. So they will investigate, they will carry some investigation activities. So they will gather some evidence, and based on the evidence, they will impose punishment on me. They may levy fine, or they may levy, imprisonment. Now the point is, offenses where only fine is sufficient, offenses in the above cases, I discussed with you some 10 cases where a penalty will be levied. Yes or no? So in those cases, yes, I can voluntarily surrender myself to the department. So I can enter into the compounding agreement. Sir, I committed mistakes, sir. So I committed these defaults. So for these defaults, whatever amount you levy, whatever punishment you levy on me, I'll pay you immediately. This is what compounding of offenses. The biggest advantage under section 39 is you can avoid a lengthy, longer litigation proceedings. Understood? Or else, 1 year or 2 years time gets wasted. Until they gather evidences, they can't come to the conclusion. Until they can't come to the conclusion, they can't impose punishment on me. So instead of carrying these procedures, instead of all these procedures, you surrender voluntarily yourself. You accept your mistakes and you pay fine. So within 1 week or 1 month, you can come out of these offenses. That's it. So what is the procedure, sir? What is the procedure for compounding of offenses? I'll tell you with you. Section 39, compounding of offenses. Compounding of offenses. Sima, only regional director or a level above regional director is having the power to compound the offenses. Now applicant, I am the applicant. I need to file an application with registrar. Registrar who shall forward the same to regional director along with the comments. Application plus comments. Now regional director will verify my application, and if he thinks that okay, compounding is possible, then he will compound all the offenses by levying fine on me. So how much amount I need to pay money? minimum fine prescribed in the section, minimum fine amount prescribed in that section, maximum fine amount prescribed in the section. Suppose I committed one offense, the penalty will be 10,000 rupees minimum, maximum 1 lakh rupee. Minimum 10,000, maximum 1 lakh rupee. So regional director levy penalty on me or levy fine on me, minimum 10,000 rupees, maximum 1 lakh rupee. Sir, what advantage you are getting, sir? Previously you need to pay same fine. Now also you are paying same fine. No, sir. The advantage is I can avoid prolonged litigation proceedings. I can come out of it quickly. That is the advantage. Understood? Now this compounding of offenses, once you utilize this benefit, once this benefit you utilize, then next 3 years you can't get the benefit of compounding of offenses. Cooling period 3 years. That means, very next day or very next year you committed same offense. Now are you entitled to the benefit of compounding of offenses? The answer is no. The answer is no. Once you enjoy the benefit of compounding of offenses, next 3 years you are not entitled to any benefit under section 39. And who is having power to compound your offenses? Regional director. So regional director, by passing an order, yes, he will compound your offenses. Once you get the order, you need to intimate the same with registrar. You need to intimate the same with registrar. Seema. Notwithstanding anything contained in the Code of Criminal Procedure 1973, the regional director or any other officer not below the rank of regional director authorized by central government may compound any offense under this act. So only regional director or a rank above regional director, above regional director, you will find central government. You will find central government. Only these parties can compound your offenses. Sir, which kind of offenses, sir? Offense which is punishable with fine only. An offense which is punishable with fine only can be compromised. By collecting from a person reasonably suspected of having committed the offense, a sum which may extend to the amount of maximum fine provided for the offense, but shall not be lower than minimum amount provided for the offense. So minimum, how much amount? Fine amount prescribed in that offense, in that respective provision. Maximum, how much? Fine amount which was prescribed in that respective section. Suppose I failed to maintain books of accounts in double entry system. So what is the minimum fine and what is the maximum fine? So that much amount only, yes, a regional director can collect from me. And this benefit, once you exercise this benefit, next 3 years you cannot exercise benefit for similar offense. Next one, every application for compounding of an offense shall be made to registrar, who shall forward the same together with his comments thereon to the regional director. Next, where any offense is compounded under this section, whether before or after initiation of prosecution, initiation or institution of prosecution, intimation thereof shall be given to the registrar within a period of 7 days from the date on which offense is so compounded. Now all the prosecution proceedings shall stand discharged. That means, no need to continue legal proceedings. You can stop those legal proceedings. Where any offense is compounded before the institution of any prosecution, then no prosecution shall be instituted. Suppose prosecution instituted, now you entered into the compounding of offense. You want compounding of offenses. Then whatever prosecutions already initiated on you, already instituted on you, they stands discharged. Next one. So regional director or any officer not below the rank of regional director, while dealing with the proposal of compounding of an offense, may by an order direct any partner or designated partner or other employee of the LLP to file with the registrar on or payment of fees or additional fees as required to be paid under this act. So regional director may ask you to furnish additional information, may ask you to pay additional fees or payment of fees. So just follow the regional director's orders. If you comply regional director orders, that's it, no problem. But if you are not complying regional director orders, then your punishment will be doubled. Your punishment will be doubled. If you violate regional director order, then your punishment will be the twice the amount provided in the corresponding section in which punishment of such offense is provided. So once again, I'm telling you, compounding of offense, it's a benefit to avoid prolonged litigation proceedings. Understood? It's a settlement mechanism to come out of the prolonged litigation proceedings quickly. Next one. Provisions for Limited Liability Partnership Act regarding assignment and transfer of partnership interests. Seema, as a partner in LLP, I'm entitled to few rights. What are those rights? At the end of the year, if LLP earned profits, I'm entitled to get share in those profits. I'm entitled to get share in those profits. And important decisions. I'm having a right to be consulted. I'm having right to participate in meetings. I'm having a right to vote in those meetings with respect to proposals in that meeting. So these are the rights I had in the LLP being a partner. Now, can I transfer these rights? Yes, I can transfer these rights voluntarily or mandatorily. Voluntarily. Suppose I want to sell my stake in the LLP, I can sell it in accordance with LLP agreement only. That means, with the consent of partners in the LLP, I can sell my stake to either existing partners or outside persons. But it should be according to LLP agreement only. Mandatory transfer means, what? I become insolvent. Imagine I become insolvent. Now, all my properties, all my liabilities shall be assigned to official assignee. Accordingly, my interest in this LLP shall also be assigned to the official assignee. But the person, whoever receiving this interest, will get the right to share in the profits, but they won't get any right to participate in the management, no right to conduct of the activities of the LLP or access information concerning the transactions of LLP. Example, I'm having a 10% stake in LLP. I want loan. I went to SBI. I told I want 10 lakhs loan. SBI told me, sir, assign mortgage any property or pledge any property. They told. I told no. I'm having interest in LLP. I can assign this interest in favor of you. So assignment completed. So as long as I repay the loan, SBI can assume, SBI can assume as a owner of that interest. Once I repay the loan, I can get back my stake in the LLP. Now the point is, during this time period, SBI had no right to participate in the management. SBI had no right to participate in management of the LLP. That is the meaning of this point. Next part, conversion. Very simple, very simple. See, a general partnership firm wants to convert into LLP, or a private company wants to get converted into LLP, or an unlisted public company wants to get converted into LLP. Then what provisions they need to comply? In case of firm to LLP, follow Schedule 2. Private company to LLP, follow Schedule 3. Unlisted public company LLP, follow Schedule 4. And accordingly file documents with the registrar. So now what registrar will do? Registrar shall register the documents and issue a certificate of registration. Once you receive certificate of registration, communicate the same with your previous registrars. Suppose partnership firm, communicate with registrar of firms. Sir, till today I'm a partnership, I'm a general partnership firm, but now I was converted into LLP. Sir, till today I'm a private company, now I'm converted into LLP. Or till today I'm a unlisted public company, now converted to LLP. So communicate these matters with the previous registrars, so they will register this same. Now all the members of a company and all the partners of general partnership firm becomes partners of LLP, and all the assets and liabilities of a company or general partnership firm becomes assets and liabilities of LLP. So whatever previous obligations they are having, those obligations shall continue without any effect. Sir, example, sir, Sima, myself a private company borrowed 80 lakhs from SBI. How much amount I borrowed? 80 lakhs I borrowed from SBI. Today I filed documents for conversion, and registrar approved my document. Registrar registered the document, and registrar issued me a certificate of incorporation with LLP identification number. So at the time of borrowing money, I'm a company. Right now, I'm LLP. Understood? Now, as LLP, am I having obligation with respect to that loan amount or not? The answer is no effect. You are still liable to that borrowed amount. Sir, private company borrowed that amount, sir. It's not LLP. Private company borrowed that amount, but the private company converted into LLP, right? So whatever liabilities existing on the date of conversion, those liabilities, those obligations, those debts shall still continue even you got converted into a limited liability partnership. Understood, ma? So that's what effect of registration. Effect of registration. I told you, right? All the assets of a partnership firm or a private company or a unlisted public company shall become assets and liabilities of limited liability partnership. Next one. Assignment. Next one. Compromise arrangements or reconstruction of limited liability partnerships. This is another important area. In fact, this is the last area of our LLP chapter. Compromise arrangements of LLP. Last important area. So try to concentrate for the next 5 to 10 minutes. Very, very important point. Very, very important point. Sima, the word compromise or arrangement comes into the picture only when they need settlement. Just now I told you compounding of offenses. It's a settlement mechanism, right? So same point, Sima. Our LLP. Just wait. Our LLP borrowed funds from banks. For example, Axis Bank, a Bank of Baroda, Canara Bank, next one SBI. It borrowed 4 crores from 4 banks, 1 crore, 1 crore, 1 crore. Okay, so total borrowings of LLP is how much? 4 crores. Today, LLP is not in a position to repay those amounts, LLP assets, for example, LLP is having assets of 3 crores, total loans 4 crores. All the partners contributed, their agreed amounts. All the partners agreed to, all the partners already contributed their agreed amounts. So partners liability is 0. So today LLP is having assets of 3 crores, whereas liabilities of 4 crores. So LLP business assets are not sufficient to discharge business liabilities. Now that LLP is having two options. One is liquidation and making settlement of all these creditors with the 3 crores. The other one is, reconstruction. So here what happens, both the parties, LLP creditors will enter into one compromise arrangement. So what is the result of this arrangement? See, LLP will communicate like this. My dear bankers, you give me 4 crores loan. Yes or no? Adding interest. 1 crore interest added. So total 5 crores I am liable to you. So I want a compromise arrangement. So according to this arrangement, what I'll do? Please waive off this interest amount. Please waive off this interest amount. So balance, how much amount will be there? 4 crores, right? In these 4 crores, immediately I'll pay you 2 crores. Immediately I'll pay you 2 crores. Balance 2 crores, I'll pay you after 1 year or 2 years. After 1 year or 2 years, I'll pay you the amount. And don't levy any interest on me for this time period. So I'm having assets of 3 crores, right? Out of these 3 crores, I'll pay you 2 crores immediately. Balance 1 crore. With this 1 crore, I will continue my business operations. Once again, I will continue my business operations. And I promise you, so after 1 year or 2 years, my position will be changed. And I'll pay you balance amount. So this is one type of compromise arrangement or other compromise arrangement. See, right now I'm having only 3 crores money. Total your liabilities, total my liabilities with respect to you is 5 crores. In that principal amount is 4 crores, interest amount is 1 crore. Please waive off interest. Balance 4 crores, I'll readily pay you 3 crores amount. So please settle my dues. Please make settlement of my dues. So this is nothing but, compromise or arrangement. So this is the sense of compromise or arrangement. Now the point is, for entering into the compromise or arrangements, there is a procedure. The procedure is either creditors or partners of LLP or LLP has to file application with a tribunal. Only tribunal is having power to confirm the compromise or arrangements. So the tribunal may, on the application of LLP or creditor or partner, in case of LLP is getting liquidated, then the liquidator. So on the application of these parties, tribunal may conduct a meeting of the creditors or partners of the LLP. If majority representing 3/4 in value, majority, suppose 10 persons are there, 10 creditors are there, majority means more than half. So more than half means here 6. representing 3/4 value. Suppose total outstanding liabilities is 4 crores. 3/4 means 4 crores into 3 by 4, that means 3 crores. Now 6 persons representing 3 crores rupees, 6 persons representing 3 crores rupees have to agree for compromise or arrangements. Then only compromise or arrangement shall be approved by the tribunal. If sanctioned by the tribunal by order, binding on all creditors, on partners, LLP, as the case may be. See here, partners may enter into compromise arrangement or creditors may enter into compromise arrangement. I'm giving you example of creditors compromise. So majority of the creditors representing 3/4 in value, if they agree to compromise arrangement, then tribunal shall pass an order confirming the compromise arrangement. But tribunal, before passing the order, it will verify the all the material, it will ensure the financial position of the LLP. Financial position of the LLP. For that, partners of the LLP shall file an affidavit which contains material facts relating to the LLP, including latest financial position of the LLP and the pendency of any investigation proceedings in relation to the LLP. An order made by the tribunal under subsection 2 shall be filed by LLP with registrar within 30 days. Whatever order passed by the tribunal, it shall be communicated with registrar within 30 days after making such an order and shall have effect only after it is so filed. So compromise arrangements come into the force only after you register with registrar. And what is the time period for filing with registrar? 30 days from the date of order. Any default, then punishment. So designated partner, LLP punishment, 10,000 rupees penalty. If it is continuing default, then 100 per day, 1 lakh for LLP, maximum 1 lakh for LLP, 50,000 for designated partner. The tribunal may at any time after an application has been made to it under subsection say the commencement or continuation of any suit or proceedings against the LLP. So simply, tribunal is having all the powers to supervise the compromise arrangements. And if tribunal thinks that this compromise arrangement is not working out, is not going satisfactorily, in that case tribunal is having an order to tribunal is having a power to make an order for winding up of LLP. Tribunal is having power to make an order for winding up of LLP when if this compromise or arrangement which was sanctioned under section 60 can't be worked satisfactorily. If it can't be worked out satisfactorily, then it is having a power to make an order for liquidation of LLP. Understood? Next one, amalgamation. This is external reconstruction. What I discussed with you so far is internal reconstruction. Even in your account subject, you have solved problems regarding internal reconstruction. So far I discussed with you internal reconstruction, and now this is external reconstruction. External reconstruction means our LLP is getting dissolved or our LLP is merged with another LLP. Amalgamation of LLPs. Two LLPs come together and finally one LLP comes into the picture. Now the transfer or LLP, that means our LLP's assets, our LLP liabilities will be transferred to transferee LLP. Transferee LLP, that is another limited liability partnership. We call it as transferee LLP. Now all the assets, just now I told you, all the properties, liabilities will be transferred. Next one, legal proceedings. Legal proceedings, whatever legal proceedings are there on my LLP, all those legal proceedings shall be continued against transferee LLP. Next one, dissolution, or it may order for dissolution without winding up of any transfer or LLP. Directly dissolution, simply removal of the partners of that LLP, removal of designated partners of the LLP, ordering for dissolution, or any provisions, the provision to be made for any person within such time in such manner as tribunal directs dissent from the compromise or arrangement, or tribunal is also empowered to pass incidental or consequential or supplemental matters as are necessary to secure that the reconstruction or amalgamation shall be fully and effectively carried out. So tribunal is having powers with respect to any LLP regarding facilitating reconstruction or amalgamation of LLPs. First one, it can order for winding up, dissolution. Next one, it can order for amalgamation with another LLP. Next one, removal of the management, removal of the partners. Or it can pass such other orders which are necessary for carrying out reconstruction or amalgamation proceedings. Understood, ma? Everyone. And these points already covered, you ma. I already covered. Assets of a transfer of LLP becomes assets of a transferee LLP. Next one, within 30 days after making of an order under this section, every LLP in relation to which the order is made shall cause a certified copy thereof to be filed with registrar for registration. So whatever order LLP is getting from tribunal, so all these orders shall be registered with ROC. What is the time limit? 30 days. In case of delay, same punishment, ma. In case of delay, same punishment. LLP designated partner, 10,000 rupees penalty. In case of continuing contravention, 100 per day. Subject to maximum of 1 lakh rupees for LLP, 50,000 rupees for every designated partner. I hope it is clear. Next one, small concepts, ma. Winding up and dissolution. So yes, LLP can be closed either voluntarily or based on the order of the tribunal. See, why tribunal will order for winding up of the LLP? Why tribunal will order for winding up of the LLP? First LLP decided, majority of the partners agree to dissolve it. So they can file an application with tribunal. Tribunal may wound up the LLP by passing an order. One case. Second case, I told you already, number of partners, minimum 2 partners should be present at any point of time. Suppose number of partners fallen below 2 and that LLP continued business operations for a period more than 6 months. Now also tribunal will order for liquidation of LLP, winding up of LLP. Suppose, and next point, tribunal comes to know that LLP is acting against to the interest of national sovereignty and integrity. So it is carrying activities which are opposed to public policy. If we allow LLP, our country's interest, our Indian country, India's interest with respect to sovereignty, integrity is getting affected. In that case also, tribunal is having a power to order for winding up of LLP. Next one, if LLP has made a default in filing with registrar, the statement of account and solvency, that is form 8, and annual return form 11. So if LLP is making defaults in filing with the registrar for 5 consecutive financial years, 5 consecutive financial years, if LLP is not filing these forms with registrar, then tribunal is having power to order for winding up of LLP. Next one, if the tribunal is of opinion that it is just and equitable that LLP be wound up. Suppose partners are not agreeing to the terms and conditions. Partners are not following LLP agreement. Partners, they are very much worried about the future of LLP. Simply, you can carry business operations under LLP if all partners think the subject in same sense. If they are not agreeing to the terms, if they are not giving approval to any proposal, now on just and equitable grounds, tribunal may order for winding up of the LLP. Next one, last question. Business transactions of partner with LLP. Yes, any partner of LLP can do business with LLP. In case of general partnership firm, partner is prohibited from carrying business operations with partnership. Suppose, I'm a partner in partnership firm. Now I can't sell my goods to partnership at profit. Even if I sell goods at profit, I should surrender that profit to partnership firm. Coming to LLP, I can trade with LLP. There is no restriction. Next one, application of provisions of the Companies Act. If central government decides to apply provisions of Companies Act to the LLP, then first it should draft the proposal. It should read out the proposal in both the houses of the parliament. Understood? Now within the period of 30 days, it should get approval from both the houses of the parliament. Suppose both the houses of the parliament disapproved the bill. In that case, you can't apply the provisions of the bill to the LLP. Suppose within the prescribed period, if both the houses gave approval to the bill, now you can apply the provisions that were mentioned in the bill to the LLP. Next one, payment of additional fees. See, as a LLP, it is required to file form 8 and form 11 with the registrar. If it is filing forms within due date, payment of normal fees is sufficient. If you are filing these forms after due date, In addition to normal fees, that LLP, that a designated partner, has to pay additional fees. Understood? So if you comply provisions within a due date, if you file these forms within due date, payment of normal fees is sufficient. If you are filing these forms after due date, then central government is having power to levy additional fees. LLP designated partner is liable to pay additional fees. Next one, enhanced punishment. Under compounding of offenses, just now I told you. So you violated the orders of regional director. In that case, your punishment will be enhanced. So the punishment will be twice. Yes or no? Yes or no? Imprisonment, except imprisonment, all other fines, ma. And even in case of repetitive offenses, you are committing these offenses repetitively. In that case, not with respect to imprisonment, but with respect to fine. With respect to fine, the fine amount can be doubled. See, ma, be punishable with offense. Just to follow me carefully. For the second or subsequent offense, the punishable with imprisonment as provided. But in case of offenses for which fine is prescribed, either along with imprisonment or without imprisonment, then fine amount shall be the twice the amount of the fine for such offense. Suppose in that section, fine is 10,000 rupees. First time you committed offense, you paid 10,000 rupees. Second time also you committed same offense. Third time also you are committing the same offense. Second time, third time, the fine amount can be doubled. That means 20,000 rupees. You need to pay 20,000 rupees for that offense. Understood? Everyone. So with this, marathon of limited liability partnership is completed. So distinction between LLP and partnership, LLP and company, you can read it on your own. But in the beginning only, I told you the primary and the main differences between LLP and a company, LLP and partnership. Did you remember? I told you, right? Benefits of both company and LLP form parts of LLP. Sorry, benefits of general partnership and benefits of company you can find in LLP. Is it clear, ma? So with this, marathon of LLP is completed. First, I discussed with you, incorporation procedure. Next, designated partner. Next, books of accounts. Next one, compounding of offenses. And finally, I discussed with you compromise arrangements and winding up of LLP. So in this manner only, you prepare for exams. Our next topic of marathon is the General Clauses Act 1897. The expected weightage of this chapter in your examination is 8 to 10 marks. You can expect 8 to 10 marks from this chapter. Difficulty point of view, moderate chapter. The difficulty rating is moderate. Before I start marathon of General Clauses Act, let me tell you one point. CA interlevel, you are having a Income Tax Act, GST Act, Companies Act, Limited Liability Partnership Act, and Foreign Exchange Management Act. Yes or no? And if you observe these 5 acts carefully, one thing is common in all these 5 acts. The common thing is section 2. Section 2 contains definitions. Understood? So there are some keywords which were used repetitively in the statute, and these keywords are to be defined. Instead of defining all these keywords in all the sections wherever we use the word, let's define them under one roof. That is section 2. Suppose you take Companies Act. The word company is used almost in all the sections. Instead of defining the word company in all sections, let's define the word company under one roof, that is section 2. Just imagine, in the absence of section 2, if we start defining the words in all the sections wherever we use the word, the length of the law gets increased, the size of the law gets increased. Yes or no? So to avoid that situation, we are having definition clauses under one roof, that is section 2. The object of having definition clause is to avoid necessity of frequent repetitions in describing the word or expression we used in the entire subject. Understood? Now, there are some general words which are very common in all laws, in all acts. And these general words, if we start defining all these general words in each and every statute, then also the statute length gets increased. So these general words should be defined under one roof, and lawmakers introduced one roof, that is General Clauses Act 1897, in order to define all the general words which were not defined in other Indian laws. Understood? See, General Clauses Act. Here clause refers to word or group of words. Word or group of words that have subject, contain subject, verb, object, and have a meaningful relation. So study of general clauses is all about study of general words. Understood? Let me give you one example. We are having definition to the government company. We are having definition to the word government company. So government company is a company in which at least 51% of paid up share capital held by central government, state government, one or more state governments, and combination of central government and state government or state governments. Yes or no? Then what about government? So what is meant by government? What is meant by central government? See, the word central government is common in all these 5 statutes. Yes or no? We have used the word central government in LLP, Companies Act, Foreign Exchange Management Act. Now, what is central government? Who comes under central government? So, all these general words were defined under one roof. That roof is General Clauses Act 1897. So, I can call this chapter as definition clause to all the Indian laws. Understood? So, this is an act to support all other Indian acts. And this General Clauses Act 1897 was enacted on 11th March 1897 to consolidate and extend the General Clauses Act 1868 and 1887. See, the present General Clauses Act 1897 is not first General Clauses Act. For the first time, General Clauses Act was introduced in the year 1868. It gave some 10 definitions. Imagine it gave some 10 definitions. Later, the lawmakers thought that this General Clauses Act is not sufficient. And in the place of General Clauses Act 1868, they brought new act, General Clauses Act 1887. And General Clauses Act 1887 defined some 10 words. Later, same lawmakers thought that yes, this General Clauses Act 1887 is not appropriate to the present situation. And they brought one more new act. That new act is General Clauses Act 1897 in the place of General Clauses Act 1887. Now the point is the definitions which were previously defined in General Clauses Act 1868 and in General Clauses Act 1887 were continued under our new act General Clauses Act 1897. That means the definitions which were defined in 1868 will have the effect from 1868 onwards. That's what we are using the word extend the General Clauses Act 1868 and 1887. So we are extending the definitions of General Clauses Act 1868 and 1887 from 1868 onwards, from 1887 onwards. The General Clauses Act 1897 contains definitions of certain terms and general principles of interpretation. Seema, basically this chapter is of 2 parts. Part 1 definitions, part 2 general principles of interpretation and construction. The general definitions provided are applicable to all central acts and regulations in the absence of definition of a particular word in any central act or regulation. See, what is central act? I'll discuss with you shortly. Just wait. So whatever the general definitions provided in this General Clauses Act are applicable to all the central acts in the absence of the definition in the particular statute. Understood? Suppose financial year definition is there in Companies Act and financial year definition is there in General Clauses Act. Now, which definition we should follow, sir? If you are a company, follow Companies Act. Apply the definition of financial year as defined in Companies Act. So, don't follow financial year definition as per General Clauses Act. Now, coming to the word government is not defined in Companies Act. So, now what is the government? Come to General Clauses Act. Read the definition of General Clauses Act, government definition, and apply the same. The General Clauses Act 1897 also comes for a rescue in the absence of clear definition in the special enactments and where there is a conflict between pre-constitutional laws and post-constitutional laws. As you all know, we got Constitution on 26th January 1950. So laws enacted after Constitution, we call them as post-constitutional laws. Laws enacted before Constitution of India, we call them as pre-constitutional laws. So General Clauses Act resolves the conflicts between pre-constitutional laws and post-constitutional laws. The Act gives a clear suggestion for conflicting provisions and differentiates the legislation according to the commencement and enforcement to avoid uncertainty. Sometimes you will find, 2 provisions which are conflict in nature. So one provision, if you apply one provision, the other provision gets deviated. So which provision we should apply? Which provision we should give importance? So such kind of disputes, yes, we can resolve using General Clauses Act. General Clauses Act provides the clear guidance, clear suggestion. So with respect to with respect to the provision we should implement in each and every situation. Next one, object, purpose, and importance of General Clauses Act. See, there are four main objects. One is shorten the language of central acts. Shorten the language of central acts. Some 60 definitions are there in General Clauses Act. In the absence of General Clauses Act, we need to define all these 60 words in all central acts. Now imagine the length of law gets increased. Yes or no? The length of central acts automatically gets increased. Now defining all these 60 words in General Clauses Act, we can reduce the language of other central acts. Next, to provide as far as possible for uniformity of expression in central acts. If we have common definitions, we can achieve the objective of uniformity of expression in central acts. For this, I'll give you one example. The word body corporate is defined differently in Companies Act and it is defined differently in LLP Act. In LLP Marathon, I covered the definition of body corporate. Actually, as per Companies Act, body corporate includes company incorporated outside India. But coming to the body corporate in LLP, body corporate means company as defined in Section 2, Clause 20 of Companies Act, and it includes LLP incorporated outside India, LLP incorporated under this Act, companies incorporated outside India. Now, if you observe carefully these two definitions, uniformity of expression is lacking. Understood? Uniformity of expression is lacking. Now, if we have a common definition with respect to both the acts, we can achieve the objective of uniformity of expression. That means we can apply the same definition in all the statutes. Next one, to state explicitly certain convenient rules for construction and interpretation of central acts. Yes, General Clauses Act provides principles of interpretation and construction. Next one, to guard against the slips and oversights by importing into every act certain common form clauses which otherwise ought to be inserted in every central act. In the absence of General Clauses Act, the provisions of General Clauses Act we need to introduce in each and every central act. So this act is providing, this act helping us against slips and oversights. Next one, applicability of General Clauses Act. All central acts will have territorial applicability, territorial extent. Suppose you take Companies Act, it is applicable to whole of India. You take Contract Act, it is applicable to whole of India. Initially, whole of India excluding Jammu and Kashmir. But after abolition of Article 370, so what happened? So all the central acts were made applicable to whole of India. Yes or no? Now this General Clauses Act, coming to the territorial extent, it is not having any particular territorial extent clause. Its applicability depends on applicability of central act. If a particular central act is applicable to whole of India, then General Clauses Act in relation to central act is applicable to whole of India. Suppose a particular statute is applicable to whole of India excluding Jammu and Kashmir. In that case, General Clauses Act in relation to that central act, in relation to that particular central act is applicable to whole of India excluding Jammu and Kashmir. So the territorial extent of General Clauses Act depends upon territorial extent of central act. Now, what is a central act, sir? What is a central act? Central act means act of Indian Parliament. Right now we are having Constitution of India. As per Constitution of India, Act of Parliament is Central Act. But we are not having Constitution from the beginning of our country. We had Constitution. We introduced the Constitution in the year 1950. So before 1950, we are not having Constitution. So before 1950, Central Act means Act of Dominion Legislature. So Acts of Dominion Legislature passed between 15th August 1947 and 26 January 1950 is also a central act. Example, Chartered Accountants Act 1949. Next one, acts passed before commencement of the Constitution by the Governor General in Council or the Governor General acting in the legislative capacity. Acting in the legislative capacity, you all know we are having three wings: legislative, executive, judiciary. Role of legislative is framing the laws. Role of executive is implementing the laws. Role of judiciary is interpreting the laws. Okay, so if you look into the history, on 26 January 1950 we got Constitution. We brought Constitution of India. On or after this date, Central Act means Act of Parliament. Act of Parliament. and we got independence on 15th August 1947. So the time period, between 15th August and 26th January 1950. So during this time period, we had a Dominion of India. We had Dominion of India, Dominion legislature. In fact, Dominion legislature. So I can call it as semi-independent status. We got complete independence, on 26th January 1950. We celebrate it as Republic Day, as you all know, yes or no? So the time period between 15th August 1947 and 26th January 1950, yes, we are in the semi-independent position. So we are having Dominion legislature. Now, Act of Dominion legislature is also a central act. Before 1947, so take Indian Contract Act 1872, Negotiable Instruments Act 1881. So before independence, yes, act passed by the Governor General of the Council or Governor General acting in a legislative capacity is also a central act. So simply central act means Act of Indian Parliament, Act of Dominion Legislature, Act passed by the Governor General in Council or Governor General acting in a legislative capacity before the commencement of the Constitution. Is it clear? Next one, preamble. See, every act has a preamble which expresses the scope, object, and purpose of the act. The broader outline regarding applicability of a central act, you will get it from preamble. Take a preamble of Companies Act for the time being. The preamble of Companies Act states that an act to consolidate and amend the laws relating to the companies. So previously we are having Companies Act 1956, Companies Act 1913, and there are companies which were incorporated under Companies Act 1913. There are some companies which were incorporated under Companies Act 1956. Now all these companies are required to follow Companies Act 2013. So that thing we are getting clarity from the preamble. So this act is applicable to the companies, not only new companies but also existing companies. So if you have any doubt with respect to any provision, if there is any ambiguity in understanding any provision of the act, just go through the preamble. So preamble is accepted as an aid to construction of the act. Simply to understand the provisions of the act, you can go through preamble. You can accept preamble. Suppose you take Negotiable Instruments Act. The preamble of Negotiable Instruments Act is an act to define and amend the laws relating to promissory notes, bill of exchange, checks. Generally, negotiable instrument means an instrument which is negotiable freely. Instrument means a written document. See, a written document capable of creating rights and obligations on the parties thereto. And if that written document is freely transferable, then we call that document as negotiable instrument. So the meaning of negotiable instrument, if you observe the meaning of negotiable instrument, any written document capable of creating rights and obligations on the parties thereto, and if it is freely transferable, it is a negotiable instrument. Understood? So looking at the meaning, railway receipt, bill of lading, bearer debenture, share warrants, all these instruments are also treated as negotiable instruments. But the point, Negotiable Instruments Act is not applicable to bill of lading, share warrant, bearer debenture. Understood? Railway receipt. Why? If you look at the preamble, it is very clear. This particular act is applicable only to promissory note, bill of exchange, check. So whenever you are reading the provision, whenever you are having an ambiguity whether this act is applicable to those instruments or not, just go through the preamble. So preamble will remove your ambiguity. However, if there is any conflict between preamble and provisions of the act, then preamble does not override the plain provisions of the act. That means provisions of the act overrides preamble. Provisions of the act overrides the preamble. I'll give you one small example. Companies Act. Basically, it is applicable to companies. Yes or no? What is a company? Company means company incorporated under present act, Companies Act 2013 or previous company law. Now we are having a separate chapter with respect to a company incorporated outside India. Foreign company. The foreign company is a company incorporated outside India. It is not incorporated in India. So as per the definition, foreign company is not a company. Accordingly, Companies Act should not apply to the foreign companies. But the point is, as per the preamble, I'm telling you, as per the preamble, we should not apply our Indian Companies Act to the foreign companies. but there is a separate chapter for companies incorporated outside India. Now there arises ambiguity. There arises a confusion. Sir, provisions of Companies Act is speaking about foreign company, whereas preamble is speaking about Indian company. Now which one I should follow, sir? Follow provisions of the Companies Act. In case of conflict between preamble and provisions of Act, follow provisions of the Act. If the provisions of Act are not clear, there is some kind of ambiguity, then read the preamble, apply the preamble as an aid of construction of the Act. Next one, as you all know, Act means it's a bill passed by both the houses of the Parliament. So in this entire chapter, Act refers to Central Act. Understood? Act is a bill passed by both the houses of the Parliament, Lok Sabha, Rajya Sabha, and finally assented by the President. That means approved by the President. Next one, definitions. I already told you, ma. See, the object of definition clause is to avoid the necessity of frequent repetitions in describing all the subject matter to which the word or expression so defined is intended to apply. However, if there may be words which are not defined in the definitions of the Act, then the meaning of such words may be taken from General Clauses Act 1897. Suppose the Act is defining the word and General Clauses Act is also defining the word, then follow respective acts. If a Central Act is silent with respect to a word and that word is defined under General Clauses Act 1897, then follow the definition which is mentioned in General Clauses Act 1897. Next one, means, includes, means and includes. So here we are having three types of definitions: means, includes, means and includes. Some definitions use word means. Such definitions are exhaustive definitions, complete definitions. The definition exactly define the term. So look at the definition of company. Company means company incorporated under Companies Act 2013 or under any previous company law. So here the definition is defining the word company and it is complete in all aspects. Understood? The second type of definition is includes. So second type, some definition uses the word includes. So here, whenever the definition is using the word includes, it is not defining the word. In fact, it is providing the list of items covered by the definition. And such definitions are inclusive in nature. They are not exhaustive in nature. They are not complete in all aspects. They are inclusive in nature. For the time being, take definition of dividend. So definition of dividend, dividend includes interim dividend. Here the definition of the dividend is not defining the word dividend. In fact, it is providing the list. Dividend includes interim dividend. So the essence of the definition, whatever the provisions you need to follow while declaring dividend, you need to follow the same provisions with respect to declaration of interim dividend also, unless otherwise specified. So whatever provisions are applicable to final dividend, the same provisions are applicable to interim dividend. I told you there are few exceptions, like final dividend is declared by the members, interim dividend is declared by the directors. That's what I told you. Unless otherwise stated, whatever the provisions are applicable to dividend are equally applicable to interim dividend. Next one, debenture. Debenture includes debenture stock, bonds or any other instrument of the company. Now, company decided to issue debentures, then it is required to follow provisions of Companies Act section 71. Suppose company decided to issue debenture stock, then also you need to follow same provisions. Company decided to issue bonds, then also you need to follow same provisions. Understood, everyone? And body corporate definition. Body corporate includes company incorporated outside India. See, the definitions which use word includes will not define the term. In fact, it provides the list of items covered by the term. Clear? Next, third category of definitions. These definitions uses the words means and includes. Example, prospectus. Prospectus means any document described and issued as a prospectus, and prospectus includes shell prospectus, red herring prospectus, deemed prospectus. Understood? So these kind of definitions are again inclusive in nature. They're not exhaustive. So here, you'll find exhaustive category. So prospectus means any document described and issued as prospectus. Completed. but it also contains inclusive nature. It includes shell prospectus, red herring prospectus, and deemed prospectus. Understood? So finally, these definitions are in extensive nature. So how many categories of definitions we are having? 3 categories. Definitions use word means or exhaustive in nature. Definitions use word includes or inclusive in nature. Definitions use words means and inclusive includes, it is both exhaustive as well as inclusive, but conclusively it is inclusive in nature. Next one, shall and may. Shall and may. You all know shall is a mandatory thing. Shall. If you use word shall in any statement, so you have to comply that statement. You have to comply the direction. You are having an obligation. And the word may is having a directory meaning. So using your discretionary powers, you can use it, or you can do it or you cannot do it. Are you all getting my point, students? Everyone. So shall is a mandatory thing, may is a directory thing. But sometimes we should understand may as shall. We should understand shall as may. So we need to use these words interchangeably. Sometimes we should understand may as shall. Sometimes we should understand shall as may. I'll give you 2 examples. Section 3 of Companies Act states that a company may be formed for any lawful purpose. Now, reading this statement, few persons can understand this statement in this manner. Company may be formed for any lawful purpose. That means a company may also be formed for unlawful purpose. Yes or no? Yes or no? To avoid that confusion, here you should understand may as shall. You should understand may as shall. So company shall be formed only for lawful purpose. Next one, shall can be construed as may. Suppose if you read section 143 subsection 6, powers and duties of auditor, the C&AG shall within 60 days of audit of government companies supplement the audit. So the word used in section 143 subsection 6 is C&AG shall. So now you think that it is having, it is a duty of C&AG to conduct supplementary audit. But the point is, there you should understand shall as may. C&AG shall within 60 days of audit of government company has right to supplement the audit. That means shall, when it is accompanied with right, you should understand shall as may. Once again, I'm telling you, in a statement, if you find the word shall and the word shall is accompanied with a right, then you should understand shall as may. Is it clear? Just go through section 143 subsection 6, you'll get clarity. Next one, definitions. First definition, act. Generally act means act of the parliament, but here in general clauses act means activity. And the definition act is defined in a negative manner. The definition act was defined in negative manner. Just look at the definition. Act used with reference to an offense or a civil wrong shall include series of acts, and the words which refer to acts done extend also to illegal omissions. So here act means an offense or civil wrong, and act includes series of acts, and the words which refers to acts done extend also to illegal omissions. So 4 words: offense, civil wrong, series of acts, illegal omissions. Act means offense, civil wrong, series of acts, illegal omissions. Suppose you kidnapped one person, one rich party, and you called the family members of that person, kidnapped person, and you are asking them, so come on, immediately send 2 crores money or else I'm going to kill this person. That means you are making threatening calls. So kidnap is an offense. It is a civil wrong. And you are also performing series of acts. So you are making threatening calls and you are not providing food items to the kidnapped person. You omitted supplying food items to the kidnapped person. As a result, that person died. Now, whatever you did, it comes under act. Accordingly, you will be punished. Understood? So, illegal omissions also comes under the definition of act. Take company point. Take company. Each and every company is required to file annual returns and copy of financial statements with ROC. Mandatory thing. In case company fails to file annual returns and financial statements, then board of directors will get punishment. Officer in default will get punishment. See, this is an omission and which is illegal. So illegal omissions also comes under the definition of the act. Understood? Everyone. Everyone. So act here refers to offense, civil wrong, series of acts, illegal omissions. Remember these four words, my very, very important words. Act means offense, civil wrong, series of acts, illegal omissions. Next one, affidavit. Affidavit shall include affirmation and declaration in the case of persons by law allowed to affirm or declare instead of swearing. See, the word affidavit is used in Companies Act. Initially, at the time of incorporation, the promoters of the company is required to submit. The promoters of the company are required to submit affidavit. Later, the word affidavit was removed and the word declaration was inserted. Okay. So what is an affidavit, sir? It's a written document containing the facts. It is a written document containing the facts, and you are confirming the facts. Right now, elections are going on. Yes or no? So this is elections phase, and the candidate who wants to contest in the elections, so he is required to present affidavit. In that affidavit, he need to provide the information regarding his assets, his liabilities, and pending proceedings, pending legal proceedings. So he will make a note of all these points and he will declare that all the facts furnished by me is correct and complete. That is nothing but affidavit. So affidavit shall include affirmation and declaration. So first of all, affidavit is an inclusive definition. Here we are not defining the word affidavit. Here we are providing the list of items covered by the definition affidavit. Understood? Affidavit shall include affirmation and declaration. In the case of persons by law allowed to affirm or declare instead of swearing. So instead of making oral promises, if you present the same matter in a document and if you affirm the fact, if you confirm the fact, it becomes affidavit. And not all persons can give affidavit. Only the person allowed by the law can give affidavit. Suppose, a criminal who was sent to the jail, he can't give affidavit. Is not a person allowed by the law to give affidavit. Understood? Everyone. Next one, Central Act. Just now I told you, Central Act means Act of the Parliament, Act of the Dominion Legislature, Act passed by the Governor General in Council or Governor General acting in legislative capacity before commencement of the Constitution of India. So three things comes under Central Act. What are those three things? Act of Parliament, Act of Dominion Legislature, Act passed by the Governor General in Council or Governor General acting in the legislative capacity before commencement of Constitution. Next one, Central Government. So copy the definition. Central government means person having power to pass the laws. Means the person who has power to approve the law or pass the law. As I told you, we are having three wings: legislative wing, executive wing, judiciary wing. Legislative wing take care of framing the laws. Executive wing take care of implementation of laws. Judiciary wing take care of interpretation of laws. Understood? So here central government, I'm defining central government in legislative point of view. Legislative. What is the role of legislative? Framing the laws. Yes or no? So here central government means person who has power to approve the law. And you all know we are having two phases. In our history, we are having two phases. One is after Constitution of India, before Constitution of India. So before Constitution of India, central government means Governor General in Council. Governor General in Council. One second. Governor General in Council and includes principal government in relation to government provinces. Includes chief commissioners in relation to chief commissioner provinces. Right now we are having states. India is union of states and territories. But before independence, we are having provinces. Understood? So before independence, central government means Governor General in Council and includes principal government in relation to government provinces. Chief Commissioner in relation to Chief Commissioner provinces. After Constitution of India, central government means President of India. President of India, and includes state government in relation to state, administrator or lieutenant governor in relation to territories, in relation to union territories. Next one, chief commissioners in relation to part C states. Part C states. See, before Constitution of India, who comes under central government? Governor General in Council, principal government, chief commissioner. After Constitution of India, who comes under central government? Who comes in the definition of central government? President of India, state government in relation to state, administrator or lieutenant governor in relation to union territories, chief commissioners in relation to part C states. Our India at the time of independence is of four states. It had four states: part A, part B, part C, part D. Part A states are governed by British India. Part A states were ruled by British India. Part B states were ruled by Raj Pramukh. These are princely states. These were ruled by Raj Pramukh. Raj Pramukh collected taxes from the residents, and he will pay some portion of taxes to Britishers. So Britishers allowed Raj Pramukh to rule their princely states. Part C states, they were formerly princely states, but now under the control of chief commissioners. So Part C states are governed by chief commissioners appointed by British India, and Part D states covers Andaman and Nicobar Islands. Andaman and Nicobar Islands. Understood? So there are four different states in India at the time of independence: Part A, Part B, Part C, Part D. Now, coming to central government definition, as I told you, central government means a person who has power to approve the law. The central government before commencement of constitution means governor general in council, and includes principal government in relation to government of a province, acting within the scope of authority given to it under that subsection. Next one, in relation to chief commissioner provinces, the chief commissioner. Next one, after commencement of constitution, president. After commencement of constitution, central government means president, and includes state government with respect to government of a state. Particularly governor. The bills approved in the legislative assembly, legislative council will be sent to governor for the consent. So governor acting in the central government capacity will approve the state bills, state acts. Understood? So here, technically it is a governor. Next one, in relation to part C states, in relation to part C states, chief commissioner or lieutenant governor or governor of neighboring states in relation to union territories. Next one, administrator of union territory. Is it clear, ma? And then part A states, part B states, part C states, part D states. Just give one time reading. So nowhere it was, in the previous examinations, there is no question with respect to part A, part B, part C, part D states. But the definition of central government is somewhat important. You can easily remember the definition of central government looking at this chart. Clear? Everyone. Next, commencement. Commencement means coming into force. Simply, approving a bill in the parliament, president giving consent to the bill is not sufficient. You should bring the act into the force, and it is possible only through the commencement. Suppose, Finance Act 2024. It was approved in Lok Sabha, it was approved in Rajya Sabha, and it was also approved by the President of India. Unless you notify in the official gazette, unless you bring that act into the operation, that act won't have any legal effect. Understood? Only through commencement, a central act will come into the force. Next, document. Anything satisfying these four conditions, it becomes document, See, any matter written, expressed or described upon any substance. Here substance may be paper or substance may be metal. So something should be written or something should be expressed or something should be described on the substance by means of letters, figures, or by more than one of those means. So letters, you can see the document right now. So it is containing paragraphs, it is containing words. Figures, suppose sales of the company with respect to financial year 23-24, 600 crores. With respect to 22-23 financial year, 500 crores. Now this is also a document. So here, the matter was expressed or matter was written by means of figures. Not only letters, figures, but also, using a chart. Suppose, charts like this, comparing the performance of the company. Last year, yes, our turnover is 500 crores. This year, it was increased to 600 crores. Understood? Now, this will also become a document. This will also become a document. Understood? So, presenting information in any manner. Understood? Or expressing the information in any manner, then it becomes a document. Next condition, which is intended to be used at present or which may be used in future. So we are recording these matters in order to use this document at present or in future. Then we call the thing as document. So what are the four conditions the document should satisfy? Matter written or expressed or described on any substance by means of letters or figures or by more than one of those means, which is intended to be used or which may be used in future for the purpose of recording that matter, that becomes document. At the time of 1897, when General Clauses Act 1897 was enacted, we had only material documents. We didn't have any soft copies, right now we are having soft copies. Even a computer file becomes a document. Understood? Computer file, computer PDF document will also become a document. Next one, enactment. Enactment shall include regulation. Enactment shall include regulation of Bengal, regulation of Madras, regulation of Bombay Code. So before independence, we are having provinces, right? Bengal is one province, Madras is one province, Bombay is one province. Now enactment includes regulation of Bengal Code, Madras Code, Bombay Code. Rules and regulations are nothing but spices of legislation. The legislature, instead of enacting the same, itself delegates the power to other person. Whatever is enacted by the delegate of legislature is also enactment. Sima, our Companies Act 2013, Parliament through Companies Act 2013 is giving powers to central government to frame rules from time to time. Now the rules prescribed by the central government from time to time, now these rules will also be treated as enactment. Understood? So here enactment includes rules, regulations, notifications, circular, everything. So the delegate of legislature, so central government from time to time, if it is making rules, these rules will also be treated as enactment. Understood? So enactment means not only act. Enactment includes provisions in the act, regulations in the act, rules in the act. Next, financial year. Financial year shall mean the year commencing on first day of April, ends with 31st March. Understood? And the term year has defined under section 3 clause 66 as a year reckoned according to the British calendar. So here year refers to British calendar year. So don't take Telugu calendar, Hindi calendar. Understood? So our Telugu calendar is different. Hindi calendar is different. So starting date of the year is Ugadi. We celebrate first day as Ugadi. Yes or no? So let me correct if I'm wrong. Okay, fine. So here year refers to British calendar. Month refers to British months. January, February, March, April. That's it, ma. So financial year is a period of 12 months. Commencement date 1st April, end date 31st March. Clear? So financial year begins from 1st April, whereas year begins from 1st January. That is the difference between financial year and year. Next one, good faith. Good faith. A thing shall be deemed to be done in good faith where it is in fact done honestly, whether it is done negligently or not. So an act done honestly is said to be act in good faith. Is said to be act in good faith. If you are dishonest, then that act is not in good faith. Whether you are acting negligently or not, it is immaterial. According to the General Clauses Act good faith definition, doing an act honestly is treated as act done in good faith. But this definition is not applicable to Indian Contract Act. Indian Contract Act came before General Clauses Act 1897. So Indian Contract Act followed the definition of good faith which is given in this civil law. As per civil law, here good faith means doing an act honestly alone is not sufficient. You should act as a man of ordinary prudent. That means you should act with a due diligence. You have to take proper care and attention. Understood? So as per civil law, doing an act honestly alone is not sufficient. You have to do the acts in due care. So simply, an honest purchase made carelessly without making proper inquiries cannot be said to have been made in good faith so as to convey good title. So suppose you went to a seller, you want to purchase a thing. That person is holding a gun actually. So looking at that person, yes, we can come to a conclusion. This person is not a seller, he may be a thief. Now, if you are making purchase from that person, if you are acting honestly, so it is said to be good faith according to the provisions of General Clauses Act, but it is not said to be in good faith according to the civil law, according to the Indian Contract Act. So simply, whenever you saw the gun or whenever you saw the weapon, you should come out from that situation. If you're still continuing in that situation, if you make a honest purchase but carelessly, it is not said to be in good faith. Accordingly, you won't get any good title. Next definition, government. Government here includes both central government and state government. So the definition of government is very simple. Government equal to central government plus state government. Next one, government securities. Securities of the central government, securities of the state government comes under the definition of government securities. But the securities issued by Part B states will not come under government securities. Understood? Central government securities, state government securities comes under government securities. Whereas securities issued by government of Part B states will not come under the definition of government securities. Next one, immovable property, very very important definition. It was asked 3 times in the past. Not direct question, but practical question comes from this definition. Okay, so first of all, what is immovable property? Immovable property shall include land, benefits to arise out of land, things attached to the earth, things permanently fastened to anything attached to the earth. So land comes under immovable property definition. Next, benefits to arise out of land. Example, fruits, crops we are growing on the land. Until you separate from the land, they are treated as immovable properties. Now accordingly, you are growing fish in a river. Now you are having right to catch the fish. Now if you want to transfer that right, so whether the right is a movable property or immovable property, it is an immovable property. Why? You are deriving benefits from the land. That benefit is getting out of the land. So any benefit to arise out of land, it also becomes immovable property. Accordingly, right to catch fish, crops, fruits, flowers, everything comes under immovable property until you separate them. Once you separate them, once you cut the crops, once you separate them, now crops, fruits, fish becomes movable property. Are you all getting my point, students? Next, things attached to the earth. Example, building is also an immovable property. Things permanently fastened to anything attached to the earth. Suppose installation of machineries in factories. Till you install machineries in the factories, they are movable properties. Once you fix them, once you erect them, once you install them, that's it. They becomes immovable property. Not only plant and machinery, take air conditioner, take cupboards, doors. Once they are attached to the earth, they becomes immovable properties. Clear? Okay. So what are the 4 things covered by immovable property? Land, benefits arising out of land. Next, things attached to the earth. And last one, things permanently fastened to anything attached to the earth. Now, these air conditioners or cupboards or doors are attached to the building, which is already attached to the earth. Next, imprisonment. General Clauses Act is not defining the word imprisonment. In fact, it is giving reference to Indian Penal Code. According to Indian Penal Code, imprisonment is of 2 types. Rigorous imprisonment, simple imprisonment. In rigorous imprisonment, you will find prisoner will exercise some labor. He will work in case of rigorous imprisonment. and no work will be given in case of simple imprisonment. He will be sent to jail. That's it. Next one. All these definitions you can read it, ma. Yes, these are normal definitions and not yet tested. Not yet tested. So all the important definitions I already covered. Next, section 4. Section 4 is all about, applicability of foregoing definitions to the previous enactments. Tima, General Clauses Act 1868 was enacted on 3rd January 1868. Next, General Clauses Act 1887 was enacted on 14th January 1887. Later, General Clauses Act 1897 was enacted. Now, it was enacted on 11th March 1897. Now, the point is, a central act, suppose, Indian Penal Code, it came before 1868. Now, the definitions of General Clauses Act 1868 not applicable to Indian Penal Code. Why? This is before General Clauses Act 1868. Next one, Indian Contract Act, Negotiable Instruments Act. These two acts came between 1868 and 1887. Now, Indian Contract Act, Negotiable Instrument Act, suppose some definitions are not there, then they can take the help of General Clauses Act 1868. Understood? So the definitions of General Clauses Act 1868, you can see here: affidavit, immobile property, imprisonment, month, mobile property, oath, person, section, year. So these are the terms were defined in General Clauses Act 1868, and these definitions are applicable from 3rd January 1868 onwards. Even though these definitions are there in the part of 1897, actually these definitions coming to the force on 11th March. But the point is, these definitions were already defined by previous enactments. These definitions were already defined in previous enactments. So these particular definitions will come into force not from 11th March 1897, but from 3rd January 1868. And some central acts were introduced between 1887 and 1897. Now these central acts can follow the definitions of General Clauses Act 1887 and General Clauses Act 1868. So this section 4 is all about application of foregoing definitions to the previous enactments. Even you find the word definition in General Clauses Act 1897, but the first time the word affidavit is defined in first General Clauses Act. So the word affidavit you can follow with respect to central acts which came on or after 3rd January 1868, even though they come before 11th March 1897. That is the meaning of this section. Understood, everyone? And General Clauses Act 1887, it gave definitions to some words: commencement, financial year, offense, registered, schedule, subsection, writing also. Now these definitions will have commencement date as 14th January 1887. So you can use the references of these definitions to all the central acts which were enacted on or after 14th January 1887, but not to the previous central acts. Next one. So with this definitions part completed, ma. So next part is general rules of interpretation and construction. Almost 60% of the chapter is completed. The remaining sections are very simple, very, very simple. Just observe me carefully, follow me carefully. Whenever I'm reading the provision, follow me carefully. See, here we need to break the provision. In order to remember the provision, first we need to divide the provision into simple statements. Are you all getting my point, students? So I'll start with section 5, coming into the operation of enactment. Simply commencement. So central act, from which date onwards it will come into the force, sir? From the notification date. In notification, we will specify the date. From this date onwards, this act comes into the picture. So from that specified date onwards, from the specified day onwards, that central act comes into the force. If not notified, if the date is not notified in the statute, in that case, central act approved by President of India, post-constitutional laws, post-constitutional central acts, they come into the force from the day it received approval of President of India. So date of approval of President of India. So when President of India gave approval, from that date onwards, that Central Act comes into the force. So coming to the pre-constitutional laws, here you need to check the date of approval of Governor General in Council. Date of approval of Governor General in Council. Understood? So commencement date is specified date. If no date is specified, if no particular date is specified, just listen to me carefully, follow me carefully. Central Act has not specifically mentioned a particular date to come into force. Then it shall be implemented on the day on which it receives the assent of Governor General in case of Central Acts made before commencement of Indian Constitution, and the day on which it receives the assent of President of India in case of Act of Parliament. So date of approval is equal to commencement date. Date of approval is equal to commencement date in the absence of notification date. Understood? So that's what, just go through the chart once. So notification specified the date of commencement, then commencement date will be specified date. If not notified, if the date is not notified, then date of approval of President of India is the commencement date in case of post-constitutional Central Acts. In case of pre-constitutional Central Acts, date of approval by Governor General in Council is the date of commencement of the enactment, date of the commencement of Central Act. Next, presumption against retrospectivity. When you are bringing a law today, it will have retrospective effect or prospective effect. It will have prospective effect. Prospective means from this point onwards future. From this point onwards future, we call it as prospective. Retrospective means from back date onwards. From back date onwards. So generally, all laws will have prospective assumption. It will not have retrospective assumption. But if you want to bring a law with retrospective effect, then you have to disclose the same. You have to disclose the same. Best example, just now I discussed with you section 4. Section 4. See, General Clauses Act 1897. Commencement date is 11th March 1897. Commencement date is 11th March 1897. But there are some definitions which were previously defined in General Clauses Act 1868, in General Clauses Act 1887. Now these definitions will have retrospective effect, not from the date of commencement of General Clauses Act 1897, but from the date of General Clauses Act 1868, General Clauses Act 1887. So expressly disclosure is required. If you want to apply a provision with a retrospective effect, you need to disclose the same fact. Understood? So what is the general presumption, ma? All laws will have prospective effect. If you want to bring a law with retrospective effect, then you need to define the purpose. You need to define the point that this act will have retrospective effect. Is it clear? Next, important provision, repeal. Repeal means what? Permanent removal of the statute. Repeal of something means what? Permanent removal of the statute, as if it never existed in the history. As if it never existed in the history. Companies Act 1913 got repealed. In that place, Companies Act 1956 came. And Companies Act 1956 got repealed. In that place, we got Companies Act 2013. Present, we are having Companies Act 2013. Right? Now, repeal of Companies Act 1956 means complete or permanent removal of Companies Act 1956 from the history of India. That means this Companies Act 1956 never existed in our India, in our Indian history. And looking at the effect of repeal, just follow me carefully. The repeal shall not revive. Revive means bringing back into the force, getting back into the force. Something already dead and making that thing alive is nothing but revive. Repeal shall not revive anything not enforced or prevailed during the period at which repeal is effected. That means, see, originally, first we had Companies Act 1913. It was repealed and we brought Companies Act 1956. Now, if you repeal Companies Act 1956, don't think that Companies Act 1913 will prevail. No. Companies Act 1913 already repealed. Now, repeal of 1956 Companies Act 1913 will not get any revival. So repeal shall not revive anything which was not prevailing, which was not enforced during the period at which repeal is effected. So in the year 2013, Companies Act 1956 got repealed. Now, Companies Act 1913 will not get revival, will not automatically get any revival. Next one. Repeal shall not affect the previous operation of any enactment so repealed or anything duly done or suffered thereunder. Sima, Infosys is a company incorporated in the Infosys is the company incorporated under Companies Act 1956. Now, the moment Companies Act 1956 got repealed, can we declare Infosys as not a company? Can we declare Infosys as a illegal company? No. The effect of repeal shall not affect the repeal shall not affect the previous operations. So previously registrar issued certificate of incorporation to the Infosys management, to the promoters of the Infosys. Now that Infosys company is valid, it is legal company only. Repeal shall not affect any right, privilege, obligation or liability acquired, accrued or incurred under any enactment so repealed. So I'll talk about liability. Suppose I committed mistake under Companies Act 1956. I should be punished. But meanwhile, what happened? Meanwhile, Companies Act 1956 got repealed. In that place, Companies Act 2013 came. I committed default under Companies Act 1956. I didn't commit any mistake under Companies Act 2013. Sir, so there would be no liability on me. Can I say like that? No. It will not affect any rights, privileges, liabilities acquired under repealed acts. Your privileges, your obligations, your liabilities still continue. Suppose company is registered under Companies Act 1956 and the members nature of liability is limited. Now, even you repeal Companies Act 1956, there will be no effect on liability of the members. There will be no effect on rights of the members. Next one, effect of repeal. Repeal shall not, at the beginning, if you observe carefully, the word shall not is used. I'm sorry. The word shall not is used. Look at this word carefully. The word shall not is there. So repeal shall not affect any penalty, forfeiture, punishment incurred in respect of any offense committed against any enactment. So repeal. Just now I told you. See, I committed offenses under old act. Now I should be punished whether the old act is repealed or whether the old act is prevailing. Understood? Next one, repeal shall not affect any inquiry, litigation, remedy with regard to such claim, privilege, debt or responsibility or any inquiry, litigation or remedy which may be initiated, continued, insisted. I committed an offense and I was sent to the jail. Suppose, I was sent to jail for 10 years. After completion of 2 years of imprisonment period, old act got repealed. Now, can I come out of jail? Can I come out of jail, sir? Old act got repealed, no, sir. So I'll be free now. So please release me. Not possible. Not at all possible according to D point. Suppose I committed offense. It was not yet proved. Some legal proceedings were initiated against me. Some prosecutions were initiated against me. Meanwhile, old act got repealed. Now can I tell to the department, sir, the act was repealed. So you had no power to conduct inquiry, legal proceedings against me, sir. Can I tell like that? No. Repeal shall not have any effect on inquiry, litigation, and claims, privileges, debts, litigations or remedy already initiated or continued or insisted. Getting my point, students? You have to remember these 5 points. You have to remember. Don't know whether you mug up it or not. You have to remember these 5 points. Repeal shall not revive anything which is not enforced or prevailed. Repeal shall not affect the previous operation of the laws. Repeal shall not affect any rights. Repeal shall not affect any penalties. Repeal shall not affect any inquiry, litigations, remedies. Next one, repeal of act making textual amendments in the act or regulation. Where any central act or regulation made after commencement of this act. The commencement of this act means commencement of General Clauses Act 1897. Any central act commenced after General Clauses Act 1897, if that central act got repealed or a provision in the central act got repealed, so repeals any enactment. I told you enactment means not only act, enactment means rules, sections, regulations. Yes or no? Yes or no? Now in a particular central act, if in a particular central act, one of the provision got repealed, by which the text of any central act or regulation was amended by the express omission, insertion, substitution of any matter, then unless a different intention appears, the repeal shall not affect the continuance of any such amendment made by the enactment, so repealed and in the operation of the time of such repeal. I'll tell you one simple example to understand this provision. Original Companies Act 2013, we had a definition to the subsidiary. Subsidiary is a company in which another company holds more than half of total share capital. The word used is total share capital. Later, lawmaker thought that total share capital means equity as well as preference. So, person holding preference share capital, if the preference share capital, if the person holding preference share capital, it is more than 50% of total share capital, then that company is a holding company, this company is a subsidiary company. According to this definition, if we apply this definition, what happens? Company is holding equity share capital, another company is holding preference share capital in the company. Let me give you a simple, give you facts or numbers. There is a company C Limited. C Limited equity share capital is 40 lakhs. Preference share capital is 60 lakhs. Now this entire 40 lakhs was held by company A Limited. Entire 60 lakhs was held by B Limited. Now looking at the definition, it's a company in which another company is holding more than half of the total share capital. What is total share capital? Total share capital means equity plus preference. Equity plus preference. So equity plus preference, it is 1 crore. B Limited is holding 60 lakhs out of 1 crore, that means 60%. A Limited is holding 40 lakhs out of 1 crore, that means 40%. Now, if you apply this definition, B Limited is the holding company, C Limited is the subsidiary company. In fact, this is not a correct one. Why? See, person or a company holding equity share capital can control another company. B Limited is holding just preference share capital. B Limited won't get any control over C Limited. To get control over C Limited, first of all, you should have equity share capital. So, if you follow the logic, A Limited is having control. A Limited is controlling C Limited. B Limited is not controlling C Limited. But if we apply this definition, it is giving wrong results. It is giving wrongful results. That's why, what lawmaker did? After some time, after enactment of Companies Act 2013, he gave a clarification. He made a modification to the provision. Here, total share capital means equity plus convertible preference share capital, he told. After 2 years, what happened? This subsidiary company definition got amended. The definition of subsidiary got repealed and new definition was introduced. Now, what about the circulars which were issued, before enactment and repeal of the enactment? Do you think the circulars will still continue or the circulars comes to an end? That is the point of section 6A. That is the point of 6A. If the entire enactment, including circulars, including amendments were repealed, then those circulars amendments also gets repealed, or else the circulars or the amendments which were introduced after enactment of original act still continue to that amendments also. One more example I'll give you, one more example. Companies Act 2013, it came in the year 2013. Section 185, it speaks about loans to directors. It speaks about loans to directors. Originally, Section 185 is applicable to all the companies. In the Companies Amendment Act 2015, we gave a privilege to private companies. Section 185 is not applicable to private company. We told that it is not applicable to private company. 2 years later, in the year 2017, what we did? This entire Section 185 got repealed and a new Section 185 was introduced. And that new section is not talking about a private company and public company. In that case, whatever amendments were brought between the enactment and repeal of the enactment, that amendments will still continue unless otherwise stated, unless otherwise prescribed. The amendments which you brought after enactment of original provision still continue even if you repeal the enactment. Even if you repeal the enactment. That is the meaning of section 6A. Next, section 7, revival of repealed enactments. So already one particular provision you made a repeal. You repealed that particular enactment. And if you want to bring that enactment one more time into the picture, if you want to bring that repealed provision into alive, then you can do so. But before doing it, you have to specify the purpose. You have to state the purpose. So what is the reason why you are bringing back the repealed enactments? Understood? So an act to revive the repealed enactment. You have to mention that point. Are you all getting my point, students? One particular provision you repealed. After some time, you thought that this provision is very important and you want to bring back the repealed provision into alive. In that case, you can do so according to the provisions of section 7. According to the provisions of section 7, you can do it, but you have to specify the purpose of revival. Next one, section 8, construction of references to repealed enactments. References. Sima, we are having two central acts. Let me take Income Tax Act 1961, Companies Act 1956. Okay. In Income Tax Act 1961, with respect to calculation of book profits by companies, a company has to calculate book profits, and such calculation shall be done according to the provisions of Companies Act 1956. So originally in Income Tax Act, there is a provision that, for calculation of book profits, refer to Companies Act 1956. This provision is there. After a few years, what happened? Companies Act 1956 got repealed. In that place, Companies Act 2013 came into the picture. Now, the moment the Reference Act got repealed and a new act got reenacted or new act got enacted, in that case, automatically the references in one central act gets updated to the new central act. Now here you should understand the reference to Companies Act 2013. Even though when you are reading Income Tax Act 1961, when you are reading Income Tax Act 1961, you found the word Companies Act 1956. Right now Companies Act 1956 is not there. Then what we should do, sir? We should refer the same matter to Companies Act 2013. Is it clear? Everyone. So construction of references to the repealed enactments. Next one, commencement and termination of time, section 9. Commencement and termination of time. In dividends chapter 8, Companies Act 2013. So whenever company declares dividend, within 30 days, company has to pay those dividends. Within 30 days from the date of declaration of dividend, the dividend shall be paid to the members. Understood? The company conducted annual general meeting on 30th September 2024. In AGM, members declared a dividend. Now within 30 days, you have to pay all those dividends. So add 30 days, so the due date would be 30th October 2024. Now if you observe carefully, when you are adding 30 days, the date of event, you are ignoring the date of the event. Ignore the date of event. The starting date should be ignored. From date should be ignored. Don't consider from date. And the last date, 30th October, you have to consider. So whenever you calculate the time, from date shall always be ignored. Don't consider from date and consider the to date. Are you all getting my point? What happens if we consider this date? If you consider this date, then due date becomes 29th October 2024 for the purpose of payment of dividends, which is not correct. It is not the interpretation of that provision. Are you getting my point? So ignore from date, consider to date. Section 9, commencement and termination of time. Next one, computation of time, section 10. Computation of time, section 10. In Companies Act, we had a provision with respect to variation of rights. Understood? In variation of rights, suppose you don't want that variation. In that case, you can file an application with the tribunal. You or your group members satisfying the condition of 10% of paid up share capital of that class can file an application with the tribunal in order to cancel the variation. And what is the time period for filing application with the tribunal? 21 days. So today variation happened. Today you need to from this date onwards, you will be given 21 days time period to file an application with the tribunal in order to cancel the variation. Imagine the 21st day is a holiday. Imagine the 21st day is a Sunday. 21st day is the Sunday. In that case, you can file application the next day, the next business day or the next working day. See, where by any legislation or regulation, any act proceeding is directed or allowed to be done or taken in any court or office on a certain day or within a prescribed period, then the court or office is closed on that day or the last day of prescribed period, then The act or proceeding shall be considered as done taken in the due time if it is done or taken on the next day afterwards on which court or office is open. So if you file an application immediately on the next day, we will consider that application was submitted within the due date only. We will consider that application is filed within due date only. Understood? Next, measurement of distances. In Income Tax Act, we had capital gains chapter, right? So transfer of rural agriculture land is exempted. Whether it is rural land or urban land, how can we identify? If land is situated outside the local limits of municipality, then it is rural land. If that land is used for agriculture purpose, then we call it as rural agriculture land. Transfer of rural agriculture land, no need to pay any capital gain on it. No need to pay capital gain tax on it. No need to pay any capital gain tax on it. Now, whether it is located within the municipality limits or not, for that, distance measurement is given. If that municipality is having a population of, more than 10,000, but up to 1 lakh, then 2 kilometers from the municipality is treated as urban land, and land situated outside 2 kilometers from the municipality is the rural land. Now, while calculating the distance of 2 kilometers, you have to consider straight line on a horizontal plane. Suppose municipality is here, and in this municipality, 10,000 people population is there. Population is how much? 10,000. Now, from this municipality, any land situated outside 2 kilometers is considered as rural land. Now, to calculate distance between municipality and land, you have to measure it in the straight line on a horizontal plane. Suppose, from municipality, if you want to go to the land, the road distance, the roadway is like this. It is like this. Now, can I calculate entire distance, sir? No. Just draw a straight line. It should be measured in a straight line on a horizontal plane. This is very easy. Open your Google Maps. From location to location. So you will find options, walking one option, car one option, train, other one is plane, aeroplane. So select aeroplane option. So from this location to that location, what is the distance? So, if we travel through planes, straight line on a horizontal plane, that is called distance. That is the measurement of the distance. Understood? So you should not calculate distance in this way. You should calculate distance in this way. Next one, duty to be taken pro rata in enactments. Sima, 1 kg rice is 100 rupees. Imagine you went to shop, 1 kg rice is 100 rupees. You want to purchase 2 kilograms of rice. Now you need to pay how much? 200 rupees. You want only 500 grams of rice. In that case, you need to pay 50 rupees. Yes or no? So here we are making calculations on proportionate basis. Now you are importing, you are purchasing gold. You are importing gold from outside India. 1 kilogram gold, you have to pay 10 lakh rupee custom duty. Imagine custom duty 10 lakh rupees. If you are importing 10 kilograms gold, you need to pay 1 crore. If you are importing 500 grams of gold, then you need to pay 5 lakhs. So here I am calculating duty on pro rata basis. Understood? Even if you take company, a person holding fully paid up share will get complete dividend. A person holding partly paid up share will get pro rata dividends. That's it. Understood? Next, gender and number. In any central act, you see, suppose if the word he is used, then you have to understand, you have to consider she also. He includes she. Male includes female. Singular includes plural. Suppose company is having a subsidiary. Here subsidiary, the word used is in singular sense. Yes or no? Now here, you have to consider that singular subsidiary as plural subsidiaries. Even if you look the word subsidiary in any provision, subsidiary includes subsidiaries. Subsidiary company includes subsidiaries. Understood? Similarly, male includes female. But in any particular statute, if they are particular with respect to gender, suppose if they are talking about gender male only, in those areas you cannot take this assumption. You can't say that male includes female. Suppose take HUF for the time being. Who can act as karta? Elder male person can act as karta. Now here you should not assume that male includes female, so elder female person is also treated as karta. It is wrong. Are you getting my point, students? Words importing masculine gender shall be taken to include females. Words in singular shall include plural and vice versa. But the cases where a male descendant is used, in that case you should not consider it. You should not consider female persons. Understood? And similarly, bullock carts. Bullock carts are there, right? So bullock cart means you can use bullocks only for that purpose. You can't use cows. So bullocks could not be interpreted to include cows. So with these general principles of interpretation, section 5 to section 13 completed. Coming to the next part, powers and functionaries, section 14 to section 19. Section 14, power conferred to be exercisable from time to time. Sima, our Companies Act 2013, through Companies Act 2013, Parliament gave Parliament gave power to central government to frame rules from time to time. Now, central government can frame rules with respect to Companies Act, not only at one instance, it can frame rules from time to time. That means, it can exercise that power whenever it wants to exercise. Whenever requires, it can exercise the power. Are you all getting my point, students? See, any central act or regulation made after commencement of this act. Commencement of this act means General Clauses Act 1897. Any power is conferred, then unless a different intention appears, the power may be exercised from time to time as occasion requires. Whenever situation demands, the authority can exercise that power. Are you getting my point? So there is no limit on exercising the power. Only one time you can exercise in a year. Only one time you can exercise in a month. It is not like that. It can exercise those powers from time to time whenever situation demands. And this particular section, section 14, will come into the force not from 11th March 1897, but from 14th day of January 1887. See this point. Section 14, originally it is a part of General Clauses Act 1887. Right now, General Clauses Act 1887 is not having. Right now, we are not having General Clauses Act 1887. We are having 1897. So the provision which we took from 1887, we can apply this provision not from 1897. We can apply it from 1887 onwards, backdated, retrospective effect. And I clearly told you, if you are applying any provision with retrospective effect, you need to disclose the same in the respective provisions. Yes or no? So that's why this disclosure has been made. That's why this disclosure has been made. Understood? Next one. Power to appoint includes power to appoint ex officio. Let me take an example of IEPF, Investor Education and Protection Fund. Central government is having power to constitute IEPF authority. So IEPF authority is headed by chairperson and other members not exceeding 7 and a person to act as CEO. Now, who is having power to appoint members to IEPF authority? Central government. Now, central government can appoint persons to IEPF authority in two ways. One way, by naming the person. Mr. Charan, you are the member of IEPF authority. Or the other way is by virtue of office. Example, Secretary of Ministry of Corporate Affairs, come forward. You will be the chairperson of IEPF authority. Now here, how I am appointing chairperson of IEPF authority? I'm not naming a particular person. I'm naming a person who occupied the designation of Secretary of Ministry of Corporate Affairs. So Secretary of Ministry of Corporate Affairs will be the chairperson of IEPF authority. Here appointment is done not in name wise. Here appointment is done by virtue of his office. Suppose I am the Secretary of Ministry of Corporate Affairs. Automatically I will become chairperson of IEPF authority. Imagine my tenure completed. Mr. Arun came and occupied the seat of Secretary of Ministry of Corporate Affairs. Now Arun automatically becomes chairperson of IEPF authority. So power to appoint includes power to appoint ex officio. Ex officio is a Latin word which means by virtue of one's position or office. Because you are holding this designation, you will be appointed as person of another office. Understood? Everyone. Suppose take Vice President of India. Vice President of India. He is the Speaker of Rajya Sabha. Whoever occupies the position of Vice President automatically becomes Speaker or chairperson of Rajya Sabha. Next, power to appoint includes power to suspend, power to dismiss. So wherever you find the words power to appoint, it automatically includes power to suspend, power to dismiss. Substitution of functionaries. Substitution of functionaries. If you want company, you need to file documents with the registrar of companies. For the time being, Mr. Arun is registrar. Now, filing documents with Arun or filing documents with registrar of companies, both are same. As long as Arun continued as long as Arun occupies the position of registrar of companies, as long as he is acting as a registrar of companies, filing documents with Arun or filing documents with registrar of companies will have same effect. You will get certificate of incorporation. But instead of using the names of the persons, here we will use the name of functionaries. Understood? So here we will mention the official title of the officer at present executing the functions. Are you all getting my point, students? So Prime Minister of India, instead of naming the Prime Minister, we will name the official title of the officer, Prime Minister of India, President of India, Registrar of Companies, Governor of the State. Substitution of functionaries. Understood? Successors. So successor means right now, Mr. Arun is the registrar of companies. Mr. Arun is ROC. So Arun, he retired. In the place of Arun, Mr. Charan was appointed as the registrar. Now, the immediate successor to Mr. Arun is Mr. Charan. And successor should also follow the same provisions which were applicable to the Arun. So whatever the provisions Mr. Arun is following, the same provisions successor should also follow. Understood? All these functionaries and all these corporations will have perpetual succession. They will have continued existence, but natural persons like me, like you, will not have continued existence. As long as we occupy the position, we will follow these rules. Whenever we comes out of the position, whenever our successor enters into the position, they are also required to follow the same provisions, same rules, same regulations, simply same enactments. Next one, office chiefs and subordinates. Office chiefs and subordinates. Let me give you one example. The President of India fell sick, and he or she requires medical treatment for a period of suppose 2 months, short period only. But during these 2 months, he or she can't attend office duties. So President of India is not in a position to approve the bills. President of India is not in a position to look into the legal matters. Imagine. In that case, in the absence of official chief, the subordinates can occupy that position. Subordinates can exercise those powers. Now, vice president will get the powers of president during that shorter duration. During that shorter duration of 2 months. Understood? Now, whatever the powers, official chief is having, the same powers, same duties, who can also exercise? Subordinate can exercise. When? In the absence of official chief. A law related to the chief or superior of an office shall apply to the deputies too, shall apply to the subordinates too, lawfully performing the duties of that office in the place of their superior. In the absence of the superior, that the superior deputies or subordinates can exercise those powers, can fulfill the obligations. Next one, provisions as to the orders, rules, etc. made under enactments. Sima, I can call Companies Act as a main legislation, and whatever rules made thereunder, whatever circulars made thereunder, I can call it as a sub legislation. So Companies Act 2013 original act is the main legislation, and rules, circulars, notifications, bylaws, all this comes under sub legislation. Is it clear? Now the point is, construction of orders etc. issued under enactments, whereby any legislation, any central law, central act, the power to issue any notification, order, scheme, rule, from form, bylaw is conferred. Then expression used in the notification. Which one? Expression used in the notification, order, scheme, rule, form or bylaw shall, unless there is anything repugnant in the subject or context, have the same respective meaning as in the act or regulation conferring the power. What is the meaning of this point, sir? Seema, Companies Act 2013 is there. Companies Amendment Act 2015 is there. In Companies Amendment Act 2015, there is no definition to the word company. Now you can apply the definition of company of Companies Act 2013 to the Companies Amendment Act 2015. Recently, Ministry of Corporate Affairs issued some rules regarding companies. And the meaning of the words was not given in the rules. In that case, you can apply the meaning of the words which were defined in original, that means main legislation. So the definitions, expressions which were defined in main legislation shall also applicable to sub legislation. Power to issue to include power to add, power to amend, power to vary, power to rescind. Central government is having power to frame rules under Companies Act 2013. Now this power not only includes power to issue, but also power to amend, power to add, power to change, power to cancel. So central government is having a power to add something to the notifications, amend the notifications, change the notifications, cancel the notifications. So simply power to appoint includes power to suspend, power to dismiss. Here power to issue includes power to add, power to amend, power to vary, power to rescind. Next one, making of sub legislation, simply making of rules, bylaws and issuing of orders between passing and commencement of enactments. Between passing and commencement of enactment. Sima, NCLT. Provisions about NCLT were originally part of Companies Act 2013. The Companies Act 2013 was notified in the year 2013. 470 sections are there in the Companies Act 2013. A particular section is already speaking about NCLT. Understood? In the year 2013 only, we are having provisions with respect to NCLT. But the point, NCLT related provisions were made applicable with effect from December 2016. December 2016. Now, even though the provisions related to NCLT are forming part of original Companies Act 2013, they will not have any effect until they get commenced, until they come into the operation. So NCLT related provisions came into the operation in the year 2016. Came into the year 2016. Now the time period, 2014, 2015, 2014, 2015, these 2 years, even though you can see NCLT provisions in Companies Act 2013, you can't apply NCLT provisions. Why? It came into operation in the month December in the year 2016. So these provisions will get legal enforceability only with effect from December 2016, but not retrospectively. So look at the provision. Any central act or regulation which is not to come into force immediately on the passing thereof, a power is conferred to make rules or bylaws, issue orders with respect to application of the act or regulation, or with respect to establishment of any court like Company Law Tribunal, National Company Law Tribunal, or the appointment of any judge or officer thereunder. Okay, so let me conclude. Then that power may be exercised at any time after passing of the act, but the rules, bylaws or orders so made or issued shall not affect till the commencement of that enactment. Now NCLT related provisions came into force with effect from December 2016. So previously, that means before December 2016, whatever rules made with respect to NCLT are inoperative. These rules, bylaws, orders will be operative with effect from December 2016. That is the meaning of this provision. Shall not affect till the commencement of the act or regulation. Even though the rules, bylaws were framed before the commencement of act, these rules, bylaws will get legal enforceability only after commencement of this act. Next, section 23, provisions applicable to making of rules, bylaws. This is a procedural question. Framing rules, framing enactment. So what is the procedure? So first, authority having power will publish a draft copy of a proposal, and it will send this draft copy of proposal to the affected parties, so who will submit their recommendations. Now authority may consider the recommendations or may not consider the recommendations. Once this process is completed, they will finalize the draft copy. They will finalize the draft copy, and the draft copy will be introduced in both the houses of the parliament, and the draft copy will be sent to the president for his consent. Once parliament approves the draft copy, once parliament approves the bill, and once president approves the bill, it becomes act, and this act comes into the force from the date specified in the notification. If nothing is specified, then date of approval by the president of India is the date of commencement of the enactment. This is a procedural question, procedural question, not that much important. Next one, continuation of orders etc issued under enactments repealed and re-enacted. See Companies Act 1956 is there. Under Companies Act 1956, from time to time, central government issued various circulars, various government prescribed various rules. Central government prescribed rules with respect to Companies Act 1956. In the year 2013, what happened? Companies Act 1956 got repealed and new Companies Act 2013 was enacted. Now the point is, once this act got repealed, what about the position of rules which were prescribed by the central government from time to time under previous repealed act? So what is the effect? Will they continue or will they come to an end? The answer is, unless otherwise specified, these rules will still continue. Suppose, in Companies Act 2013 specifically mentioned a point that all the provisions related to Companies Act 1956 and rules made thereunder shall not have any effect. All those rules got repealed. Then these rules comes to an end, or else whatever the rules prescribed by the central government under repealed acts shall still continue even under new act. Understood? Next one, italic content, don't remember italic content, just example purpose we mentioned. Italic content, just give one time reading, no need to remember italic content. Next one, miscellaneous. Last part of this General Clauses Act, recovery of fines. General Clauses Act is not specifying the procedure how to collect the fines. It is giving reference to Indian Penal Code. So Indian Penal Code and the provisions of Code of Criminal Procedure specified the procedure for recovery of fines. So just go through the Indian Penal Code procedures. So it is just giving reference to the Indian Penal Code. Next one, provision as to offense punishable under 2 or more enactments. I committed one offense and this offense is covered under 2 statutes. I committed one mistake and this mistake is there in 2 statutes. So according to statute 1, I should be sent to jail for 3 years. According to statute 2, I should be sent to jail for 5 years. Now, judge giving judgment, he should consider either statute 1 or statute 2, but not both at a time. So 3 plus 5, 8 years, go to jail for 8 years. No. I should not be punished twice for the same offense. I should be punished only once. And that punishment will be prescribed at the time of imposing the punishment. So judge has to consider any particular enactment while imposing or while giving the judgment. Suppose, I committed offense and, I committed 2 offenses. One offense is dealt by one statute, other offense is dealt by another statute. Now judge is having power to impose punishments under 2 statutes. Why? This is not a common offense under 2 statutes. One offense is covered by one statute, other offense is covered by other statute. So now I'll be punished according to the provisions of 2 statutes. So no bar to trial or conviction of an offender under 2 enactments, but there is only a bar to punishment of the offender twice for the same offense. So here, restriction is on punishment with respect to same offense. You can't be punished twice for the same offense. But the trial, the investigation proceedings can be carried out under 2 enactments. Investigation proceedings can be carried out under 2 enactments, whereas punishment can be levied only under 1 enactment. Next one, meaning of service by post. If you are sending a notice by post, so whether that notice is served or not, so you can't travel along with the notice. You can't check whether notice, it reached the receiver or not. So by making assumption, you can by making an assumption, you can consider it as a proper notice. But for that assumption, 2 conditions are to be satisfied. One is the notice should be properly addressed, and you have to pay stamp duties, postal stamps in advance by prepaying stamps. and posting by registered post. So any notice you are sending by satisfying these three conditions, properly addressed, prepaying, and posting by registered post, then we consider the post as a proper service of notice. A proper service of notice. Understood? Next, last point, citation of enactments. Citation of enactments. So here, instead of copying provision of one central act, we can give reference to that central act. We can give reference to that central act. Suppose, security definition in Companies Act. We are not having a security definition in Companies Act. Here we are giving reference to SEBI, Securities Contract Regulation Act. So in such cases, the definitions should be understood by looking at the definitions which were defined in other statutes. So instead of copying the same definition into the present act, you can give reference to the other act. Next one, application of act to the ordinances. So here, whatever provisions are applicable to act are equally applicable to ordinances. That means whatever legal effect an act is having, the same effect is also the ordinance will also have same effect. Ordinance will also have same effect. The only difference between act and ordinance is act is an act of Parliament and President of India. A bill approved by Parliament and President of India, we call it as act. Suppose a bill approved by President of India directly, we call it as ordinance. Suppose emergency situation, COVID pandemic came, right? So gatherings avoided, prohibition of gatherings is there. So it is impossible to call for a parliament meeting. In that case, cabinet of ministers, they will make a proposal, they will send the proposal to president for his consent. If president approves the proposal, it becomes ordinance. It becomes ordinance. Later, if that ordinance is approved by the parliament, it becomes act. Act will have unlimited validity, whereas ordinance is having only limited validity. That is the only difference. Is it clear, ma? So with this, Marathon of General Clauses Act is completed. Our next topic of marathon is interpretation of statutes. The expected weightage of this chapter is 8 to 10 marks. You can expect 8 to 10 marks from this chapter. Coming to difficulty rating, this chapter is simple to understand, difficult to remember, and difficult to present in the examination. The only reason is most of the content of this chapter is repetitive, and you'll find more and more technical words in this chapter. You need to remember more and more number of Latin maxims, and you need to present those Latin maxims in the examination. So students generally face a problem. What are the points to be remembered and what are the points to be presented in the examination? So that's why they consider this chapter as difficult chapter. But looking at the weightage, I don't suggest you to take this chapter choice. Is it clear? Let's continue with the marathon. Interpretation of statutes. Interpretation means understanding. Statute means a written will of legislature. Statute means a written will of legislature. The word statute is not popular in India. In India, we call statute as act of the parliament. Statute is nothing but act of the parliament. Basically, laws are of two types: written laws, unwritten laws. Written law is a law originates through legislation. Unwritten law is a law based on customs, usages, judicial decisions. What is written law, ma? It is a law that originates through legislation. All our Indian laws are written laws. All our Indian laws are written laws. You can see it. First, member of the parliament will introduce a bill in the house of the parliament, in both the houses of the parliament. Once both the houses of the parliament gives approval to the bill, then bill is forwarded to the president for approval. Once president gives approval to the bill, then that bill becomes act, nothing but statute. So here law is originated through legislation. Any law originates through legislation, it is a written law. And a law which is based on customs, usage, and judicial decisions, it is unwritten law. Clear? Next one, document, instrument, deed. So what is a document? Document means any matter expressed or described upon any substance by means of letters, figures, marks, or by more than one of those means intended to be used or which may be used for the purpose of recording that matter. See, we use document for recording the matter, and there is no restriction on the matter. Any matter can be expressed or described upon what? any substance. By how? By means of letters, figures, marks, or by more than one of those means. Why you are recording this matter? Sir, I had an intention to use that matter, or I had an intention to use that matter in future. So intended to be used present, or which may be used in future. Now the running notes you are maintaining while listening to the classes, it is also a document. Financial statements, document. Computer files, document. Your result card is a document. Understood? So any matter expressed, described upon any substance by means of letters, figures, or marks, or by more than one of those means intended to be used or which may be used for the purpose of recording that matter, it becomes a document. Clear? Next one, instrument. Instrument means formal legal document. What is a document? Document means any matter. No, just now I completed the definition. Any matter expressed or described upon any substance by means of letters, figures, intended to be used or which may be used for recording the matter. Yes or no? Now, instrument means a document. Not only a document, instrument means a document which creates or confirms a right or records a fact. So any document which is capable of creating rights and obligations on the parties thereto. Any document which confirms the facts, which confirms the rights of the parties, it becomes instrument. Are you all getting my point, students? Now every instrument is a document, but every document need not be an instrument. Now say for suppose take a promissory note. I purchased goods from you on credit basis. Now I'm giving a note to you. I promise to pay Mr. Arun a sum of rupees 5,000 3 months after date for the value received. So this is nothing but a promissory note. This is an instrument. See, this is an instrument in writing, and it is creating rights in favor of creditor, obligation against a debtor. Understood? How much amount? 5,000 rupees. So any written document capable of creating rights and obligations on the parties thereto, we call it as instrument. Is it clear, ma? Next one, deed. Deed as an instrument. Oh my God. Instrument is a formal legal document. Deed as an instrument in writing, purporting to effect some legal disposition. Any instrument which is acting as, which we use it as a legal evidence in future in the court of law, it becomes a deed. Legal disposition, simply, it will be accepted, it will be accepted as legal evidence. It will be considered as legal evidence in the court of law. Partnership deed, memorandum of association, articles of association, all these documents comes under deed. By this I can conclude in this manner. Suppose you take this area, it is a document. Next one, instrument. Next one, deed. So every deed is an instrument, but every instrument need not be deed. Every instrument is a document, but every document need not be an instrument. Understood? Everyone. Next one, what is meant by interpretation and state its significance? So interpretation is the process of ascertaining the real meaning of an act, ascertaining the intention of the legislature in enacting the act. So what is interpretation? It is the process of ascertaining the true meaning of the act, the real meaning of the act, and the intention of the legislature, simply spirit of the law. So reading the provision, reading the words used in the provision, deriving the meaning, natural meaning, ordinary meaning, it is nothing but interpretation. Identifying the intention of the legislature, it is also interpretation. So what is interpretation? It is a process of ascertaining the real meaning of an act, the intention of the legislature in enacting the act. What made legislature to enact this statute? It will also comes under interpretation. Are you all getting my point, students? Everyone. Next, importance of interpretation. Sima, we are having three wings: legislative, executive, judiciary. Legislative, executive, judiciary. What is the role of legislative? The role of legislative is framing the laws. Who will frame the laws? Legislative. Next one, executive is responsible for implementing the laws. What is the role of executive? Implementing the laws. And what is the role of judiciary? The role of judiciary is interpreting the law. So parliament frames the laws, central government implement the law, courts interpret the law. Now the point is, law making, making the law happens at one point of time. Implementation happens after approving the laws, and interpretation happens at a different point of time. For example, you take Companies Act 2013. Originally, it was drafted in the year 2012, Company Bill 2012. It was approved in the year 2013. But till today, we are following the same act. Till today, we are following the same act. Any ambiguity in the provision, we refer that ambiguity to the court, and court will interpret the law. Court will give best meaning to the words used in the law, or best interpretation. See, what is the duty of judiciary? Interpretation of law. Now, if you observe carefully, law was approved in the year 2013 and law was interpreted in the year 2024. Both are not happening at one point of time. They are happening at different points of time. Now, the role of interpretation is to act as a bridge between the two. What is the role of interpretation? What is the importance of interpretation? It serves as bridge of understanding between the two. The process of statute making and the process of interpretation of statutes take place separately from each other, and two different agencies are concerned. Legislative one agent, judiciary another agency. Two agencies are concerned. Are you getting my point? An interpretation serves as a bridge of understanding between the two. Next one, the classification of interpretation according to Jolovich, according to Fizzled. So all these are very common. Once I complete rules of interpretation, each and everything is covered. So I will cover first rules of interpretation, primary rules and secondary rules. And then I'll discuss with you internal aids and external aids, internal tools as well as external tools. Once I complete it, you'll get clarity about all these points. Next one, construction. So state the differences between interpretation and construction. The interpretation is the process of ascertaining the real meaning of the act. Construction will also have same objective. But the point is, interpretation and construction both are same when the words used in the statute are plain, clear, unambiguous. So reading the provision, if it is giving only one meaning, in that case, interpretation, construction both are same. Suppose 2 or more persons are required to form a private company, 7 or more persons required to form a public company. So minimum 2 persons are required to form a private company, minimum 7 persons are required to form a public company. Now, plain reading of these provisions, we are getting only one meaning. So for forming private company, 2 persons required. For forming public company, 7 persons required. Understood? So here we are ascertaining the meaning of the words used in the statute. So here interpretation and construction both are one and the same. Suppose, take one example, section 3 of Companies Act 2013. A company may be formed for any lawful purpose. The statement used in section 3 is, a company may be formed for any lawful purpose. So what is the word used in this statement? May. So the result of may here refers to discretionary, optional. Now one group of people, what they think, okay, company, we can form company for lawful purpose. Other group of people, what they think, company may be formed for lawful purpose. That means company may also be formed for unlawful purpose. So here the word used in the statute, the word used in the provision is not clear. Some ambiguity is there, some confusion is there. It is giving two meanings. One meaning, reasonable. The other meaning, it is violating the policies. It is opposed to the public policy. Yes or no? Company may also be formed for unlawful purpose. It is opposed to public policy. Now, out of these two meanings, we have to consider one meaning and we have to ignore another meaning. Understood? So, what we are doing? First, we are reading the provisions. We are making analysis. Based on analysis, we are drawing reasonable conclusions. And based on that, we are making judgment. We are taking a decision. This entire process is nothing but construction. The construction involves drawing conclusions beyond the actual expressions used in the text. Beyond the actual expressions. Generally, word may is optional. So if you go through the words used in the statute, if you go through the words used in the statute, it is giving two meanings and one meaning is opposite to the public policy. So here we are going beyond the words used, beyond the expressions used in the text, and based on that we are drawing the conclusions. This is done by referring to other parts of the enactment and the context in which the law was made. Thus, when we construe a statute, you are attempting to ascertain the intention of legislature. Intention of legislature, true spirit of law. So nowhere, lawmaking body will not allow companies to form, lawmaking bodies will not allow people to form company for unlawful activities. So the intention of legislature is companies should be formed only for lawful purpose. So here we are going beyond the actual expressions used in this statute. This entire process is nothing but construction. So with this I conclude simply, let me conclude simply. If the words used in the statute are clear, plain, simple, unambiguous, then interpretation, construction both are same. If the words used in the statute are ambiguous, not clear, vague, in that case, interpretation and construction both are different. Construction involves drawing conclusions beyond the actual expressions used in the text. Are you all getting my point, students? Next one. The interpretation may be either grammatical or logical. All these points you'll get clarity once I finish rules of interpretation, rules of construction. Beginning only I told you most of the content is repetitive. Yes or no? So I'll discuss with you. I'll revise the main content. Clear? Yes. Rules of interpretation or construction classified into two categories. One is primary rules, the other one is secondary rules. So whenever a problem arises regarding interpretation, first you should apply primary rules. First we should go through primary rules. If primary rules are not giving desired results, then go with secondary rules. First, which rule we should apply? Primary rules. Next, last resort, secondary rules. Even in primary rules, first we need to apply rule of literal construction, rule of literal interpretation. So remember this order. First priority we should give to rule of literal construction. If rule of literal construction is not giving desired results, then based on the facts of the case to case, we may apply any of these rules. If primary rules are not giving desired results, then we'll go with secondary rules. Understood? Everyone. To discuss the rule of literal interpretation. The first and primary rule of construction is that intention of the legislature must be found in the words used by the legislature itself. So intention of the legislature must be found in the words used by the legislature itself. So go through the words used in the statute. It is the cardinal rule of the construction. It is the cardinal rule of construction that a statute must be understood literally and grammatically, giving the words their ordinary meaning, natural meaning. Just now I told you, right? Two persons are required to form a private company. 7 persons are required to form a public company. The words used in this provision is very clear, plain and unambiguous. Now, no person is allowed to modify or no person is allowed to add something or delete something in order to understand the provision. See, when the language of the statute is plain and unambiguous, it is not open to the courts to adopt any other hypothetical construction. Not open to the courts to adopt any other hypothetical construction simply with a view to carrying out the supposed intention of the legislature. Words used in the statute giving simple meaning, ordinary meaning. If you apply ordinary meaning or natural meaning to the words used in the statute, you are getting a desired result. In that case, don't go beyond the words or expressions used in the statute. Even if you take Indian Contract Act, if a consent of the party is obtained by way of fraud, coercion, undue influence, misrepresentation, then contract becomes voidable at the option of aggrieved party. How many of you remember this statement? Voidable contract means, if a consent of the party is obtained by way of fraud, coercion, misrepresentation, then that contract becomes voidable at the option of aggrieved party. Now, plain reading of this provision. So here we can apply the meanings to the fraud. What is the fraud? What is misrepresentation? What is coercion? What is voidable? So everything is having natural meanings. Everything is having definitions. Now applying those definitions, you can easily understand the provision. In that case, you are not allowed to adopt some other hypothetical construction. You are not required to go beyond the words or expressions used in the provision. So primary duty of the court to interpret the words used in the legislation according to the ordinary grammatical meaning in the absence of any ambiguity or doubt. If ambiguity is there, if there is any ambiguity, then rule of literal interpretation is not applicable. Come on, tell me when this rule is applicable, ma? When the words used in the statute, when the language of a statute is plain, unambiguous, clear, not vague. In that case, rule of literal construction is applicable. Suppose if the language is not clear, not plain, ambiguous, in that case, rule of literal construction is not applicable. We cannot apply rule of literal construction. In Latin maxim, absoluta sententia, absoluta sententia expositio non indigit. In other words, plain words require no additional explanation. Plain words require no explanation. And there are some occasions when a choice has to be made between two interpretations. One is narrow interpretation and the other is wider interpretation. We are having two interpretations. One is narrow interpretation and the other one is wider interpretation. If narrow interpretation is not giving desired result, if narrow interpretation fails to achieve the desired result, then adopt wider interpretation. See, here we are not applying rule of literal interpretation. Here we are going with rule of reasonable construction. We had one wonderful example. See section 102. Section 102. In case of special business, any director, if he is having any interest, whether financial or otherwise, in the proposal, he has to disclose that interest. He has to disclose the interest. Suppose director is not having direct interest in the proposal. Director's father is having interest in the proposal. I'm the director of the company. I'm going to introduce one proposal in the annual general meeting. In that proposal, I'm not having any interest. I'm not having any benefit. But my father is having benefit in that proposal. Should I disclose this interest in the notice of general meeting? Should I disclose or should I not disclose? I should not disclose. So the answer is, here two interpretations are possible. One is narrow interpretation. Sir, you are not having any interest, no? So no need to disclose your father's interest. Second one is wider interpretation. Sir, you are not having direct interest, but you are having indirect interest, sir. Your father is getting some gain, some benefit from that proposal. That means indirectly you are deriving that benefits only, sir. Maybe, you had that interest, but you transfer that interest to your father. It may happen, yes or no. So when members were asked to present, to cast their votes in the general meeting, they should be given complete information. They should be given correct information. Nothing should be, nothing should be suppressed, sir. So you have to present, you have to disclose your father's interest in the proposal. This is wider interpretation. Now, which interpretation we should adopt, sir? No other option. Wider interpretation we should adopt. So narrow interpretation is not giving a desired result. So adopt wider interpretation. So in this case, rule of literal construction is not applicable. Are you getting my point, students? See, first of all, the words used in the statute should be given their natural and grammatical meaning. Suppose if the words are used in technical sense, then the meaning, technical meaning should be given to those words. Example, chip. Chip. If you find word chip in Information Technology Act, chip means integrated chip. If you find this word, same word, chip, in food safety standards, then chip means eatable chip, potato chip. Understood? So chip is having two meanings. One is potato chip, the other one is integrated chip. Now which one I should adopt, sir? When you are reading Information Technology Act, chip means integrated chip. When you are reading food safety standards, chip means potato chip. Clear? Okay. First you have to give the natural meaning and ordinary meaning. Technical words should be understood in technical sense only. Once again, I am telling you, when rule of literal construction is applicable, when the language used in the statute is plain, unambiguous, then rule of literal construction is applicable. Suppose if the language used in the statute is not clear, ambiguous, then rule of literal construction is not applicable. Then which rule we should apply, sir? Which rule we should apply? It depends on facts of case. Suppose one statement, proxy has no right to speak. Proxy has no right to speak in general meetings. Now this point is there in Management and Administration chapter. Remember section 105. 105 only, right? Yeah, 101 notice, 102 explanatory statement, 103 quorum, 104 chairman, 105 proxy. Yes, proxy has no right to speak in general meeting. No right to speak in general meeting. That means what? Suppose, proxy want to know the time. So can he ask someone, so what is the time? Hey, no, proxy, you have no right to speak. Come on, shut your mouth. Suppose proxy want to drink water and he is waiting for someone to give water bottle, and he is asking, I need one water bottle. Now someone is asking, proxy, you had no right to speak. Come on, shut up your mouth. So is it the real meaning of this statement? Is it the real meaning of the statement? And there is one more interpretation is possible. Suppose proxy has no right to speak in general meeting, right? Can proxy express or can proxy raise questions through writing? He has no right to speak, right? Can he express his opinion through writing? Through writing? So this is another interpretation. Now, plain reading of the words used in the statute, it is giving two or more meanings. Two or more meanings. One is sensible and the other one is violating the provisions of the act. Violating, it is opposite to the public policy. In that case, you have to ignore the second meaning and you have to consider the first meaning. Rule of reasonable construction. So here, proxy has no right to speak means he has no right to express his willingness or opinion through writing also. And next one, proxy has no right to speak means he has no right to participate in decisions. He has no right to participate in decision making. So he can ask for a water bottle, he can ask for a time. Okay, these all things are allowed. He has no right to speak means he has no right to participate in decisions. He can't raise any question, he can't answer to any question. That's it. If voting is conducted through poll, then he will be given a ballot paper. He can cast vote through poll only. That privilege is there. But other than that, he had no right to question the management. He had no right to answer to the management. So that is what the meaning of this statement. See, generally the words or phrases of the statute are to be given their ordinary meaning. It is only when the words of enactment are capable of two constructions that there is a scope for interpretation or construction. Then that interpretation which furthers the object can be preferred to that which is likely to defeat or impair the policy. Defeat or impair the policy object. So one interpretation, it is impairing the policy. One interpretation, it is supporting the policy. In that case, follow that interpretation which is supporting the policy. Understood. And Latin maxim, you can see here, statutes should be understood, should be construed grammatically. So the principle contained in the Latin maxim, interpretatio fiendo est utrus magis valet quam peret. When grammatical interpretation leads to certain absurdity, absurdity means inconvenience, ambiguity, not clear. Understood? Vagueness, absurdity, it is permissible to depart therefrom and to interpret the provision of the statute in a manner so as to avoid that absurdity. So to avoid that inconvenience, what can be done? You can do it. This departure from grammatical construction is permissible only to the extent it avoids such absurdity. So until we remove inconvenience, ambiguity, yes, we can go beyond the words or expressions used in the statute. This is also called golden rule of interpretation. Reasonable construction completed. So reasonable construction, when reasonable construction is applicable, when the words used, when the language used in the statute is not clear, ambiguous, capable of giving two or more interpretation, then adopt the interpretation which is reasonable. So in that case, we cannot apply rule of literal construction, we can apply rule of reasonable construction. Next one, rule of harmonious construction. Name itself is telling harmony. Harmony means peace. The exact opposite of harmony is conflict. Opposite of harmony is conflict. When two or more provisions within the same statute, within the same section, or between two statutes are conflicting in nature. See, when this rule is applicable, when this rule is applicable, take two provisions. These two provisions may be within the statute, within the act, within the section, within the statute, or between two or more statutes. And these two provisions are conflicting each other. There is a conflict between these two provisions. In that case, we cannot give superiority to one provision and ignoring the other provision. We should not do like that. So randomly, sir, consider first provision, ignore second provision, or consider second provision, ignore first provision. We should not do like that. we should give effect of all the provisions. We should consider all the provisions as a single provision, and accordingly you have to make interpretation. That is what the rule of harmonious construction is telling. Best example, deadline of AGM, time limit of AGM. Time limit of AGM, if you read section 96, what is the time limit of subsequent AGM? Subsequent AGM shall be conducted within 6 months from closure of financial year. 6 months from the closure of financial year. The time gap between two AGMs shall not exceed 15 months. 15 months. And every year one AGM. Every year one AGM. So this is what section 96 is telling. Now in the year 2023, AGM was conducted on 30th September 2023. Now we need to calculate due date for 2024. First limit is within 6 months from the closure of financial year. Within 6 months from the closure of financial year. So 31st March 24 plus 6 months. So 30th September 2024. Second limit, time gap between two AGMs shall not exceed 15 months. So previous AGM is 30th September 2023, add 15 months. In that case, 31st December 2024 is the time limit. Next, third time limit. Every year one AGM. So 2024 ends by 31st December 2024. Now we are having three different dates. Okay, two dates are same. Okay, fine. We are having two different dates. Now by which date or by what time limit we have to conduct AGM? Now we should not ignore one time limit. We should consider all the time limits and we should come to the conclusion. So in this case, if you are able to conduct AGM by 30th September 2024, in that case you are said to be you have satisfied all these three conditions. You have not violated the provisions of the law. Are you getting my point, students? If a company able to conduct AGM by 30th September 2024, then all these three provisions are said to be satisfied. Here we are not ignoring a particular provision, or here we are not giving importance to a particular provision. So whenever conflict arises between two or more provisions, these two or more provisions may be within the same section, or between two sections of same statute, or between two statutes, then you have to consider all these provisions as a single provision, and you need to apply the single provision to the situation, and accordingly you should understand the provision. Another example, this time conflicting provisions between two statutes. State Bank of India is a banking company, yes or no? First of all, it's a company. Next, it's a banking company. Now Companies Act is applicable to SBI. Banking Regulation Act is also applicable to SBI. First, Companies Act is applicable since it is a company. Next, Banking Regulation Act is applicable since it is doing banking business. It is carrying banking operations. Now, as long as consistency is there between these two statutes, follow these two statutes. In case of inconsistency, and you are doing you are carrying banking operations, so follow Banking Regulation Act. Best example, financial statements. Generally, company has to present financial statements in Schedule 3. And for banks, separate set of financial statements are there, separate schedules are there. Now SBI, which one should follow? Sir, Schedule 3, Companies Act, or Banking Regulation Act? Follow Banking Regulation Act. Understood? So here we are not making a one provision nullity and we are not applying the other provision. Here we are giving equal importance to all the provisions, and based on the facts we are applying one provision. Are you getting my point, students? Randomly we are not ignoring, randomly we are not applying the provision. Here we are making all the provisions as a single provision, and we are applying that single provision to the situation. And you all know, if there is a conflict between special rule and general rule, special rule always overrides general rule. Just now I told you, Banking Regulation Act, specific rule. Companies Act, general rules. A specific rule always overrides general rule. And next one, see, you can remove this conflict. You can remove the conflicting element between these two provisions by interpreting these words, by using these words. So you can have these three words, subject to, notwithstanding, without prejudice to. Subject to, notwithstanding, without prejudice to. Suppose two provisions are there, provision 1, provision 2. In provision 1, the word is like this, subject to second provision. And first provision is telling like this, subject to second provision. So matter continues. In this case, the first provision is giving importance to second provision. The second provision overrides first provision. Subject to 2, and then one first provision is continuing. In that case, we are giving more and more importance to provision 2. Are you getting my point? Subject to what reference you are giving after subject to, that will be given more and more weightage, and that will have overriding effect. So provision 2 overrides provision 1. Understood? Next one, notwithstanding. Same example, 1, 2. The word notwithstanding was used in provision 1. So notwithstanding anything contained in provision 2, follow provision 1. In that case, provision 1 overrides provision 2. So provision 1 is getting more and more importance compared to provision 2. So if you find notwithstanding word in provision 1, that means all other provisions are not having that much importance. So first provision is more important, like that. Notwithstanding anything contained in provision 2, that means no need to follow provision 2. In case of conflict between 1 and 2, no need to apply 2, you can apply 1. Subject to, it is giving priority to later provision. Notwithstanding, it is giving priority to former provision or earlier provision. Next one, without prejudice to. Without prejudice to, that means without affecting other provisions. Without prejudice to means without affecting other provisions. Suppose provision 1 is there, provision 2 is there, and in provision 1 the word without prejudice is used. Without prejudice is used. That means both 2 and 1 are equally applicable. Since provision 1 is applicable, it doesn't mean provision 2 is not applicable. Both provisions are equally important here. So without affecting provision 2, provision 1 follows means provision 2, if it is applicable, then we need to apply provision 2 and we need to apply provision 1. So here both are equally important. Subject to, if word subject to is there, then later provision overrides this provision. If word notwithstanding is there, then this provision overrides other provisions. Without prejudice to means without giving effect to other provisions. That means, other provisions are not, other provisions still continue. There is no restriction on other provisions. Other provisions will still continue, but this provision is also applicable. Understood? So in this manner, we can resolve conflicts between 2 or more provisions which are conflicting in nature. The word harmony, we use the word harmony only when there is a conflict. So this conflict is, between 2 provisions. These 2 provisions may be within same section, or between 2 sections of same act, or between 2 different statutes. Understood? Now using the word subject to, notwithstanding, yes, without prejudice to, we can make a meaningful interpretation. We can make best interpretation. Are you all getting my point, students? And the words used in the statute plain, clear, unambiguous, then apply rule of literal construction. So not plain, sir. Ambiguity is there, sir. Apply reasonable construction. Sir, conflict is there between 2 provisions, sir. There is a conflict between 2 provisions, sir. Then we should bring harmony between these 2 provisions. So apply harmonious construction. So 3 rules completed. Next rule, hidden rule or mischief rule. Hidden's rule or mischief rule. See, first of all, there is one mischief, one defect. There is one defect. And later Parliament introduced law to suppress this defect. Parliament introduced law to provide a remedy to this defect. So what law introduced by the Parliament? What is the reason why Parliament introduced this law? And what is the mischief? What is the remedy provided to suppress that mischief? If you are able to answer these questions, the judgment will be clear. Or simply, if you are able to answer these questions, you will get correct interpretation. You will get intention of the legislature. So let me give you one example. Sima, voting. Right now elections going on, right? Election schedule was already announced. One statute, the word used is like this: personation. If anyone cast vote of other persons, it is a punishable offense. The provision is like this. So forged voting gets punishment. What is the objective of this provision? Forged voting, the person whoever commits forged voting will get punishment. So if a person casts vote of another person, then this first person will get punishment. Okay. Now what this person did, he went to he went to polling booth, he casted his vote, and he also casted a vote of a deceased person. That person is not in existence. already died. Now, election commission, however, found this person. Police caught this person, and police just took that person to the court. So in court, this fellow is telling, sir, if I cast vote of another person, it is a punishable offense. Definitely, I should be punished. But here I casted vote of a deceased person, sir. He is not in existence, sir. So how will you punish me? How will you punish me? Now, what judge can do? Judge can apply this rule. First of all, before that law, what is the mischief? What is the mischief? So if we allow someone to cast vote of others, then the intention of conducting elections getting wasted. So what is the intention of the elections? Person has to choose his leader. One person will be given one vote. That person should not cast some other's vote. Yes or no? Yes or no? And what is the mischief happened right now? So he casted vote of a deceased person. Whether the current law is providing remedy to that mischief or not. If it is providing, okay, apply that remedy. If it is not providing, then find out the intention of the legislature. What is the intention of the legislature? So casting the vote of alive persons only punishable offense, or casting the vote of deceased person is also punishable offense. So based on that, come to the conclusion and give the judgment. So this process is nothing but, here we are applying the rule in Hedden's case, mischief rule. Mischief rule. One more example I can give you. That example is, there is a act called State Licensing Act 1872. According to section 12 of state license, according to section 12 of Licensing Act 1872, any person driving the carriage after consuming the alcohol, immediately after consuming the alcohol, if he drive carriage on national highways, he will get punishment. Now one person is there, he is just driving his bike, not carriage, not transport, not he is not transporting passengers, he is not transporting any goods, he's just driving his bike, two-wheeler bike. Now before he started driving, before he started towards national highway, he consumed alcohol, so drunk and drive. So police caught him, and police brought him to the judge. Now in front of judge, he is making a statement, sir, the provision in the law is person who drinks and who drives carriage on national highways should get punishment. I'm not driving any carriage, sir. I'm just driving my bike. So it's not a punishable offense. It's not a punishable offense. Now, judge in this case, what he can do? He can apply mischief rule. See, here the argument is the party making the argument, it is also a relevant argument. And the provision is also relevant, but both are not coming together. There is one mischief. There is a defect in the law. Law is not giving 100% solution, 100% remedy. In that case, first go through the history. What was the law before making of the act? And what was the defect, mischief, hardship caused by the earlier laws? And how does the act of the parliament seek to resolve or cure the mischief or deficiency? And what are the true reasons of the remedy? So what is the intention of the legislature enacting this drunk and drive provision in the act? So any person after consuming the alcohol, he may not have conscious mind. And if he drive negligently, he may cause an accident. Either he may be killed or the opposite party gets killed. So here word carriage is irrelevant. Vehicle is sufficient. Even the word vehicle is not used in the statute. We can go beyond the expressions used in the statute, and we can include that bike in the carriage definition. Accordingly, that person will be punished. Understood? Then courts shall make such construction. Courts shall make such construction as will suppress the mischief and advance the remedy, and suppress the subtle inventions and evasions for the continuance of mischief. So when rule of hidden rule or mischief rule is applicable, words used in the statute not clear, not complete, and there are some defects, drafting defects. I call them as drafting defects. They are not intentional defects. The lawmaker, while writing the law, he will use his experience, he will try to cover all the situations. But sometimes it is not possible to him to cover all the situations. Some may be ignored. Unintentional drafting errors, I can say. Unintentional drafting errors they are. Now these drafting errors can be eliminated through this rule. What rule? Hidden rule, mischief rule. Suppressing the mischief, providing the remedy, advancing the remedy. Is this point clear, everyone? Next one, rule of beneficial construction. Rule of beneficial construction. Provision, if we make interpretation, it is giving two meanings. One meaning, it is beneficial to the underprivileged people. One interpretation, it is beneficial to the underprivileged people. Then adopt that interpretation. That's what rule of beneficial construction. Very simple, ma. Rule of beneficial construction. Apply the interpretation which is beneficial to the underprivileged people. Next one, rule of exceptional construction. Exceptional construction, that means this is an exception to the general rule. So general rule, it is 1 point. Exception is a case where the above point is not applicable. The exception means what? In the below mentioned cases, above general rule is not applicable. So what is the rule of exceptional construction? Let me discuss with you. So here in this rule, total we had two branches. One is and or, may, shall. Generally, and is a conjunctive word. Normally, and is a conjunctive word. Or is a disjunctive word. Or is disjunctive word. So whenever you are reading the provision and you find the word and, suppose condition 1 and condition 2, party 1 and party 2, that means both the conditions should be satisfied. Both the parties should satisfy those conditions. That is the meaning of the and. Or means either of the conditions or either of the parties should satisfy those conditions. Are you getting my point, students? Now the point is, you are reading the Companies Act. In that act, suppose provision is like this: promoter, manager and director, whoever commits default will be punished. Whoever commits default will be punished. Now the point is, promoter, he didn't commit any default. Manager committed default. Director, he didn't commit any default. Only one person committed default. Who? Manager. But reading the provision as a whole, what it is telling, even in case of one defect, promoter, manager and director, all these parties gets punishment. That's what the meaning is. Promoter, manager and director. Manager and director. So even director didn't commit any mistake, he should also be punished. Like that, it is giving meaning. But the point is, the actual meaning, the reasonable meaning is not that. You should not apply that interpretation. You have to consider here and as or. Even the word and is used, exceptional cases, you should ignore the word and you should consider it as a or. And similarly, other points, suppose in section 42, private placement, promoter, manager, director, promoter or manager or director, all are liable to punishment. All are liable to punishment. The wording is used like this. So all are liable for punishment. If the word is like this, then even the word or is used here, you should understand or as end only. You have to interpret or as end. So some cases you have to take interpretation of or in the place of and in the place of or. That is the rule of exceptional construction. And second case, may, shall. May, shall. Generally, may is optional. May refers to optional, discretionary. Shall refers to mandatory, compulsory. But some cases, may will be considered as shall will be considered as may. Best example I told you right now. A company may be formed for any lawful purpose. There you have to consider may as shall. You have to understand may as shall. Company shall be formed for any lawful purpose. Next one, shall. If the word shall is accompanied with right, suppose C and AG shall within 60 days of government audit has right to supplement the audit. In that case, here the word shall means shall will be considered as may. C and AG wants to conduct supplementary audit, he can call for supplementary audit. It's not compulsory. But if he wants to conduct supplementary audit, he should call for a supplementary audit within 60 days. So there shall should be considered with respect to 60 days. Not compulsory, not compulsorily C and AG should follow the duty. Are you getting my point? C&AG shall within 60 days of government audit has right to supplement the audit means here the word shall should be understood. Shall should be understood with respect to time period. If you want to call for supplement audit, it should be done within 60 days. After 60 days, he had no right to call for supplement audit. Like that, you have to take interpretation. But the point is here shall will be regarded as may. Understood? Generally, may optional, direct, discretionary, shall mandatory, compulsory. But some situations may will be treated as shall will be treated as may. Next one. Discuss the rule of egisdem generis. Egisdem generis. See, ma'am, in the entire question, in the entire matter, just ignore the case clause, ignore the examples. Remaining points you have to remember and you have to present in the examination. Is it clear? You can ignore case studies, ma'am. You can ignore case studies. No problem. Maybe 1 or 2 marks may be deducted, but no need to remember case studies. No need to write case studies in the examination. Those who want to secure complete marks, 100% marks, you remember case studies, but my suggestion, not advisable. Next one, rule of egisdem generis. Where specific words pertaining to a class or category or genus are followed by general words, the general words shall be considered as limited to the things of the same kind as those specified. So in any provision, in any statement, you find the combination like this: specific words followed by general words. In that case, general words always derive its color from specific words. General words always derive its color from specific words. Suppose our Shrestha group of institutes, educational institutes, provides the coaching with respect to CA, CMA, BCom, and other courses. Now, if you observe this statement, we are providing coaching with respect to CA, CMA, BCom, and other courses. So you can see here 3 specific words: CA, CMA, BCom, and 1 general word. General word is other courses, right? Now here others refers to all commerce courses. That's it. Here you can't consider BTech, MTech, AI, EEE. Are you getting my point? So general words always derive its color from specific words. And the same point I discussed with you in doctrine of ultravirus, Ashbury Railway Carriage Company Limited versus Ritchie. I gave a detailed explanation in that case study. And the first time I told you rule of egisdem generis is made applicable in that case. I don't know how many of you remember that point. Okay, but the point is, in a statement, if you find specific words and general words always derive its color from specific word. Understood? Another example: dog, cat, and other animals. Now, here other animals means you can't consider lion, tiger, leopard, cheetah, elephant. Here other animals means all domestic animals, in fact pet animals. Understood? So general words always derive color from specific words. But this rule is not applicable in few cases where, if specific words list is exhaustive, if specific words complete list of specific words is given completely, if the list of specific words is given completely, and no need to have interpretation of general words, in that case you can't apply this rule. And another case, first you find general words, and then specific words came next. So what I told you, first specific words associated, next general words combined with general words. In that case, rule of egisdem generis is applicable. Suppose first general words came, next specific words came. Now can I apply rule of egisdem generis? No, not at all. That's what, if the preceding term is general, this rule is not applicable. If the particular words exhaust the whole genus, we give complete list. Suppose Shrestha provides education, coaching to CA, CMA, MCom, BCom, CS, CPA, then CSA, DSA, except, we give complete list. In that case also, rule of egisdem generis is not applicable. Where the specific objects enumerated are essentially diverse in character. Suppose the list is like this: dog, bird, and other animals, So here the specific words are diverse in character. Dog is different and bird is different. Yes or no? Array, it looks like a domestic animal. Suppose you take eagle. It is not, it's not a domestic in nature. Yes or no? Getting my point. So if the list is not having a particular breed, and if the list is diverse in character, then also you can't apply this rule. Why? Specific words are not representing a particular thing or particular point. They're diversified in nature. In that case, what meaning you can give to general word? No solution. So rule of legislam generis is not applicable. Where there is an express intention of the legislature that general terms shall not be read, legislam generis the specific terms. In the statute itself, lawmaker clearly told, don't apply rule of legislam generis, then don't apply rule of legislam generis. Understood? So rule of legislam generis, it is applicable when there is a combination of specific words and general words. General words always derive color from specific words, and this rule is not applicable when general word comes first and specific word comes next. Next one, if the specific words are complete list has been provided. Next one, specific words are diverse in character, or in the statute they told that don't apply legislam generis. In these circumstances, rule of legislam generis is not applicable. Clear? Next one, discuss doctrine of nociter associis. Previous rule I told you one point. The combination is like this: general word and specific word. Rule of legislam generis is not applicable. However, doctrine of nociter associis is applicable. Example: plant and machinery, plant and machinery, plant and tree, plant and tree. So here the word plant is general word, machinery, trees are specific words. So here you have to understand the meaning of plant while reading the associated word. So plant and machinery, plant refers to machine. Plant and tree, plant refers to tree. Understood? Everyone. See, nociter associis means when two or more words that are susceptible of analogous meaning are coupled together, they are understood to be used in the cognate sense. They take as it were their color from each other, and that is the meaning of more general word being restricted to a sense analogous to that of less general. So plant and machinery. So plant, machinery both have same meanings. Plant tree will have both meanings, same meanings. You had one more example. Fresh orange juice is not a fruit juice. Fresh orange juice is not a fruit juice. First, you need to read the description. Suppose the description of the provision. The point is like this: manufactured beverages, including fruit juices, bottled waters, and syrups. So fruit juices here, it had two meanings. One is fresh juice, you'll find in juice shops. The second one is canned juice. That means maja, slice, cool drinks, maja, slice, pulpy orange, Minute Maid pulpy orange. So here fruit juices had two meanings. So which meaning I should consider? Read the associated word: bottled waters, bottled syrups. So here fruit juice means not a fresh orange juice. Fruit juice means it's a cool drink, soft drink. Accordingly, tax is applicable. Understood? So fresh orange juice is not a fruit juice. Heading is like that. But the meaning is, just read the associated words and accordingly derive the relevant or reasonable meaning. Next one, doctrine of contemporanea expositio. Take Indian Contract Act for example. Yes, it was approved in the year 1872. Right now we are in the 21st century. It came in 19th century, we are in 21st century. Almost a 150 years gap is there, yes or no? Now that law was drafted at that point of time, considering the circumstances prevailing at that point of time. So whatever circumstances are there in 19th century, based on those circumstances, yes, law was drafted. Now 19th century circumstances, 21st century circumstances, do you think both are one and the same? No. Environment is dynamic in nature. It's keep on changing, yes or no? So at olden days, contract happens manually. Right now, contracts are happening online. Amazon, yes, you purchased one product, you ordered one product. There is just a contract. This contract happened online. Amazon is an intermediary between seller and buyer. So online contracts, e-contracts. So e-contracts were not defined in Indian Contract Act. Now you can't say that, according to the provisions of Indian Contract Act, all online contracts are null and void. You can't declare like that. At that point of time, e-contracts are not prevailing. Right now, e-contracts are prevailing. Okay, now applying the bare provisions, applying the bare act to the current situation and telling that current situation is void is not correct. So for that, what we should do first, go through the timeline. So when that act was enacted, go through that timeline, go through the circumstances, go through the practices, customs. If the same practices are prevailing right now, you can apply the same provision. If the practices were changed, then you have to change the interpretation. You have to consider the second interpretation. Accordingly, you need to apply in the situation. That's what the doctrine of contemporaneous exposition. So custom is the best interpretator. Custom is the best interpretator of the law. Custom means practices. Custom means practices. So with these rules completed, my primary rules, secondary rules completed. The next one, internal aids, external aids. It's better I use the word tools. It's better if I use word tools. Internal tools, external tools. You'll find internal tools within the statute. External tools outside the statute. Internal aids, long title. Long title. So it's nothing but short title plus description. It's short title plus description. Negotiable Instruments Act, short title. Negotiable instruments, an act to consolidate and amend the laws relating to the promissory notes, bill of exchange, checks, long title. Next, preamble. Preamble defines the scope and object, purpose of the act. Heading. Companies Act, total we are having 29 chapters. Each and every chapter will have a name, incorporation of the company. Heading. Prospectus and allotment of securities. Heading. Next, marginal notes. These marginal notes you will find the left side of the acts, left side of the pages of the statute. Next, definitional sections. Section 2, illustrations you will find after the provision. Proviso you will find after general provision. Explanation, explaining the meaning of the words. Schedules. In Companies Act, we are having 7 schedules. Schedule 1, 2, 3, 1 MOA, AOA, 2 depreciation, 3 financial statements. Next one, read the statute as a whole. So all these are internal tools. Now how we can take assistance of internal tools in understanding this statute? I'll tell you. The long title. Short title is nothing but name of the act. Long title, it describes the enactment. So reading the long title, we can confine the scope of the act. Okay, this act is applicable to this particular area. Negotiable instruments, it is applicable to only negotiable instruments. Next one, preamble. Preamble already covered in General Clauses Act. So preamble express the scope, object and purpose of the act. Why legislature introduced this law. If you look at preamble of Companies Act, an act to amend and consolidate all the laws relating to the companies. So the purpose of Companies Act is amending and consolidating all the laws relating to the companies. When you are reading a provision and the provision is not clear, some ambiguity is there, to remove that ambiguity, you can refer to preamble. But whenever there is an inconsistency between preamble and provision, ignore preamble, follow the provision. If provision is not clear, apply preamble rule. Take preamble assistance, take the help of preamble. Understood? Next one, if the provision and preamble both are in conflicting nature, then ignore preamble, follow the provision. Provision overrides preamble. That's what here. Preamble does not have, just wait. Preamble does not have overriding effect, the plain provision of the act. So plain provision always overrides preamble. Next, heading and the title of the chapter. Just now I told you, right? Chapter 2 of Companies Act, incorporation of companies and matters incidental thereto. Chapter 6, registration of charges. So in the registration of charges, the word chapter was used. Any violation of this chapter, the person who commits default will be punished. Now here chapter refers to registration of charges. Violation of provisions of the charges chapter, you'll get this punishment. Understood? If the provision is not giving a correct result, if provision is not giving correct meaning, then go through heading and title of the chapter. Is it clear? Next one, marginal notes. So left side or right side, you will see the summary of the section. You can see the summary of the section. If you didn't understand this section, you can go through the marginal notes. However, marginal notes will not have overriding effect. If there is any inconsistency between provision and marginal notes, provision is applicable. Provision will have overriding effect. Understood? In some courts, it was decided that marginal notes you can't consider it as an aid to construction. Next one, definitional sections. So the main object of having definition clause is to avoid the frequent repetition of the words or expressions used in the subject matter. Understood? So beginning itself, the words which need special attention are the words which are repetitive in nature. At the beginning of the act itself, we will define those words under definition clause. So having definitions, no need to define the same word wherever it comes. Thereby the length of the law gets reduced. Is it clear? And these definitions are of two types. Definitions using the word means, exhaustive. Definitions using the word includes, inclusive. Exhaustive definitions exactly define the term. Nothing can be added, nothing can be subtracted. Inclusive definitions, in future we can add something to it. For the time being, the terms covered, the terms given under that definition are included, and the provisions are equally applicable to all the terms used in that definition. The definitions two types, means, includes. And next one, third type of definition is that is ambiguous definitions, not clear, unclear. Understood? So exhaustive definitions comes under restrictive category. Exhaustive, that means definitions having the word means. Next one, definitions having the word includes, they comes under extensive category. Means, restrictive, includes, extensive. Next one, ambiguous. As I told you, these definitions should not be read in isolation. These definitions can be understood only when you interpret statute, when you read statute as a whole. Then only you will get a clarity about those definitions. Next, restrictive, extensive, I told you right now, means, restrictive, exhaustive, includes, extensive, means and includes, exhaustive. Ambiguous definitions, sometimes we may find the definition section may itself be ambiguous, so it may have to be interpreted in the light of other provisions of the act and having regard to the ordinary meaning of the word defined. Such type of definition is not to be read in isolation. If you read that point in isolation, you won't get any clarity, since there is some ambiguity. So you should read statute as a whole, or you should read relevant applicable provisions. Then only you can derive the correct meaning of ambiguous definitions. Next one, definition subject to contrary text. When a word is defined to bear a number of inclusive meanings, the sense in which the word is used in a particular provision must be ascertained from the context of the scheme of the act. If the word is having two or more meanings, first identify the context. In what context the word is getting used? Apply the context, accordingly derive the meaning of the word. Next, illustrations. In your Indian Contract Act, if you observe, after completion of provision, you'll immediately find illustrations. Illustrations are meant for better understanding of the provisions. Understood? Illustration will not confine the scope of the section, but illustration helps you to understand the provision. That's what I have told you. Illustrations cannot have effect of modifying the language of section and can neither curtail nor expand the ambit of the section. Illustration will never define or confine the scope of the section. For understanding of section, one can read illustrations. That means in case of inconsistency between section and illustrations, section will have overriding effect. Next, to proviso. Proviso can be used in two ways. One is, proviso, it's like an exception. But exception, if I use word exception, it is an exception to entire section. If I use word exception, that means this is an exception to entire provision of this section. Proviso means the relevant to provision. The relevant to provision is not applicable in the below cases. So you can identify the word proviso by reading the words provided that. provided that. Understood? That means, the general rule is applicable if the following conditions are satisfied, or the general rule is not applicable in the following cases. So we can use proviso in two ways. One is as an exceptional clause. The second one is qualifying clause. Qualifying clause. So the above general rule you can apply only if all the below mentioned conditions are satisfied. Next one, explanation. Similar to the definition, but definitions are repetitive in nature. Explanation is not repetitive in nature. Suppose, if you read the definition of associate company, there the word significant influence was used. So what is significant influence? For that, explanation was given under the relevant clause. Under the relevant clause, the explanation, it provides meaning to the word or provision. Next is schedules. Just now I told you schedule 1, schedule 2, schedule 3 in case of Companies Act. So you have to consider schedules while interpreting Companies Act. But remember the point, whenever there is in conflict, whenever there is a conflict between provision, section and schedule, provision will prevail. Provision is having overriding effect over schedules. Read the statute as a whole. Suppose if you are reading a single section and you are not getting a clarity, you are not getting a real meaning, you are not getting a true meaning. In that case, read the statute as a whole. You will get real meaning or correct meaning. Next, external aids. These are not internal. These are outside the statute. So what are those points? Historical setting. In mischief rule, I used the word historical setting. What is the law before new law, and what is the parliament? What are the arguments made in the parliament while enacting this law? So for every law, if you observe, directly a bill will not be read in the parliament. First, parliament or cabinet will call for a expert committee, and that expert committee, after many discussions, they will draft the proposal, and that proposal will be read by a member in the house of the parliament. Understood? Now go through the expert committee reports, go through the expert committee arguments, then you will get better understanding. Historical setting. Next one, consolidating statutes and previous law. Consolidating statutes and previous law. Companies Act is there. Companies Act, it is an act to amend and consolidate laws relating to the previous law. It is an act to amend and consolidate laws relating to the companies. Now, present Companies Act 2013, if it is not providing a solution to a particular situation, then you can go through the previous laws, or all previous laws already consolidated and given under new Companies Act. So no need to consider previous laws like that. Next one, usage. I told you already, custom is the best. Customs. One second. So customs is the best interpreter of the law. So whatever the prevailing practices, just go through the practices, and from practices only one will draft the law. Yes or no? If that provision is not giving correct meaning, then go through the prevailing practices. Next one, earlier and later acts and analogous acts. Analogous acts means two or more acts covering the same subject. Suppose if you take General Clauses Act, 1868 is there, 1887 is there, 1897. Later, previous two laws got repealed and new law 1897 came into the picture. And then next one, if you take Indian Penal Code and Code of Criminal Procedure. Indian Penal Code, Code of Criminal Procedure. One came in 19th century, 1860s. The other came in 20th century, 1970s. Now the point, a person committed crime. Now which act I should apply? Earlier one or later one? So definitely you can apply later act, latest act. Next one, you can take Indian Penal Code and Information Technology Act. Indian Penal Code is covering crimes. Information Technology Act is covering cyber crimes. One crime happened through online. So a crime happened online. So someone hacked our server and someone looted our money. So in this case, which act I should apply, sir? Indian Penal Code or Information Technology Act? Latest act. Follow the latest act. Next one, dictionary definitions. If you are unable to derive the meaning of the word, then go through the definitions given in the statute. If there is no definition, then go through the definition given in the General Clauses Act. If there is no definition in the General Clauses Act with respect to this word, Then go through dictionary definitions. Dictionary definitions is also external source. Next one, use of foreign decisions. Use of foreign decisions. A case came forward, and this case never happened in India. And our Indian laws are not providing solutions to, Indian laws are not in a position to provide solution to this particular case. In that case, you can refer the matter to foreign decisions. If the same case happened in foreign countries, what kind of judgment was given by House of Lords, or what kind of judgment was given by courts in that country, you can give reference, you can use them to solve the present cases. All these are external aids. My historical setting, consolidating statutes and previous law, usage, earlier and later acts, analogous acts, dictionary definitions, use of foreign decisions. Just give one time reading, you will understand all these points. Next one, last question can be tested for 4 to 5 marks. The rules of interpretation, construction of deeds and documents. So far I discussed with you rules of interpretation, rules of construction with respect to a statute. In the place of statute, just use the word deeds, replace the word statute with words deeds and documents. Same point. See, a deed must be read as a whole in order to ascertain the true meaning of its several clauses, and the words of each clause should be interpreted as to bring them in harmony with other provisions. All these rules already discussed with you, right? Next one, it has to be the golden rule of construction is to ascertain the intention of the parties to the instrument after considering all the words in their ordinary natural sense. First, apply ordinary or natural sense to the words used in the instrument or deed. If they're not giving the desired results, if the interpretation you are if the interpretation you are applying or the interpretation is not giving desired result, then ascertain the intention of the parties. Are in statute, what I told you, ascertain the real meaning of the statute. If not possible, ascertain the intention of the legislature in enacting the act. Yes or no? Here, same point. Obtain the real meaning of the words used in the instrument. If not possible, ascertain the intention of the parties to the instrument. Next, it has to be borne in the mind that very many words are used in more than one sense, and that sense differs in different circumstances. So in relevant circumstances, use the correct sense of the words. Now simply apply reasonable construction. The next one, it may also happen that there is a conflict between two or more clauses of the same document. An effort must be made to resolve the conflict by interpreting the clauses so as all the clauses are given effect to harmonious construction. If one part of the document is conflict with another part, an attempt should always be made to read the two parts of the document harmoniously, if possible. If that is not possible, then earlier part will prevail over the later one, which should therefore be disregarded. So earlier part prevails, later part. With this, interpretation of statutes completed.